the Taiwanese index. So a good start across the Asia Pacific, and that is also courtesy a very strong handover that came from Wall Street on Friday night. And you can pull up the GIFT Nifty as well, and that will show you that the index is also poised for a gap up start, an implied open of 155 points, which suggests that the Nifty might just about start close to the mark of 25,000, which it missed in the earlier days of the last days of June, and is now on the cusp of 25,000 again. But as we mentioned, the handover from the US markets was pretty strong, and the indices there jumped on Friday as investors weighed fresh US inflation data. The Dow Jones rallied over 650 points. The S&P 500 gained over 1%, while the tech-heavy Nasdaq also advanced by a similar quantum. Now, over the week, the S&P 500 ended 0.8% in the negative, while the Nasdaq lost over 2%. Meanwhile, the Dow Jones was an outperformer, adding around 0.8% and notched up its fourth consecutive positive week for the first time since the month of May. Now, the PCE price index rose 0.1% in June and was up 2.5% from a year ago, which is in line with the Dow Jones estimates. The positive inflation news has also lifted investors' hopes for more rate cuts this year. CNBC's Rick Santelli joins us with the details.
Personal income and spending in the PCE inflation numbers off for June. Headline coming in light on income, expecting up 0.4%. Cut that in half, up 0.2. Up 0.2 is actually the lightest of the year. You have to go all the way back to October of last year to find a smaller income number change. On the spending side, pretty much nailed by economists and analysts, expecting up 0.3%, comes in up 0.3%. And I do want to point out that revisions are trickling in. Income had a strong last month, up 0.5%. It's now reduced by 0.1 to up 0.4. On the spending side, double. So we end up with up 0.3. Last month's up 0.2 moves to up 0.4. So spending doing much better here, and we have a consumption economy. But accounting for inflation, real spending comes in a little light at up 0.2. Last month upgraded from 0.3 to 0.4. Now let's look at the index. PCE month over month up 0.1 as expected, and that's a bit higher than the rear view mirror, which was 0. And if you have to go back and see when the last time we were a little bit higher than 0, that would be April, just a couple months ago, when it was up 0.3%. Now, if we look at the year-over-year PCE price index, up 2.5 exactly as expected, 0.1 lower than the rear view mirror, which was up 2.6. 2.5 equals January and February of this year. To find a lower number, though, you have to go into the Wayback Machine to February of 21, when it was 1.9. Now, let's look at the core numbers. Start out with month over month. Expecting up 0.2%, comes in as expected. That's 0.1 warmer than our last look. Our last look was up 0.1. To find a number greater than 0.2, you have to go back a couple months to March of this year.
Rick Santelli there with the details. Now, the new PCE data puts the rate cuts into cement, says Mark Zandi, who is the chief economist at Moody's Analytics. He also said that there is 100% probability for a rate cut from the Federal Reserve in September. Listen in.
The market's up because they think the Fed's going to cut rates. I think there's as you pointed out, 100% probability of a rate cut in September, and today's data just, puts that into cement. So I think investors are cheered by the reality that here we are, finally, the Fed's going to start cutting interest rates. If I were king for the day, I would have done it a lot earlier, but, it's okay. September's going to be just fine. The core, that's kind of right down the strike zone. And I would point out that harmonized inflation, harmonized consumer expenditure deflator, which excludes the implicit cost of home ownership, which I think the Fed should be doing when trying to gauge, inflation and what it means for monetary policy, has been below 2%, the Fed's target, for more than a year on a year-over-year basis. So in my view, we're there. I think they've achieved their objectives.
And that's all we have on the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the FNO setup as well. First up, Vivek joins in to get all the market cues we need to watch out for today. Vivek, good morning. It's a positive handover from Wall Street. The GIFT Nifty also suggesting a gap up. What's the setup looking like?
Good morning, and very good handover from Wall Street. Remember, Wall Street actually had a very volatile week last week, but Friday they ended with strong gains, like you mentioned. Along with that, oil prices too, last week saw quite a bit of volatility, but they ended largely lower. Today morning, there seems to be a bit of a bounce back. Now, talking about the Indian markets and the strength here is unparalleled, even within the emerging market peers. Friday was another day where you saw record highs. The Nifty continued to end with gains for 8 consecutive weeks, and that going quite far back when we've seen something like this. Along with that, the broader end of the market gained in tandem with the benchmark indices. Advanced decline ratio very, very strong. Now, key to watch, going forward this particular week, IPO, a lot of IPOs also on the anvil. Can the record rally sustain, given the fact that it's a very earnings-heavy week? Along with that, watch out for the entire cement pack as well today. The Ultratech deal is something that the street will watch out for. Results reaction, quite a lot of results post market hours on Friday. So ICICI Bank, Dr. Reddy, NTPC, Power Grid, Indigo, all of them will react to results today. Key results today: Bharat Electronics, Colgate Palmolive, HPCL and Kalpataru projects. Also, given the fact that Asian markets are quite strong and GIFT Nifty, like you indicated, gap up opening. So watch out for a positive start at least. It will be important to see whether that can sustain.
Important to see whether that will sustain. Thanks a lot, Vivek, for that. Now over to Vamakshi, who would list up the stocks that you need to watch out for. Vamakshi, plenty of earnings reactions today. Good morning.
Well, absolutely, Hormaz, but let me first start off with Ultratech Cement. The board has approved acquisition of India Cements. They will be acquiring nearly 32.72% stake from the promoters and its associates at almost 390 rupees per share, which would put the deal at almost 3,954 crores. ICICI Bank reported its numbers. It was a mixed set for the company. Advances and deposits grew somewhere around 15%. NII was slightly lower versus estimates, while net profit came in above expectations. NIMs have seen a slight bit of a moderation on a sequential basis to 4.36%. Dr. Reddy's reported a growth of almost 14% in its revenue. Margins are lower on a YOY basis. They stand at 28.2%, and it is mainly the US and the India business that is driving the growth for Dr. Reddy's this time around. IDFC First Bank reported NII and net profit lower as compared to CNBC TV18's poll. GNPA and NNPA more or less stable sequentially. Indigo reported a 17% jump in its revenue. EBITDA margin came in lower at 26.4%, and net profit declined by almost 12%. BHEL could see an uptick today, and that is because the company has received an LOI for project worth almost 10,000 crores from Damodar Valley Corporation. Biocon, US FDA has issued Form 483 with 10 observations at the company's Bengaluru facility. Godavari Power has received CECB's permission to expand its iron ore pelletization plant from 2.7 MTPA to 4.7 MTPA. And lastly, let's also focus in on Glenmark Life, and that is because GPCB, that is Gujarat Pollution Control Board, has issued closure notice for the company's Ankleshwar facility.
We'll keep an eye out on all of these names. Vamakshi, thanks a lot for that update. And lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. 8 straight week of gains. What's the setup looking like on the F&O side?
Morning, Hormaz. That's correct. And we saw a strong start to the August series, and like at the opening levels on Friday, we saw strong buying. It was well supported by a few earnings that we saw on Friday, and even continued buying in both pharma and IT names have led market to a record high. And if we go as per GIFT Nifty, Nifty is set to cross 25,000 for the first time. So what have FIs have done on Friday? Well, they are buying even at these levels, both in the cash market and in the index futures. Also, domestic investors too remain bullish on the market. On Friday, we saw FIs buying shares of more than rupees 2,500 crore and DIs of nearly 2,800 crore in the cash market. And it's the first time in nearly 2 weeks that both FIs and DIs were buyers in the cash market on the same day. And in the index futures, FIs bought shares of more than rupees 4,300 crore and added longs of more than 64,400 contracts and cut short positions by nearly 5,500 contracts. And that takes FIs long positions to 63%, with total net long contracts of nearly 1.32 lakhs. On the options front, in the call side, we saw positions being added most in stacks of 24,900 and 24,850. And on the put side, major activities were seen in 24,600 and 24,700. So where do we see resistance and support levels for Nifty? Support remains around 24,600, while resistance is now north of 25,000. On the stocks front, we don't have any stocks in the ban, but 2 stocks that I'll focus on the basis of major change in the open interest are Federal Bank and Ashok Leyland.
Sudarshan, thanks a lot for that update from the FNO side. And time for a short break here on Power Breakfast. Up next, we get you the latest on the Ultratech Cement's board approval of the India Cements acquisition. Stay tuned, back on the other side.
I stand in support of Network 18's Project One Tree. We all know that trees are important. We all know how important it is for the environment and for a better future. So please be a part of it and support them. It's a good cause.
Well, let's focus on the insurance space. And it appears that the bulls, well, they are back interested in the insurance companies, or at least they're looking to get insured, it seems so. Because in the last 1 month or so, if you look at it, well, the Nifty is up close to 4%, but these insurance companies that actually underperformed, they have come back into play. And in the past week, they're up anything between 10 to around 15%. What went so right? Well, let's put up a few factors out there. There was no adverse regulation that came in the budget. One of the fears was that maybe, in fact, the taxation that they pay, that could be moved up a little bit. That didn't happen. The second factor was, in the last budget, we saw that traditional products, where the premium was more than 5 lakhs, it came under the tax net. Well, the fear was that even those below 5 lakhs premium, that as well could get caught up. So that didn't happen as well. And the third factor was, currently, if your ULIP premium is less than 2.5 lakh, well, it doesn't attract tax. The fear was that as well could have been brought under the net. And all those three didn't take place, so the street was happy. The other factor was that the impact of the surrender value. People were fearing that this could have an impact. Back of an envelope calculation told you that it won't have more than 1.5% to 2%. But nonetheless, that was a bit of an overhang on some of these companies. But the managements have indicated that they are trying various ways to wriggle out of this. And a few factors that they have been talking about is that the agent's commission, well, instead of it being paid all upfront, it could be delayed. It could be paid in a bit of a staggered manner. And also they're looking to squeeze in maybe a clawback clause. So that's what could help them as well and mitigate the fall of the surrender value out there. The industry basically is coming together, and it appears they're looking to bargain with the agent's commission. The third factor is, if you look at the results, they're fairly good. Whether you look at the APA or the VNB, they were fairly good in the past quarter itself, though margins, the VNB margins did come in for some pressure. But now the street is calling for bottoming out of the VNB margins. How is that? ULIP as a percentage of the total mix, that had gone up drastically. Now the indications are it's hit peak, and maybe in fact it'll pull back. Remember, ULIP margins are in fact relatively lower than the other products. So because of that, in fact, maybe bottoming out of VNB margins is something that the street is looking forward to. And finally, if you look at the valuations, if you look at the reverse, DCF, it implies that the street is now factoring in single-digit growth on the VNB. But maybe, in fact, it can grow in mid-teens or maybe high teens as well. If that's the case, then it has some valuation comfort. And even if you look at it on a price-to-EV basis, well, then, in fact, as well, it's not out of whack. It's more or less in line with the past averages. And some of them are, in fact, trading at a bit of a discount as well. So the short point is, insurers, life insurance, they came back. And the bulls, they got insured, at least in the recent past.
It's perhaps too early to call it a full report card because it's not a full accounting of things. As you said, what we're basically trying to do is looking at how earnings expectations for FY25 have changed in the last 1 month.
Back with us here on Power Breakfast, and on the big deal story, Ultratech Cement's board has approved the acquisition of a 32.7% stake from promoters of India Cements. Now Nisha is joining in with more details. Nisha, good morning. Another news break confirmed.
That's right. Thanks for that, Hormaz. And yes, the weekend was hectic for Ultratech, India Cements, and all of us there on this large transaction, which was waiting to happen. It does two things. It intensifies the competition in the cement sector between Birla Group as well as Adani Group. And on the other hand, also cements the position of Ultratech as the numero uno position that it has, and that it is a big consolidator in the cement sector and also aggressive in taking on the fight for acquisition. To the news now, Ultratech's board has confirmed and approved the acquisition of India Cements by buying out the promoter stake and the promoter as well as the associate stake, which takes the entire stake along with the financial investor stake that it had bought earlier in June to about 55%. So a majority stake has been captured by Ultratech at close to about 5,800 odd crore rupees. What it does is that mandatorily also trigger an open offer, which it's going to launch in the market, and the price of this particular open offer is the acquisition price from the promoters at 390 rupees per share. Now, on the other hand, the deal valuation as per EV per ton is at $100 per ton. So that is the deal valuation, and the deal is likely to be completed with all the regulatory approvals as well as also the open offer in the 6 months time period. Now, remember that India Cements has the capacity of 14.45 million tons, largely in South India and some part in Rajasthan. It also cements the position of Ultratech in South India, where it does not have a monopoly situation, and therefore the CCI clearance will not be a trouble in this particular transaction. KM Birla on this particular acquisition said that India Cements acquisition accelerates their path to 200 million ton capacity, and it also enables it to serve southern markets more effectively. Now, remember that in the past, Ultratech has had to stay away from many acquisition in northern and western parts of the country because it has a monopoly situation, and therefore it would have come under the constraints of Competition Commission. So South India is going to be a playground when it comes to acquisitions and more consolidation when it comes to the buy strategy, while the build strategy of Ultratech remains on track. So it's a very big transaction, and open offer will again increase the acquisition cost probably from 5,800 to it can go above 7,000 as per tendering.
Nisha, thanks a lot for that update. We'll keep an eye out on Ultratech, India Cements, and of course all of these South India-based cement companies as well. But shifting focus now to the primary markets, Ola Electrics all set to drive into Dalal Street. The initial public offer is set to open on the 2nd of August and will close on the 6th. The IPO will include a fresh issue of equity shares along with an offer for sale of up to 8.4 crore shares of face value of 10 rupees each. They also announced the price band this morning, which was between 72 and 76 rupees a share. Now, time for a short break here on Power Breakfast. Up next, to get you cues from the commodities market. Stay tuned. Back on the other side.
The NSE 200 list, and these are the top tracked, well-owned companies, liquid, large, mid companies. And you know, how many have seen upgrades to their full year estimates and how many have seen downgrades. So the reason I say it's not a full accounting, if it's not even half the accounting, is because only 70 have reported out of NSE 200 as of yesterday's close. But out of the 70 which have reported, I mean, I think the numbers are pretty, stark. 40 have seen EPS being downgraded. Only 18 have seen EPS numbers being upgraded. And mind you, out of these 18 companies also, you got lots of, about 4 or 5 of them where the upgrades are about 1%, 1.5%, small upgrades. So I'm counting for that as well. So this is essentially the list of companies which have seen the largest downgrades. I'm not putting out all of them, but Bank of Maharashtra, Paytm, which of course was a big mover, but for other reasons, JSW has seen full year 25 earnings being taken down 12%. There is Loris, a lot of tech companies, right? Coforge, Tata Elxsi, Tata Technologies have seen these downgrades. Tata Communication is another one which is down about earnings around 6%, marked down by the street. These are all from sort of Bloomberg consensus estimates. Asian Paints, Dalmia Bharat, and SRF as well. As I said, total of 40, but the top ones there. Now, which are the companies which have seen upgrades? You'll find a lot of insurance companies here. So look at this, ICICI Pru, there is ICICI Lombard, SBI Life, HDFC Life. This is the cohort which has seen the maximum upgrades. There is asset management company, HDFC AMC as well, which has seen about a 8% upgrade. Others, there is Suzlon, Kotak Bank, Canara Bank, and a BPCL out there. So 18 here, but of course I've not put all of them, but the top upgrades which are really coming through. Markets continue to do very well. And I hope that as the earnings season proceeds and we get to the 50% mark, and then, of course, beyond that, you get more positive surprises because, at the end of the day, stocks, at least in the medium to long term, will return what earnings return. So you need earnings growth to pick up substantially. At least till now, from what we've seen, that has not been happening.
Well, in many respects, this is a landmark judgment. It was pronounced by a 9-judge bench. It's coming after 9,000 days of waiting. This first case was filed way back in 1999. What is the issue at the heart of it all? Well, the core issue that was being argued here before the apex court is that can the state governments prescribe a cess by their...
Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil prices seem to be on a rebound.
Well, yes, after 3 straight weeks of decline, we are looking at some buying coming back, and this is after concerns on tensions between Israel and Iran. And also with the US PCE price index mostly unchanged, there is this supportive factor that you could be looking at the first Fed rate cut coming in for the month of September. The support also is seen in case of gold prices because the US Treasury has declined. There is optimism on rate cut. And then the Indian physical demand in sense of gold really seems to be getting a boost. Also with the price decline and people flocking to buy, Indian gold premiums are at the highest in a decade is how we are looking at. But apart from that, everything else has seen a bit of a decline. The metals are trading in the negative. Copper prices have declined to 4-month lows. We've seen rising inventories, weak China demand. All of that continue to weigh in case of metal prices.
Manisha, thanks a lot for that update. And India's wait for a medal at the Paris Olympic Games ended after 22-year-old shooter Manu Bhaker secured a bronze medal in the women's 10-meter air pistol event. With this, she becomes the first woman shooter from India to reach an Olympic final in an individual event in the last 20 years, and of course the first woman shooter to win a medal as well. Manu hit the ground running after qualifying for the finals in 3rd place. Now, out of the 22 shots she took, just 7 were in the 9 ring. Manu will also be competing in the women's 10-meter pistol mixed team event today and the women's 25-meter pistol event later in the competition. The gold and silver medal in the event both went to shooters from South Korea. And if there was ever a redemption story, it was this one. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
Competency. Can a state government pass a law saying that, or basis the mineral output, a certain percentage has to be paid in the form of cess or tax? The answer is yes. An affirmative answer coming in from the apex court, the Supreme Court saying that yes, indeed, the states do have the legislative competency to go ahead and to pass such laws which provide for paying of cess. This is a burden that will fall on the miners in terms of the impact. There are 4 aspects to consider. Number 1, the impact on the miners themselves. There was a big question mark over payment of these cess, payment of these levies, of this tax to state governments. That has been answered. So that squarely falls on the shoulders of the miners. The Supreme Court has said that basis the mineral output, the state government can compute a cess that has to be paid by them. So a huge impact as far as miners are concerned. Speaking of the miners, who are the miners that were here before the apex court? The likes of Hindalco, Tata Steel, Ambuja Cement, ACC. All the big names were here contesting this state levy. That answer they've met with a disappointing answer from the apex court. That burden will now fall on the miners. In terms of the impact also on the state governments, let's bear in mind that mineral-bearing states, the likes of Odisha, Karnataka, Maharashtra, Rajasthan, Jharkhand, Chhattisgarh, MP, these are the larger states which bear these mines. These states are looking at thousands of crores of revenue coming in over the course of a mining lease. That's 2. Second, as far as the impact on the centre is concerned, this is a huge hit for the centre as well. The centre, bear in mind, has been arguing before the apex court that this power of taxation falls exclusively in the domain of the centre, that the states have no business levying this tax. They've been met with a disappointing answer as well. The centre's petition being disposed of by the apex court. So again, a big landmark judgment coming in from the apex court in terms of miners, pain coming in for them in the form of additional cess by way of state governments.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is
India's market news headquarters. Cutting-edge analysis, influential insights, market-moving intelligence. Broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, a beginning of a fresh new week, and it's essentially going to be, it looks like it's going to be a good one. The GIFT Nifty is indicating another 100-point up move. The last I checked, Friday was a blockbuster session with that massive 400-point move on the Nifty. So, really resilient market, top of the pack as far as global markets are concerned. So the backdrop coming into this week is super strong. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And as they say, when you throw the kitchen sink at this market and it'll still sort of overcome that and rise. I mean, what a week. In fact, on Friday, you had very strong cues from the global markets as well. So it looks like it's going to be a good day.
Well, that's right. And the breadth of the market has held really strong. So that's telling you the kind of mood that we are in. You throw the negative news, dips are getting bought into, and the party continues.
And I hope, hopefully the party will pick up in Paris as well, right? With the Olympic Games going on. First sort of medal for India, the bronze one coming through for Manu Bhaker. And, those are visuals which are coming through, really iconic images. She, of course, missed her chance because of a pistol malfunction 3 years back. But this one, of course, she got, she could have sort of landed the silver, but she missed it by just a whisker, literally just a whisker. Lots of events lined up. We've got a 100-plus sort of strong contingent competing in about 16 sports, I think it is.
Yeah.
So there is... a lot at stake. Expectations, of course, running very high as well.
And today we have India taking on Argentina in the hockey game as well.
Yeah.
Late on Saturday night, we were down actually against New Zealand.
Yeah.
But the boys managed to pull it through in the final 2 minutes or so. So cheering for our boys. I think that's at around 4 p.m. later today. India taking on Argentina in the hockey match as well.
Absolutely. Well, so let's kick this off with, whether the market will also be cheering along, because the backdrop, as I said, is positive. Let's just sort of rewind the clock and take it back to Friday. So we continue to outperform global markets. By the way, we looked at data in the month of July. I mean, this outperformance is stark. Most other markets, I mean, the larger markets, like, for example, the US, you look at the Japanese market, and these are not just sort of larger peers, but markets which have done well. As well as India in some cases. Most markets are down in the month of July. India is up. You extend that timeline to all of 2024 so far. It's India, US and Japan, all about 14 to 15% higher for the year. So really top of the list. And I think the strength here is something to behold. On Friday, FIIs turned buyers once again. And I think, along with locals who've been buying in strong, that essentially was the reason why you had that 400-point rally on the Nifty. And I think it surprised pretty much everyone. We spoke with so many people. No one really saw it coming, especially that day. IT index and so many other indices. I think there were about 5 sectoral indices with gains of over 2%. US equities on Friday rebounded, so about 1.1% gains on the S&P and the NASDAQ. And mind you, here also, this rotation is underway. Since the 10th of July, which is, I think, around the time that the last CPI numbers came, the NASDAQ has underperformed the Russell 2000 by more than 15%. Essentially, small caps are doing much better as compared to the mega caps. I mean, it's been a highly concentrated market, and some of it is moving away. And I think also because earnings have been a little weakish as far as mega cap. It's a magnificent 7, so as to speak. This week is important for earnings. I'll get to that in just a bit. You had the core PCE numbers, which came through in line with expectations. Markets reacted dovishly. The 10-year was down 5 basis points. Dollar index was flat, 104.3. The oil prices fell about 2%. I think we're at about $80.5 per barrel. This week, we've got the FOMC meeting on Wednesday. We will react to it on Thursday morning. There is the Bank of Japan, which again, by the way, these are all live meetings where something is expected. And then there, of course, is the Bank of England meeting as well. FOMC, while no change in rates immediately is expected in this meeting on Wednesday, is expected to indicate that conditions are falling into place for cuts. Because, at least the last 3 or 4 data points all indicated they're not hawkish anymore. They're not strong data. There is weakness. You also, as I said, have lots of earnings. About 40% of, S&P's market cap will report numbers. The ones which really matter for the market are Microsoft, Meta, Apple, Amazon. These are the mega cap numbers which could, single-handedly move indices on a day-on-day basis. So I think becomes important. Just to circle back to levels here, the Nifty held the 20-day moving average and is now basically back at the previous swing high, which is 24,854. That was the previous high. We kind of touched that, we crossed that and then closed slightly under it. The obvious logical sort of target now is about 25,000. You look at other sort of ways to analyze market, you're looking at about 25,300 levels, extension levels. On the downside, the 20-day moving average, 24,413, becomes important. I guess the best way to trade what is a rallying market, which is sort of moving up, is to trail with a stop loss. I think the 20-day moving average is as good as any. Nifty Bank retraced after, bounced essentially after touching the 38.2% retracement of the previous rise. On the way up, the 20-day for the Nifty Bank becomes important. That level comes in at about 52,248. So that's the immediate resistance level. But beyond that, I think we look at the previous highs, etc. Low of 50,438 will be the important support for the Nifty Bank as well. So that's essentially a little bit about indices, but really it's a market of stocks. And I must say, over the weekend, there are many, many companies which have reported numbers. I put out a piece last Friday which showed that there are many more downgrades as compared to upgrades out of the 70-odd companies which have reported numbers so far out of NSE 200. But over the weekend, a slew of positive surprises. And I think that should bode well as we sort of gauge the earnings health for the market as well. 150 points higher, so it's become stronger from the last time that we checked the GIFT Nifty. Sonia.
Absolutely. And, in that slew of earnings, I think ICICI Bank will be the one that everyone's going to focus on. Because a very steady set of numbers is what the company reported. The gross NPAs are at a 10-quarter low for ICICI Bank. So definitely that will be something that the street will look forward to. But apart from that as well, very strong global cues coming through this morning. The Dow was up 650 points on Friday, and across the board, tech stocks did very well. There was a big recovery in our own markets post the budget as well. The Nifty is back at record highs right now at 24,800. There was large buying by domestic institutions in the last few days. So if you look at the numbers, right, The cash deployment from domestic mutual funds has begun now post the budget. DI has bought almost 3,000 crores in the cash markets on Friday. FI has bought about 2,600 crores or so. Fresh highs in a lot of names, whether it's Tata Motors, TCS, Infosys, Ashok Leyland, and some things to watch out for this week. You have big earnings from global tech majors. So whether it's Microsoft, Meta, Apple, Amazon, all set to report their numbers. And there's the US Fed Reserve meeting as well on Wednesday. There's no rate cut expected this time around, and the Fed is likely to hold rates steady. So that's something, that we're watching out for. But in terms of individual stocks, I'm watching for ICICI Bank after a strong set of numbers that the company has reported this time.
Well, that's right. And today it should be quite historic because we should be reaching the 25,000 odd mark. But let's tell you what the FIs did, particularly in the F&O market. Well, they added long positions while the clients, they turned net short yet again. So let's pull up those numbers up for you on the screen. The long positioning went up by close to 65,000 contracts. Shorts came down by close to around 5,000 contracts odd, which brings us to the numbers. If you compare Thursday's data with Friday's data, you'll see the FI long positions nearly doubled. More than doubled. It's moved to around 1.3 lakh contracts. The clients were net long. They added close to 60,000 short contracts net. That's why now they're net short at around 53,000 contracts odd. Now, moving to the options data, the PCR has moved up. It's moving closer to the upper end of the range. The upper end of the range is around 1.6. We're seeing aggressive put writing. As of now, it is at around 1.36 odd. So two strikes I'm pulling up. The 24,600 put, fairly active in Friday's trading session, added 40 lakh shares odd. While on the upside, you had the 24,900 call that added close to around 13 lakh shares odd. But since this put is getting written and it has a premium of close to around 50 rupees odd, that's telling you the 24,550 level, that becomes the important support zone. If that breaks, you're referring to the 20 DMA. So this zone, of around 24,400 to around 24,550 becomes very, very important. Till this holds, you'll have to say the buy on dips must continue. On the upside, resistance comes in at around the 25,050 odd mark. And today, in all probability, we should get to around the 25,000 odd mark. So what happens from here will be important. And what's going to give direction to the Nifty is the Nifty Bank. That's pat in the middle of the 20 as well as the 50 DMA. So which side is it going to drift is going to be important. For the time being, for starters, it starts closer to around, in the direction of the 20 DMA. But can it move to that? You'll get more confident on the Nifty Bank once you get past that 20 DMA odd. The sector that I'm looking at is the cement space, obviously, because yesterday that deal, the long-awaited deal was announced on UltraTech as well as India Cement. The open offer has come through. Now, I'll keep an eye out on UltraTech. For them, it's more or less neutral to positive. India Cements, there's been massive delivery-based buying out. So the stock opens up closer to around 400 odd. It'll be interesting to see whether it's making a near-term topo there because the street was bracing for this piece of news. On the negative side, Ramco and Dalmia, well, they have big exposure in South India, so they could see a bit of a negative tick. While the smaller cement companies, the street believes that now Orient and Mangalam and some of those companies could fold up. Orient Cement is the one in particular that I'll be keeping an eye out for because the street believes there will be some more consolidation on the cards. So we start off in the green. We need to build on from there.
Okay, thanks a lot for that. Let's get you some money market views at the start of trade. Before we begin the day, B. Prasanna of ICICI Bank says, ahead of the FOMC, BOE and BOJ decisions, the dollar consolidated after recent corrections owing to a resilient US GDP growth, but weakening inflation data consistent with a soft landing scenario. He says the Japanese yen and Chinese yuan were volatile on account of unwinding of carry trades ahead of the Bank of Japan meeting on Wednesday. He says the FOMC is expected to hold rates but may signal the start of rate cuts from September, and the rupee traded in a narrow range with depreciation bias as the RBI continued to accumulate forex reserves against the dollar inflows at higher levels. He expects this trend to continue and expects the rupee to trade in a range of 83.60 to 83.90 this week.
All right, on bonds, we've got B. Prasanna who says that global yields continued consolidation amidst data reiterating soft landing in the US. He says a slew of positive news continued in domestic markets. First, he says the FM announced a non-inflationary and fiscally prudent budget. Second, revisions to LCR guidelines are expected to result in additional demand for SLR securities. Overall, he expects the market to trade with a positive bias, with a 10-year yield likely to be between 6.9 to 6.95%.
Well, we've got a lot of stocks in focus today, so let's run through the list before we get to further analysis. We're looking at UltraTech Cement, India Cement, ICICI Bank, Dr. Reddy's, NTPC, Interglobe Aviation and BHAL. All of them are reacting on the back of positive news flow, while you have IndusInd Bank, IDFC First Bank and Power Grid that will be reacting to negative news flow.
Okay, let's do one thing. Let's take a quick commercial break on that note. But on the other side of the break, our list of top 10 stocks is lined up with our entire research team, so don't go anywhere.
Are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this mistake?
Welcome back to Bazaar Morning Call. Well, our research team is standing by and lots of individual stocks in focus, so let's get straight to that. First up, we have Ultratech and India Cements on our radar. Nisha's covering that for us. Nisha, over to you.
What a busy week it has been, weekend it has been for the two companies and for all of us. It's a large transaction that has been finally announced. It was in the waiting when the financial investors gave a huge chunk of the stake to Ultratech for buying India Cements. So now they have confirmed that they are going to acquire, Ultratech is going to acquire India Cements with a majority stake coming in. 55% will be the total stake of Ultratech in India Cements after buying out the promoters as well as associates and with the previous block that they had bought. The total acquisition cost so far is close to about 5,800 crore rupees and an open offer will be triggered, which could take the expense to about 7,000 odd crores, but it depends on the tendering. One important bit I would like to point out here is that Jefferies has said that the blended valuation is at $110 per ton, which is a tad expensive compared to the other M&A done, but looks like it's going to be positive for Ultratech, which is fighting the competition from Adani and consolidating South India position, and India Cements getting a good deal at 390 rupees per share, at which open offer will also be done.
All right, thanks a lot for that, Nisha. Well, let's run you through 6 top points that you need to track with regard to this deal. First, the valuation is roughly around that $108 to $112 per ton, depending on what numbers you are taking. So that's roughly the number. Then, in fact, you have India Cements, where the total debt is around 2,000 crores approximately. But, the debt can come down substantially because they have some non-core assets. They're more than 25,000 acres, as we know. What does Ultratech Cement get? Besides the capacity of 14.5 million tons odd, they get limestone reserves. So that seems to be the key reason that they've gone ahead and bid up, the stock, for this. And India Cement, well, why did they have to sell? Because the debt was high, utilization levels were low, and EBITDA per ton as well was rather low. The stocks you should be tracking, neutral to positive for Ultratech Cement. For India Cement, we'll see whether it hits a near-term peak. Negative reaction for Ramco as well as Dalmia Cement just in the near term, because they are, they have been dominating that market, so that there'll be a bit of risk out there, and there could be a positive rub-off on Orient, Mangalam, and Sagar Cement. For the industry on the whole, for the South industry, near term there could be pricing pressure. In the longer term, it's a step in the right direction. So we'll keep an eye out on all these stocks. But that's about cement. Let's go across to Sudarshan for ICICI Bank. Morning, Sudarshan.
Morning, Nigel. So I'm going with green for ICICI Bank. It's another quarter of healthy set of earnings from ICICI Bank. Talking first about the headline numbers, NI has come in line at rupees 19,553 crore and profit has come in 5% higher than estimate. So what are positives in the result? Gross NPA has come in at a 10-quarter low of 2.15%. NIM has slipped 4 bips sequentially and 42 bips year-on-year, but it's in line at 4.36%. And overall stress in the balance sheet is the lowest in 26 quarters or more. But there are a few negatives as well. Core operating profit growth is lowest in 4 quarters. Slippages have risen 15% sequentially, and ROE is at 17.7%. That is lowest in 16 quarters. But overall, it's a healthy set of earnings and much better than the peers that have reported earnings so far.
All right, so thank you very much for that. So that's ICICI Bank in focus. Now, Dr. Reddy has also reported numbers. Ekta, how do the numbers look? Morning.
Morning. Well, numbers look good. Came out on Saturday afternoon, so it'll be reacting to its conference call details as well. So the revenue was up 14%. Street was estimating around a 7% growth. Margins came in at 28%, which was, rather in line with estimates of around 27%. Profit was also around 1,392 odd crores. North America did well. It was up around 20 odd % year on year. Estimates of around $130 million of contribution from Revlimid generic, which was largely in line. India did well. It was up 15% year on year, but the organic growth was around 7%. And PSAI also did well, which was basically their active ingredients business, which was up around 14%. The company says that they target continued growth in the US through the year, and they're targeting double-digit organic growth in India for the full year as well. And, they have a target of around 25% in terms of margins, which they want to maintain so that the rest goes into capex. So the street, I think, will be happy with the fact that they came above it this quarter.
Okay, thanks a lot for that. Well, Sudarshan is going to also talk about IndusInd Bank and IDFC First Bank. Sudarshan, over to you.
Morning, Sonia. So first, starting with IndusInd Bank, the numbers were weak and were much below estimates. NI has missed estimates by more than 2% and profit has missed estimates by more than 5%. Even operationally, numbers looked weak. Operating profits have declined 3.2% sequentially, and it's the biggest decline in 34 quarters. Asset quality, gross NPA ratio has risen for the first time in 9 quarters. It has come in at 2.02%, and margin has come into a 7-quarter low of 4.25%. Coming to IDFC First Bank, asset quality remains a concern over here as well. Company reports an increase in credit cost as slippages ratio has risen to a 7-quarter high, and also company has increased its credit cost guidance for FY25. In Q1, slippages have risen 23% sequentially to nearly rupees 1,700 crore, and net interest margin has dipped both sequentially and year on year. Headline numbers though have come in line. NI has come at 4,695 crore and profit at rupees 681 crore. So I'm going with red for both IndusInd Bank and IDFC First Bank.
Okay, thanks a lot for that, Sudarshan. Well, let's hop across to Vivek, who's here to tell us about NTPC and Power Grid. Vivek, morning.
Well, good morning. NTPC and Power Grid had differing fortunes as far as Q1 was concerned. NTPC, a strong operational performance by the company, results above what the CNBC poll was indicating. Now, when you're talking about the NTPC numbers themselves, revenues higher by 13.5% on a year-on-year basis, this was against a poll of 42,000 crore. The EBITDA higher by almost 9.5%, and this was against a poll of 11,922. The actual numbers came in close to the 12,470 crore mark. Now, talking about the margins were a slight miss, 40 basis points, but that's something that the street will look ahead. Net profit higher by 11%, profitability coming in at 4,511 crore versus a poll of 4,467 crore. Two key metrics that we are tracking: the thermal PLF, quite strong over there, 80.39% versus 77.43% on a year-on-year basis. Average tariff also increased, coming in at increased almost 3.5% on a year-on-year basis, coming in at 4.53 rupees per unit. Now, talking about Power Grid, remember the numbers were a bit of a dampener, a slight miss against our poll, but however, it will be interesting to see what is the prospects that the company give when they have the analyst meet later today. So revenues down 1.7% on a year-on-year basis, close to the 10,050 crore mark. EBITDA down 3% on a year-on-year basis. Margin strong, but despite that, profitability down almost 3.7% on a year-on-year basis. Remember, the key numbers to watch out for will be the FY25 capex and the capitalization. Capex earlier they had given a target of over 15,000 crore. That's very strong, and capitalization is likely to double from FY24 levels. Both NTPC and Power Grid have the analyst meet later today, so we'll await granular details from there.
Got it. All right. Thanks a lot for that, Vivek. Well, let's also talk about Interglobe Aviation. The numbers came in post-market hours on Friday, and they look pretty decent, actually. Revenue growth of 17% is what the company has clocked in. The EBITDA has gone up 4%. Now, margins have been slightly under pressure, falling to 26.4% versus 29.8%. That's also because fuel costs have gone up. The profits are down about 12%, but the good part is yields for the company have improved, up 1% year on year, coming in at 5.24 rupees. And if you look at what brokerages have said, right, Jefferies has actually raised the target price on Interglobe Aviation to 4,400 versus 4,150 earlier. And Motilal Oswal has maintained a neutral with a target price of 44.20 on the stock. So I'm going with green on Interglobe Aviation. But BHEL is also in focus this morning. Vamakshi is here to give us details on that. Vamakshi, over to you.
Well, good morning. BHEL is expected to trade higher in the session today, and that is because the company has received a large order. They've received an LOI worth almost 10,000 crores from Damodar Valley Corporation, and this is for setting up two 800 megawatt Kodarma Phase 2 power station in Jharkhand. Now, Antec believes that FY25 has seen a very strong positive start for the company. They've received almost 17,000 crore worth of orders from the power segment, and in fact, they're expecting cumulative order inflow to continue, expecting 1.8 lakh crores over FY24 to 26. This, along with accelerated execution of their existing order book, could lead to better operational performance for the company. They're expecting 156% earnings CAGR over FY24 to 27. They believe that the stock has meaningfully re-rated over the last 1 year, but believe that the stock is still inexpensive and has the potential to re-rate further. They maintain a buy target price of 360 per share. Overall, the order win boding well for BHEL.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow: Ultratech Cement, India Cements, ICICI Bank, Dr. Reddy's, NTPC, Interglobe Aviation and BHEL, while stocks with negative news flow: IndusInd Bank, IDFC First Bank and Power Grid. Let's take a short break. On the other side of the break, Prakash Diwan will join in to discuss some fundamental stock analysis. Do stay tuned in.
Maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year.
Yeah.
That's what we expect to do. Next year, 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio.
Welcome back. Well, as promised, let's get some more fundamental analysis going on a whole host of stocks that we discussed. Prakash Diwan joins us. Hi, Prakash. Good morning and good to see you in. Well, the big deal we were waiting for, it's gone ahead and got announced over the weekend. How would you approach both these two names, Ultratech Cement as well as India Cement?
Good morning, Nigel. So, I know this is interesting. This was kind of anticipated, was in the making for a while. But the real benefits going to be towards the India Cement stock price. I mean, Ultratech, has already done what it could have done from this advantage that it gets. But since the promoters also are willing to exit from this in this transaction, I don't think there's much of an open offer that residually which will probably impact the price. So you probably see some profit booking closer to where it is today, and which is a fairly decent level from the time the first chunk was announced. So, as you rightly said, it's difficult to time these transactions perfectly, but this seems to be probably the intermediate top from a transaction perspective for India.
Okay, well, the other stock that we're looking at this morning is Dr. Reddy's. Good set of numbers coming in. I mean, largely on the top line, right? It's a double-digit growth that DRL has seen. Prakash, any thoughts on the stock? Do you like it? Would you buy it now?
Good morning, Sonia. No, so I'll tell you what's interesting about the commentary from the management. They're finally talking about a double-digit organic growth after a fairly long time. Okay, so there have been issues, of course, in the overseas markets that they've overcome in the last 2 quarters. But now if they're talking about this and even the other engines have started firing, the API part particularly, which is fairly lucrative in that sense, you'll not only have top-line growth, but you'll probably see some margin expansion and stability at high levels. So very, very decent. Of course, most of these pharma stocks, especially the bigger ones like Sun, Reddy's, Cipla, they're quite well priced. So don't expect a very big bump up in that sense, but at least they'll probably be more resilient given the growth outlook from here on. So it's good if people don't have allocation to pharma. This is some time that you could look at adding this and FMCG, because when the market shakes off, probably these are sectors which will probably be easier to hide within. So I think Reddy's definitely stands to be one of the best in that top league, the big pharma that we have. So, but as I said, valuations could probably unnerve a few people who look for too much of value investing as a methodology. But otherwise, the numbers and the commentary both are excellent.
I mean, places to hide. I mean, right now it's all front foot forward, right? Hitting it out of the park, Prakash. I'm just going to come back to you, Prakash. Have to take a mandatory break, so allow us to do that. We'll be back with that and more in just a bit. Stay tuned.
We are talking about 3% plus to go to capital expenditure. There are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unique talents and its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through a stadium. They will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people and no doubt visitors in the opening ceremony. It's not just for the select few who can somehow manage entry into a stadium, but there's more to this than that. Consider that the Olympics is the biggest sporting event in the world. The number of people who watch, it's going to be such a showcase, such a show-off for Paris to the world. All of Paris will be on show. The stage along the 6-kilometer ride along the river Seine is going to take in some of the most iconic landmarks of Paris, Notre Dame, the Louvre, and this is really going to be a presentation to the world. Consider also that Paris is perhaps the most
Welcome back. Well, the Nifty definitely has its eye on 25,000 and looks like we're going to get to that milestone today. It's a very, very strong opening. It's a confluence of factors. So, you know, of course, we have positive global cues, good earnings from ICICI Bank and Dr. Reddy's. And Indigo is one stock that I wanted to talk to Prakash Diwan about. So let me just get to him. Prakash, decent set of numbers coming in. In fact, Jefferies has also raised their target price on the stock. At this point, what would you do with Indigo post the numbers?
Well, you know, the numbers are excellent. Continues to give you the confidence that this company will, you know, be there and right in the top slot. But what's going to be difficult is it now becomes very vulnerable to any kind of a sustained increase in crude levels. My sense is the margins will probably improve in the current quarter that we are in. You had, you know, the earlier quarter had a lot of disruptions. Because of which the cost would have gone up. But what's most promising out of the metrics that you look at, Sonia, is the number of kilometers available. Now, what has happened is they've increased their sectors mix in such a way that all put together, the number of flights that they have, that hasn't increased dramatically, but the sectors that they have kind of consolidated within is very promising. So you'll probably see revenue growth and, of course, you know, margins come back. But at 4,400, you know, is the stock pricing in all of that goodness? Most of it, yes. So you probably buy it on dips. If it gets closer to 4,000 on a bad day in terms of, you know, some sell-off happening in the broader markets, that's the time to kind of get it. Because the next move to 5,000 plus territories could probably be slightly slower than what we've seen from 2,000 to 4,500. So it's well poised, but I would not believe that it'll keep on rising in the same way that people have seen it do in the last 12 months.
All right, Prakash, request you to stay with us. Let's get some more analysis going on the big cement deal. We have Anil Singhvi, someone who's been associated with the cement industry for many, many years. He's here. He's currently the chairman of Sri Digvijay Cement, but he's here to discuss about his company as well as about this big deal. Good morning, Mr. Singhvi. Thanks a lot for joining in. Well, who would have thought, right? All these years, people have been arguing that the asset is not up to mark. It's an aging asset. It'll require a lot of capex as well. And you have UltraTech here going ahead and paying top dollar, more than $105 per ton, either which ways you slice it. Your first take on this deal and how does it impact the industry?
I think I would start with saying that advantage Mr. Srinivasan, a huge advantage Mr. Srinivasan. He understands tennis very well, so I would use in that term. I think if you trace back when UltraTech acquired their grinding unit in Nasik, almost about, I think, 6 months or 1 year ago, I think there were indications, at least in my mind, that they were moving in the right direction. And of course, Mr. Radhakrishnan's, the money's holding was, I think, clear path on that they will not stop at 23%. It's not an investment on the balance sheet, but they would acquire the complete asset as well. Now, for the top dollar price, I think Mr. Srinivasan should be thanking all the way to the bank, to Mr. Damani. Had Mr. Damani not entered into India Cement and having 23% position, I'm sure 390 rupees would not have been ever even dreamt by Mr. Srinivasan. I mean, howsoever critical that asset may be for any cement player, but 390 is a very, very high price for the share of India Cement, no doubt about it. So it's a huge advantage, Mr. Srinivasan, no doubt about it.
Mr. Singhvi, hi, morning, Prashant here. So, as an indication effect to smaller cement companies where there are potential, I mean, the market always sniffs out potential deals, future deals. Is this a re-rating event?
Well, I'd mentioned to you when Adani's bought Ambuja and ACC that I think Holcim was a very passive player in Indian market. So if you trace it back from 2006 to 2022, for 15, 16 years, not many cement deals happened of this nature, which we are seeing in the last 2 years. I think this whole process will get accelerated because industry is still very fragmented. So you may see deals happening one after the other, maybe just 2 million, 5 million, 10 million, whatever is there in terms of what is available. And in some cases, what is even not available, like India Cement was not perceived until about a year back that it will be available because Srinivasan has been, I mean, he's a Bhishma Pitama of cement industry, I would call him. I mean, that's a very right word for Mr. Srinivasan. He's been there for almost about 60 odd years. So I think going forward, and particularly I'm very excited because Kesoram and India Cement, these are the two weakest cement plays in South India. And both have been acquired by UltraTech in the last 6-8 months' time. So I think industry is taking out the weaker players first. Like look at Sanghi Cement, look at Kesoram, look at India Cement. And that's a very positive sign for consolidation in industry. So one is not paying $150, $170, but one is paying $90 to $120 to consolidate the industry. Weaker players because they are weak in terms of both, in terms of efficiency plays and pricing. So I think both will benefit the acquirer and the industry.
All right. Yeah. And Mr. Srinivasan, one of the tough cookies, I've spoken to him over the last 10, 15 years or so. And amazing, in terms of those interactions. Let's get to a couple of details then. CCI, no problem for them, you think?
There could be some issue in CCI. It's not going to be so simple because having acquired Kesoram recently and again one more asset, there will be some challenge, but I think they'll overcome that. It's not, I don't see this as a deal breaker. It may take its own time, nuance, all that, but not a deal breaker.
Okay, all right. Before we wrap up, Mr. Singhvi, do you think that South India could be for a bit of pain, in the next 12 to around 18 months because of pricing? Longer term positive, but near term pain. And also, your company, Sri Digvijay Cement, is PE owned. What would you be happy with in terms of an offer, given that this entire re-rating has taken place? So, comment on both those two.
Yeah. So first and foremost, South India, I think what I've seen post Sanghi's acquisition by Adani, I think the similar kind of situation will pan out in South India, where capacity, because both Kesoram and India Cement have not been operating at the full capacities. So I think there will be a bit of a tug of war for getting the market share by Kesoram and by India Cement. So UltraTech will definitely try to push volumes. So this will put a lot of pressure on the South India, whereas South India prices have already been low. So I think the next at least 2 to 3 quarters, they may still see. And again, the monsoon in Tamil Nadu will be approaching in October, November. So by the time this deal gets done, there will definitely be a lot of pressure for Ultratech to push India Cement's new production in the market on that. Now, coming back to how industry's profile is going to be, as I mentioned to you, that standalone cement plays, if they're critical for, by Adani or by Ultratech, they will get acquired. Now, you asked about Digvijay. I can't comment on that because that's for the decision for the promoters. I know for sure that there will always be a consolidation move going forward in industry for next at least 2 to 3 years. Before they start organic growth, I think there will be a lot of plays which will come on stage, and let's see who is the best suitor for which bride.
Okay. All right, Mr. Singhvi, always nice speaking to you. Thank you so much for joining us and, telling us a little bit more about this deal, about the industry. We learn a lot from you every time. But let's connect now with the management of Bandhan Bank. Ratan Kumar Kesh, who is the MD and CEO of Bandhan Bank, joins us to discuss their Q1 performance. Ratan, thanks a lot for joining in. Just wanted to understand a little more. I mean, I was going through your numbers. Your asset quality issues continue. So this time around as well, the slippages, although they are down, your gross NPAs at even the, just the ratio itself is at 4.2% versus 3.84%. So there is some amount of deterioration in asset quality. Can you give us some guidance on what the gross NPAs and the credit costs could look like for the rest of the year?
Thanks, Sonia. Look, 4.2% what you see as gross NPA is largely because of the fact that the advances have sort of steadied this quarter. And generally for us, quarter one is a muted quarter. In fact, over the last years, you would have seen the quarter one, we have shown degrowth sequentially from quarter four to quarter one. This year, we've been able to hold it there. That's one factor. But our slippages are down by almost, over the last 3-4 years, this is the best over slippages, I would say. It's down to 2.9 from a 3.5%, and then 1 year back, it was 7%. As middle of quarter two, our advances pick up, and then quarter 3 and 4 will be significantly better quarter, and that trend will continue. Given that, we are not worried about the percentage-wise slippages as a subject. But clearly, the overall DPD pool in the EEB portfolio, which is one of the larger one for us, has come down. So I think going forward, we get to see significant improvement in the portfolio quality.
So can you give me some number? What are you looking at? Gross NPAs, where will it be by the end of the year?
I think we will be closer to 3.5 or maybe slightly better than that as well.
Okay.
3.5 by the end of the year. Mr. Ratan, good morning. Prashant here.
Good morning.
So, I mean, it's a broad question, but I think you'd understand this. I mean, markets are also waiting. Is the worst kind of starting to look like it's coming, it's behind? How would you address that question? I mean, it looks like a much better quarter in what is otherwise a seasonally weak quarter for you. You're also sort of moving towards more secured assets. So that should also help over a period of time. So just help us understand.
Over the last 5 quarters, maybe a couple of years, and definitely over the last 5 quarters since April 2023, we've been putting a whole bunch of guardrails to improve our portfolio quality. Growth has not been a problem, but I think portfolio quality was significant focus, and we were decisively wanting to come out of the pandemic, post-pandemic challenges. I think I would say, looking at the current set of numbers, this quarter performance, I would say advances, we've been able to hold it, the growth. Subsequently, we will see better quarter in terms of advances, number one. Slippages have come down, and it is coming down consistently over the last 5 quarters. The DPD pool has dried down from a 2,800 range on the EV to roughly around 1,200 and slightly inched up to 1,400 crores. So I would say we are largely out of the pandemic. Maybe small residual 5% problem could still be there, which will come over the few quarters, but I think we will be able to overcome that clearly. So that's where it stands today. In terms of our ability to garner deposits, you have seen our deposit growth has been higher than the loan growth. So we will continue to garner better deposit-led, liability-led asset growth. So our NIM, we will continue to hold it reasonably well. So I think we are quite optimistic over the next few quarters.
Okay, all right. Hi, sir. Good morning and good to see you in. And good to hear that you're sounding optimistic about the second half of the year in particular. So for the year, to get a couple of numbers out, loan growth of 20% with margins holding in this vicinity, NIMs at around, the 7.5% odd.
So loan growth, as we said, that will be in the range of 16 to 18%. That will be able to hold it. NIM, depending on how the interest rate looks like, I think we should be able to hold it at 7 to 7.5. This quarter has been great for us. We are continuing with sequentially 7.6% NIM. But I think it will remain in the range of 7 to 7.5.
Okay, all right. You have that credit guarantee fund for micro units money. Could you quantify what is the amount you're expecting and by when?
See, you are aware of the fact that we had got the first tranche settled. Second tranche was not settled at that point, and then they wanted to conduct an audit. The audit process is advanced extremely well, I think nearing a closure. Unless the audit is fully completed and discussion deliberations are held internally in their board, etc., I don't think we'll be able to put any specific number, but we are fairly confident of a positive closure soon.
Okay. Just, before we let you go, can you give us some qualitative details on the MFI sector itself? I mean, we have noticed some pain in the MFI sector over the last 2 to 3 quarters. Do you think it could take some time before things recover there? And what are you looking at?
See, first quarter has been a bit of a heat wave, general election. So some of those may have impacted slightly. In some pockets, there has been flood issues. But yes, in some specific geographies like Maharashtra, Punjab, we are seeing stress building up, although our book size is fairly small in those geographies. Overall, I think all the companies in the MFI industry are actually putting some bit of additional guardrails to ensure that the portfolio quality does not deteriorate. We as a bank, we've been doing all of that for the last 5 quarters, and some of those are holding up extremely well for us. As I said, that we see slightly early signal in this quarter with DPD pool inching slightly upwards, but that's essentially in SMA 0 pool. But overall, we are not worried about the industry trend as of now. But yes, we are watchful and careful to make sure that we improve our collection efficiency from here on.
Got that. So on return on equity, could you guide us? What would you like this to be at? Came in at about 19% in the first quarter. Would you be able to maintain this around these levels from here on because of the improvement that you're guiding for?
So I think depending on how the overall market, the NIM, all of that holds up over the next few quarters, I think we are fairly confident of staying in the range of 16 to 18%. And maybe on the positive side, as you progress, depending on how our growth and some of the slippages, we are able to hold it at that levels.
Okay, all right. We'll leave it there, Mr. Kumar Kesh. Appreciate you joining us here on CNBC TV18. Thank you very much. I mean, it's a name where there is interest. There has always been interest. Valuations are, you could say cheap. Of course, there have been issues at Bandhan Bank over the last many quarters. So we'll see if the market is willing to bet on the fact that maybe, they're coming out of their issues, Bandhan-specific issues that they've been facing. We'll take a quick commercial break here. Prakash Diwan, of course, is waiting by. So we'll talk more stocks with him on the other side. Stay tuned.
World, by some estimates, about 50 million visitors to Paris every year, spending about 30 billion euros just within Paris. So there's a lot of money in tourism for Paris, and this is only going to multiply the viewing and invite more tourists. It makes show sense and it makes money sense. And to that extent, France and Paris particularly are already a winner.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support
Okay, welcome back. There's 13 minutes to go for the pre-open session. Prakash is with 140-point higher start. Prakash, you know, PNB came out with numbers and numbers look pretty strong. By the way, I don't know if you heard the Bandhan management, but what does the PNB numbers do for the stock and for PSU banks as such? That's one. And second is Mankind. Stock sold off on Friday. A deal was, that BSV deal was announced, of course, Thursday evening. But there was a call later and the management is saying that the deal will be accretive starting FY28. It's a very large deal for Mankind. So just your thoughts on these two.
Let me take the Mankind question first, because I know that was quite a disappointment. You know, this deal was kind of anticipated to help Mankind broaden its portfolio in that sense, because it's very, very strong in certain segments, but then the segments are very restricted. However, you know, what the management is probably trying to do is they're trying to manage expectations by saying this is going to take a much longer time to do it. So, you know, in that process, what's going to happen is your ROC is going to be completely compressed. And whenever that happens, you know, the stock will never be able to, you know, respond very favorably till people start seeing some sort of improvement there. So I would watch on a, if not quarterly basis, but at least half-yearly basis, what's happening on the deal in terms of, you know, the contribution it can make. So, you know, that's what. But on the ground, everybody's been talking about it quite favorably, Prashant. I must tell you, I don't know why the management sounded so cautious. So that's the take there. On PNB, I think, you know, the metrics do look good, especially the quality of assets, which has been a issue with PNB in the past. But I think they have departed from that and made a fresh, you know, move into growth-focused commentary as well. And this time around, the cost of funds, like everybody else, has impacted them. But they did indicate that they were likely to reduce that. So if that were to happen, probably you'll see some improvement continue. But yeah, decent set of numbers. What I would do based on these numbers is go ahead and buy SBI. You know, typically if PNB has been able to do that, which is usually at the, you know, far end of the cycle, you'll probably have some of the other banks doing much better. So a Canara Bank or a SBI would probably stand a better chance to get re-rated upwards. You'd probably look at something like that. But yes, numbers are good. And the last thing on Bandhan, I think it was very positive to see the body language, the conviction, the confidence that the new management is reflecting. There have been issues, of course, we all know. So the good news is the numbers are very decent from what they used to be, let's say about a year, 2 years back for Bandhan. So they're getting out of that history. But the not so good news is that this sector, especially the small loans and the MFI sector, is something which I feel is not in the best of health. Probably any trigger from a quality perspective could derail things. So I would be a bit cautious.
All right, Prakash, we'll leave it there. Thank you very much for your views. Always useful. Appreciate you joining us here on CNBC TV18. We'll take a break here. We are back. Mitesh and Sudarshan will be with us with technical trading ideas. Stay tuned. That's coming up.
Will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Our government will undertake a comprehensive review.
Welcome back. Hope you're having a good morning. Well, before the market opens, let's get in a couple of technical calls coming in there. We have Mitesh as well as Sudarshan who join in. Good morning, gentlemen. Mitesh, you go first. Tell us your approach to today's trading session and the levels you're tracking on the Nifty, given that we're likely to start off with a gain of more than 100 points.
Morning, Raj. I think the breakout happened on Friday, getting past those levels of 24,850. This suggests targets of around 25,400, 25,500 zone. I think that those levels could be visited in the next few days. So the idea is to be maintained long. You may not want to, if somebody wants to enter afresh, you may not want to chase the gap up, but post the gap up if you get a 30, 40, 50 point kind of an intraday decline. I think that would be a good entry point as well. And very clearly look for stocks which are breaking into fresh highs or breaking out of consolidation. So very clearly trade with a long bias. The worry is the bank Nifty, but that still looks slightly positive, though it's not making new highs or it's not even near its previous highs. But that could still, try and head towards 51,800. That's the first target. Or in a good case scenario, 52,200. So the overall bias should be on the upside.
Okay, overall bias should be on the upside clearly. Well, Sudarshan Sukhani is also with us. Sudarshan, it's such a remarkable market. I mean, anything and everything is not deterring this market from moving to record highs. And do you think that's something that can continue? And what are the levels to watch today?
Yeah, good morning, Sonia. Well, my thoughts mean nothing to the market. I thought we will consolidate, and we did a dramatic up move. So the market is giving a different message, and I think it's much wiser to follow that message. Lifetime new highs mean go and buy that index or stock. So the Nifty is a buying opportunity again, and there is no sense in even calling a top in the Nifty. It's not worth. Buy just as a matter of trading tactics, buy on a minor dip and keep a 150-point stop loss from your entry price. But with that, I would also suggest going long in the Bank Nifty. Both indices could surprise us.
Okay, so let's do one thing. Let's take a break. When we come back, we will talk about individual stocks. So Mitesh and Sudarshan, just stay on with us. Also, on the other side of the break, we will connect with the Dr. Reddy's management to discuss their Q1 numbers. Stay tuned.
Agricultural research set up to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure
Welcome back. We just have, I think, about 15 minutes left for the market to open for the day. We were in conversation with Sudarshan Sukhani and Mitesh Thakkar, so let's get to them. Gentlemen, I wanted individual stock ideas, right? So Sudarshan, let me toss it to you. Because a lot of large caps hit fresh highs, especially in the auto space, whether it's Tata Motors, M&M has been looking pretty good. ICICI Bank is expected to do well given good numbers. What are the stocks you're looking at today?
Well, it's an all buy list. I'll start with the names you suggested. I have also M&M in my buy list. So consider buying M&M, which is now willing to break from a significant consolidation. with a stop under 27.50. Ashok Leyland is a buy with a stop under 232. Apollo Tyres is a buy. There are so many buy opportunities in this market. Apollo Tyres is a buy with a stop under 525. And finally, since we have a short list here, Ramco Cement, there seems to be some talk about cement companies in general. So consider buying Ramco Cement with a stop under 790.
Gentlemen, morning. Mitesh, what about you? What are your trades?
Morning, Prashant. All buy lists for me as well. Ashok Leyland made a fresh swing high, so keep a stop at 242. Look for targets of 258. A consolidation breakout from Adani Ports. That's a buy with a stop at 1510 for targets of around 1615. Balkrishna Industries, the stock has been making newer highs. I think it's started another movement after a consolidation. So buy here with a stop at 3230 for targets of 3400. And Bharat Forge is a buy with a stop below 1660 for targets of 1740.
Yeah. Mitesh, just a quick word. Okay, I think we'll sort of put those questions to you in just a bit from now. But I think we have the Dr. Reddy's management with us.
In fact, we do. So, you know, that's the first stock that we're going to look at right now. For Q1, the company's revenues and margins were better than expectations as the US and the India business drove growth. Erez Israeli, the CEO of Dr. Reddy's Labs, is with us. Mr. Israeli, your US business did better this quarter. Can you tell us what exactly led to that growth and what is the way forward now?
Yeah, the US is now on a very healthy trajectory. We launched 3 products. We grew the base business. The generic Revlimid continued to contribute according to the contract. So most of it is a growth of the base products that we have in the United States.
Okay, all right, but give us some more color into it. What's the guidance in terms of growth for the US business? How much will the key products contribute?
We believe that the growth will continue its momentum also in the next coming quarters. We do have 18 to 20 products for the year, in addition to the increase of market shares and generic Revlimid. This more than will offset future price erosion that may come. So far it looks very healthy also in the future.
So your India business did well too. What led to that growth? And can you give us a sense of, you know, the way things will shape up in the India business from here?
Yeah, it's a growth in our leading brands. We are investing a lot in India, and it's helped to grow the business after a lot of years of investment. India is a focus market for us, very important for us to grow and to become one of the leaders in India. In addition to that, we got the Sanofi vaccines that also helped us as we got the business, acquired it from Sanofi, including the sales force that come with it. So it's both organic as well as inorganic type of a growth.
Okay, all right. Now your margins came in better than expectations. What led to the growth and what's the guidance going forward?
We feel that 25% is not an outcome, it's more of a choice. It allows us to give enough as a total shareholder return, and in parallel to that, invest in our future. So the timing of the investment, timing of the revenues is not always in sync. So sometimes we'll be below this number, sometimes above this number. But overall, it allows us to invest in innovation, invest in consumer care, as well in our biologics, in addition to our generic business.
Okay, well, what is the guidance, Mr. Israeli? Will it be 25%? Will it be 28%? And what is the average that we can expect?
No, the average that we always maintain is the 25%. Because it's about timing of products, timing of investment, and stuff like that. So we are not sharpening the pencil on the day-to-day of the margin. It's more of the amount of money that we can share and put into the future, in either in sales and marketing, or in R&D, or in CapEx, or in acquisitions. And so we understand what is the magnitude of the opportunity, and accordingly we are adjusting our activities to go into the future. So the 25%, again, like I mentioned, is an outcome of those calculations. So the short question to answer, the long-term average will stay around the 25, and the ROC also the same.
So 25% without one-off opportunities like Revlimid?
The 25% is unrelated to a product or activity or a country. It's a choice that we want to have in order to know how much we want to invest in the future versus how much we want to give to the total shareholder return.
Okay, let's focus on basic numbers. Give us a guidance on revenue margin as well as profitability for the entire fiscal.
We will grow double digits in emerging markets.
Is that as a whole on the business, or how much will it grow?
As a whole, like I mentioned, we are always aiming for double digits, at least 25% EBITDA and 25% ROC. This will continue also in the future with fluctuation that may happen from a quarter to quarter.
So the recent acquisition of Nicotinell, when does it close and when will it add up in your P&L?
So we hope to close the deal sometimes in the around the Q4 of this calendar year, which means hopefully October, November, this time frame. And from that point of time, it will start to contribute to our P&L.
Okay, what will your M&A strategy be going forward post this acquisition?
We have a very healthy financial situation. We are working in 4 different spaces, the B2B generics, the branded markets, which is branded generics as well as innovation, in consumer care, in biologics. In all of them, we are planning to have a move. Primarily licensing products or getting access to the products or buying brands. That's a type of the activity that we do. We are discussing many deals. We also sign many deals, and that's what you should expect to see also in the future from us.
So in terms of a timeline, when can we expect another possible M&A this year itself?
We are looking for more. We have financial capacity to do more. When it will happen, whenever a deal can be signed, it's hard to predict. But obviously, once we are discussing all the time deals, small and big, and let's see what will happen.
Okay, what is your status on the GLP-1 drugs?
We are there, and we are planning to launch them once the patents will allow us to launch them.
Tell us more then, sir. What kind of opportunity are you looking at when it comes to GLP-1?
It's obviously a very, very big opportunity. We are planning to launch it. It's actually multiple products. Naturally, semaglutide is the biggest of them, but we are in all the peptides, in all the products that consist of the family of GLP-1, and we are planning to launch them in all the markets in the world. So for us, it's a very big opportunity.
So in Eli Lilly, are you in talks for a possible tie-up in India for their GLP-1 drug?
We do not have a relationship with the company. But like I mentioned, we are planning to have all the products that are related to GLP-1 in our portfolio. Our products, not somebody else's product.
Okay, thanks a lot for joining in. I appreciate your time here on CNBC TV18. Well, the market is all set to open in 5 minutes from now and looks like it's going to be a really solid opening. The Nifty is up already about 100 odd points. It's led by the Bank Nifty and, lots of big ups to the ICICI Bank stock because that one looks like it's going to open in the green. IndusInd Bank is also up despite not a great set of numbers coming in. NTPC had a very strong set of numbers, so that one is up about 2%. But Sudarshan, what is the big 9-10 call of the day?
I consider buying M&M with a stop under 27.50.
Okay, and Mitesh, what about you?
I'll go with the buy on Adani Ports.
Okay, all right. Mitesh, just a quick word on 2 names. Emphasis had a big pop on Friday. and management joined us and they sounded very optimistic. And the second is Paytm, which was up 10%.
See, Emphasis, it looks like a very strong candidate to be the latest stock which will clear the earlier highs and get into fresh highs. If you look back about a year and a half, in January of 22, we saw the stock make multiple highs around 3,200 on a weekly basis and not close above it. I think that's the first target I'm looking at. But I believe it will eventually cross above that and head towards levels of 4,000 plus. So extremely, extremely positive on Emphasis. Paytm, I'm not tracking, so difficult for me to comment.
Okay, all right. Paytm on your screen is about 0.75% higher, but we'll have market opening coming up in about 5 minutes or so. Nimesh is standing by with what are the standout brokerage reports he's found. Nimesh, morning.
Hi, morning, Prashant. Today's standard is an OMC, is a big upgrade coming in from UBS. So today they've upgraded IOC to buy and they've raised the target price on IOC to 210 versus 150 earlier. They've also upgraded HPCL to buy now with a target price of 445 versus 333 earlier. And on BPCL, well, they've retained a buy rating, but they've raised the target price there as well to 400 now versus 350. Now, a couple of reasons why they've upgraded OMCs today. One, they believe that the oil market is going to be tight till third quarter of this year, but after that, there's going to be an ease, so that will have an impact. OMCs will benefit from a shift from refining to marketing, and within that, HPCL will be the biggest beneficiary because the ratio is close to 2:2 versus for other OMCs where the ratio is 1:2. UBS has actually gone ahead and raised the EBITDA estimates for all the three OMCs between the 4% to 22%, and they believe that the risk reward is favorable at this valuation, and hence a big upgrade on all the three OMCs. But the biggest upgrade is on IOC and on HPCL.
Okay, thanks a lot for that. Nimesh, when Ultratech Cement, they last month had gone ahead and bought 23% approximately from Mr. Damani. And yesterday they went ahead and they bought the promoter stake as well. And now they've launched an open offer for around 390 rupees odd. What are the key 6 points that we should be tracking? One, valuation-wise, it's under around $110 per ton. That's to entice the current promoter and, in fact, try to pick up the remaining stake. The second point is the debt in the books. It's more than 2,000 crores odd, but it can come down substantially. How is that? They have land. On this channel itself, a few years ago, Mr. Srinivasan had mentioned, they've closed on 25,000 acres of land. They also have some shipping assets as well as interest in coal mines. So put that together, that's what could bring this debt down drastically. What does Ultratech Cement get, though? They get closer on 14.5 million tons, predominantly in South India. They'll also move past that 200 million tons capacity. And most important, they get access to limestone reserves, which is the key point in this entire deal. But Ultratech Cement, they'll have their hands full because the India Cement asset has been struggling. Debt in the books was mounting at more than 2,000 crores, so some way to reduce that. Utilization levels were in that vicinity of around 60 to 65%. And the EBITDA per ton for the last year was less than 175 rupees per ton. Stocks to tracks, neutral to positive for Ultratech as well as India Cement. Let's see what India Cement does from the high of the day. Knee-jerk reaction on the negative side for Ramco as well as Dalmia because now their dominance will be challenged. And positive rub-off on Orient, Mangalam as well as on Sagar Cement. For the industry, consolidation is good in the longer term. In the near term, there could be some pricing pressure.
All right. I think that's an interesting quick snapshot view of the deal and implications. SBI Card is also going to be in focus, I think, on the negative side. Sudarshan, morning.
Morning, Prashant. So SBI Card has reported earnings for Q1 and earnings were mixed. Headline numbers were in line, but operationally the numbers were weak. Gross NPA has risen 17% and net NPA was up 19%. And credit cost has risen both sequentially and year-on-year. And revolver rate, one of the main metrics of the company, was flat both sequentially and year-on-year. And all the brokerages remain negative on the stock. Bernstein has an underperformed call with a target of rupees 600 per share. It says earnings don't justify company's current valuation. Nomura has a reduced call with a target of rupees 625 per share. It says ROA and ROE have seen a contraction and credit cost and gross NPA have come in at 10 to 11 quarter highs and net card addition is at 12 quarter low. Jefferies has a hold call with it and target has cut to rupees 735 per share and CLSA has a hold call and target is cut to rupees 750 per share.
Okay. All right. Sudarshan, thanks very much for that. So those are individual stocks that you need to watch out for. There is so much, right? I mean, in terms of earnings reactions, keep an eye out on IEX as well. I think there was an investor meeting and there's an upgrade as well from IIFL this morning. There's, of course, earnings which have been reported, spillover from Friday. And we'll see for continuation in some of these names and brokerage calls, OMCs in focus and others as well. So just a couple of seconds to go and we'll have the start coming up on your screens. It's going to be all about individual stocks. So much to track. 100 points higher is where the pre-open left us with. So 120 higher, straight off the cuff. So 24,972 is where the Nifty is starting. Not very sort of far away from that 25,000 levels. Just about 50 odd points away, and then you're there. 122 higher. 377 odd points higher, 380 points higher on the Sensex, and there you've got about 81,726. Advance decline is pretty solid, 8:1 in favor of advances. Bank Nifty, which has been the weaker of the indices, it's also up about 0.75%. The IT index saw a big 2% rally on Friday, it's up 0.75%. But let's take it with specific earnings reactions and stocks. Sonia.
Oh, absolutely. And let's make some noise for this market, right? Almost at 25,000. I mean, 40 points away from the 25,000 mark on the Nifty. Who would have thought, after the kind of budget that we had, higher taxations that was announced, and the disappointment on the street, the market just bounced back in a big way, hitting record highs after record highs, and today turning out to be a terrific day of trade. Now, what is really topping the charts today is the Bank Nifty. It's up almost 400 points. IndusInd Bank, ICICI Bank are your top gainers. Infosys as well has been hitting new highs, so up about 1% there. TCS is at a fresh high as well, up about 1%. So today, both banks and IT are, making their presence felt. Bandhan Bank, by the way, is the big result reaction right now. 6% higher on Bandhan Bank, topping the charts over there. And the Nifty, by the way, just 40 points away from that, 25,000 mark. Indigo is the one that is, taking it on the chin this morning. Not a great opening to that stock. Of course, it's had a very, very strong rally. And there is a bit of pressure that we're seeing on Indigo's profitability. So the stock is down about 3% odd. But a couple of other names, apart from Bandhan Bank, City Union Bank is doing very well. Inox Wind is up 5.5%. PNB is up in the green. Go Digit, PC Jewelers, UCO Bank, and a couple of other names that are shining through this morning. So just keep an eye out on that. Plenty of stocks hitting fresh 52-week highs as well. Of course, with the market, it's such a high. India Cements, by the way, is at a fresh 52-week high. Ashok Leyland is at a 52-week high. Tata Motors, Apollo Tyres, Orient Cement at a fresh 52-week high. Infosys, we spoke about that earlier. Varun Beverages at a fresh 52-week high as well. ICICI Lombard, Tech Mahindra, Colgate, Affle India. A couple of other names as well, so very good opening there.
Well, that's right. A few stocks actually that are taking it on the chin. You have Intellect Design. The revenues came in lower by close to around 5% on a year-on-year basis. EBITDA margins as well did come down to around 20% odd. That compares to around 23%. So Intellect Design is taking a bit of a knock. Let's focus on the cement deal though. UltraTech Cement for starters, well, positive to neutral is what we said. So that stock has opened up in the green. Ramco, that's relatively underperforming today. That stock is more or less flat, sitting with a cut of close to around 0.5%, though they as well have laid out some guidance to reduce debt by close to around 1,000 crores by selling non-core assets. So Ramco is the underperformer, down close to around 0.5%. The other one is India Cements. Now, as I mentioned earlier today, that there's been massive delivery-based buying. And everyone in the last 1 month or so was expecting this deal to take place. So the high of the day is more than 385 rupees. The stock has come off the high point of the day. And now, in fact, the 390 rupee becomes a near-term peak, just in the near term. So, because valuation-wise, it's not very, very cheap. India Cements has come off a little bit from the top. The stock to track from here on is going to be Orient Cement. So let's pull up that stock, as well as Mangalam Cement. The street believes at some point of time, both those two get folded up as well. So that's why both those two are in focus. Genius Power came out with its set of numbers overnight, and in fact, over the weekend, and that stock as well is one of the top volume movers in today's trading session. So explains why that stock is up and about. Go Digit as well, up close to around 4.5%. So good move out there. Inox Wind is up more than 4%. Highlighting these stocks because they're some of the top volume movers, but the banking names, they're calling for special attention. City Union Bank, Bandhan Bank, Punjab and Sindh Bank, massive up moves on all those banks. Prashant.
Well, absolutely. And, you've got 100 points on the Nifty to show for it. So 24,941 is where we are at on the index. So 60 points away is the distance between where we are now and the 25,000 mark. Bandhan is an interesting mover, and we were highlighting this in the morning right after the interaction with the management. I mean, the worst behind, that's the question. That's the big question, because its valuations are undemanding. There have been problems, and that's the reason why valuations have been undemanding. But it's done well in this particular quarter. It's a 9% move on Bandhan. That's really is the stock of the day. and look at the volumes on it as well. 11 million shares on Bandhan Bank coming through. So that's a really big one. And of course, we were discussing PNB with Prakash as well, and what PNB numbers could do for the other sort of public sector banks. PNB is up. PNB is, by the way, the number 1 volume-led gainer. It's a 5% pop on PNB. Number 2 is Bandhan. Go Digit, which Nigel highlighted, is up 5.5%. Is the number 3 biggest volume-led gainer. Very unusual for Go Digit to show up with such volumes, but that is what you have. Orient Cement is up 6% as well. So there is a lot of buzz and talk around this one as well. 355 on Orient Cement. So that's the other sort of cement mover which is coming through. On the downside, Indigo is down 3%. So 4346. There is not a one-off, but there are there is a large non-operating income in the Indigo numbers, which I think is the reason why you're seeing a bit of a cut there. And Paytm, which was the big mover on Friday, is taking a bit of a backseat. Is the third largest volume-led loser. It's down 3% right now. So an SBI card, Sudarshan highlighted, 1.5% lower, at least on the word go. There is Chola Finance down 2.5%. Cyient is down 2%. Cyient numbers on Thursday evening were pretty poor. Stock reacted on Friday, but there is continued selling coming through there. And look at Spandana Spurti, 7% lower at about 653. So lots to track here, and we will continue to do that as we go along. Mahesh Padal is with us, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good to have you with us here. Good morning. Thanks for your time. On Friday, I looked at earnings which had come through till, the day before until Thursday, and earnings momentum seemed like it was slowing down quite a bit. Now we'll have to do a fresh exercise because so much has happened over the last 3 days. But what is your own sense across your research team, etc.? What are they telling you? How is the earnings season panning out so far?
Yeah, good morning, Prashant. So you're right. I think this quarter, even the previous quarter, we have seen the earnings momentum has slowed down. I think what has happened is that unlike in the past couple of years, 2-3 years, where we've seen that the bottom line growth was running faster than the top line growth because of margin improvement and some of the efficiency gains which were there. I think that has now kind of peaked out in a sense. So if you look at the top line growth is now tracking closely to your nominal GDP growth, right? And with the margin improvement behind us, the bulk of the gains because of the lower commodity prices what we had a couple of years back, we see now the earnings growth is now probably tracking closer to the top line growth. And in the top line also, there has been some slowdown. What we have seen in a few sectors in the consumer space, we've seen the numbers have been slightly lower. So all in all, I would say that clearly the growth momentum is now on the earnings front is looking at somewhere in the low teens, right, compared to the high teens number what we had seen in the last year. And that is pretty much likely to be the trend over there. And within those numbers, if you look at the largest sector like banking and financials, okay, there also the growth, the larger gains of last year where we saw the margin NIM improvement and the big benefit coming in from the credit cost. So that those are kind of a normalizing now, right? So that is one sector, okay, which is clearly seeing slower growth than what it was in the last fiscal year. Apart from that, I think IT, if you look at it, IT numbers, broadly, I think in line with expectations over there. In fact, IT is a sector which looks to have bottomed out, right? The commentary there suggests that you should see improvement in terms of growth going forward, though at a kind of a moderate pace. And then sectors like, for example, consumer staples, again, expected to be a weak quarter, okay, in terms of the top line growth. And that's what it is reflecting. Sectors like pharma and this thing are showing good numbers. Okay, so that's where we've seen some upgrades. The power sector, again, a good set of numbers over there. So I would say on balance, it's been a kind of a mixed numbers, but clearly the growth momentum is going on, which is on expected lines.
Mahesh, hi, good morning, and thanks for joining in. I want to ask you a little bit about one of the big story this week, which is the Ola Electric IPO that opens on Friday. Now, this is the first and one of the largest electric two-wheeler manufacturer in India that will be now listed on the exchanges. But this is a space that is, I mean, it's growing, but still companies like Ola are sitting on steep losses. So what are your thoughts on this electric two-wheeler space? Because we have listed players like TVS Motor and Bajaj Auto, which have done very well. Are you optimistic here, or would you start to get a bit cautious?
Yeah, so I think in any sector where there is a disruption which is there and the competitive landscape is kind of getting relayed over there in that sense, and that's what's happening in the electric two-wheeler space. So in that space, at that time, we would want to really evaluate and see, okay, which are the companies, okay, which will emerge winners in that space based on either the product in terms of cost competitiveness or the distribution side. I would say that jury there is still out over there in that sense. We're still not sure. I think the competition is also trying to gear up in terms of their new product portfolio. A couple of other players like Honda is still not there in the market. And it's going to be fiercely competitive than what it was, okay, in the ICE space where there were only 3 players who were dominating in that sense. So I think, and also because of the pricing over there, right? The costs, okay, where you will see the cost curve come down, especially on the battery front, but still, I think the costs are on the higher side, and the flame subsidy which is there, which is kind of supporting. But we don't know how long that will continue and what will be the quantum of that. So in this backdrop, I think we are slightly watching the space, not trying to jump and trying to pull out and say that these are the companies who will be the winners over here. We will still watch in terms of how this competitive landscape develops over here, and then try to take a call. And we have to be very clear that in next, at least not immediately, but in the next 2-3 years, the profitability for EV players, whether we see that at a reasonable level for us to really be positive on that space. But I think the existing players, I think with their strong balance sheets and cash flow, I think will be in a better position to be able to ride this kind of a place where the intensity is going to be slightly heightened.
Okay, so that is in the auto space. The other space I wanted your thoughts about was banking, because we've had a mixed bag of numbers actually, but ICICI Bank has been pretty good. Overall, how are you feeling about banks? Would you raise your allocation to the banks after what you've seen in this quarter's earnings?
The banks have underperformed. Okay, again, when the numbers have been fairly fine, I think it's more to do also because of the regulatory reasons. We have seen a couple of regulations coming in the last 6 months, which have kind of hurt in terms of the bank's ability to grow, I think, and also to some extent on the margin, the recent the LCR regulations, okay, which stipulates slightly tighter norms over there, which will also have some impact on the net interest margin. So I think overall in this space, clearly we are seeing the one challenge was about the deposit growth, I think, which continues to be there. We've seen some of the banks increase the deposit prices recently. But I think concurrent to that, I think you'll see the credit growth also probably lower than what we were expecting earlier in this fiscal year. So I think that's probably weighing down on the banks. But I think a lot of the negatives are pricing. I think the regulatory overreach, what we have seen in the last few months, I think that should be now behind us. So I think from here, from a valuation perspective, and also in terms of a kind of a moderate growth, I think banks after the recent underperformance, I think looks fairly okay to us. I mean, we're not overtly positive, but again, not too negative. I think kind of a neutral weight for us on the banking sector.
Okay. All right, Mahesh, we will let you go on that note. Thanks a lot for joining in and speaking to CNBC TV18. But just before we let you go, Mahesh, a quick word on the market as well, right? Just before we let you go, do you think that given we have a lot of big events that are out of the way, can we build on to these gains that we're seeing in the market?
So the markets have actually digested a lot of negative news, right? In the last few months, the election results, the budget also in a way was a slight disappointment in terms of the tax, okay, which was there. And despite that, we've seen the markets kind of bounce back. And also the earnings growth, as I said, momentum slowing down. So I think we are getting into a phase where a lot of, I think from a technical perspective, I would say that we're getting into a phase where the market is kind of getting into the phase where kind of a melt-up phase where it's more driven by liquidity and sentiment, which can take it probably still higher from here. But from a fundamental perspective, I would say that markets are kind of now entering in a zone where one needs to be a bit cautious. Nothing negative from a medium long-term perspective. I think underlying fundamentals are good, but one should be fairly cautious. And while the Nifty itself might do better, but the broader breadth of the market is where I would be slightly worried and would want to pare down risk over there, and that would be a prudent thing to do in this kind of a market. But I think stay invested for long-term investors. I think nothing to worry about. I think the long-term outlook remains stable, and the budget also gives macro stability in that sense. So I think, it can technically, I think, with the kind of liquid, it might still move up, but one would want to take some gains in stocks which have rallied too much and gone ahead of fundamentals at this point in time.
Okay, all right, Mahesh, appreciate you joining in. Thanks a lot for giving us a view in the markets. We look forward to chatting up with you soon and wishing you a good day ahead. Well, let's focus on one of the stocks of Friday, Shriram Finance. The street was impressed with the numbers that they delivered in the first quarter. To understand what went on in the past quarter, what's the way ahead, we have Mr. Umesh Revankar, the Executive Vice Chairman of Shriram Finance, who joins us on the show. Hi, Mr. Revankar, good morning and congratulations on a good set in the past quarter. But the street believes you're being very cautious with this mid-teen, 15% AUM growth guidance that you're giving. First quarter itself, you did much better than that, and most are penciling in a number of around 18-19%. Do you think that is in all probability gettable? And also the other positive is now the street believes that there's a lot of cross-selling opportunities. So your non-auto segment will grow as well. How do you see that shaping up?
Yeah, good morning. Yes, we were a little cautious because of election, 2 months of election, and normally during the election, the government machineries don't function fully. And many of the business activities, especially road transport and infrastructure, to some extent dependent on the government departments functioning. Therefore, we were a little cautious. But luckily for us, I should say, the entire election process was very smooth and it did not disturb. And it was also well spread. It never concentrated on any particular state for a very long time. That helped the entire economic activities to carry on without any kind of a disturbance. So the growth was normal for us in the sense, continuing with the last year's 20% AUM growth, we were able to grow, and the credit demand was quite good from the urban and the rural. At the same time, as you rightly said it, the other benefits which is accruing out of the merger, that is happening. Especially MSME, we are able to grow much faster, and we are able to add more branches for MSME lending activity. We have been very calibrated. We have been growing steadily on MSME because each of these geographies we need to understand, study, and grow the business. That's what we have been doing.
Mr. Revankar, but good morning, Prashant here. So Q1 was expected to be a little weaker. It's turned out to be stronger. I think you said in the call Q2 and H2 will be stronger than Q1. So would you want to take up your? The street is already penciling in 20%. Why not take it to 20%, sir?
See, H2 will be always better than H1. The Q2 will be a little unpredictable because of the monsoon impact. Even though excessive monsoon is there across the south, that is very good. And we are also witnessing same in coastal Maharashtra. These are all very good signs. But sometimes it can have some disruption, temporary disruption. The clear picture will emerge only towards the beginning of September for the Q2. But H2, when the monsoon is good, the H2 will be very, very comfortable. So I think the H2, we are very confident. On Q2, we'll be a little cautious, but still, as the opening, once the opening months are good, automatically things will roll out better in the subsequent month. We should be able to grow well for the rest of the financial year.
So, sir, can you give us a target? Your AUM growth is at 21%. What kind of growth are you looking at as we move into the end of FY25? Any targets that you have?
See, normally we don't put target on AUM growth. So what we do is we have a certain growth target depending upon which geography to grow and which are the product or segment to focus on. So we make it quarterly, and product mix is very important because certain product mix which we would like to grow faster, there we would like to focus more, especially on the Q2 or this part, the rest of the financial year, we would like to grow the gold loan portfolio because we feel that there's a good opportunity for us to grow that business. We'll be pushing for MSME growth further in new geographies. These are the targets, and the AUM, what comes out is overall, the growth numbers. So the idea is to improve or focus on bottom line. Bottom line is more important, and asset qualities are more important. These are the two we have targets to focus on. And on asset quality, we have improved 6 basis points Q on Q from 5.45 to 5.39. We would like to inch towards 5% by the end of the financial year. And as far as the credit cost is concerned, it is 1.89 compared to 1.97 last full financial year. So we would like to focus on these parameters rather than the overall growth. Growth will come depending upon the economic activity.
So gross NPAs, you said, will come down to around 5%, right? That's the goal.
Yes, yes.
And you're maintaining your AUM growth of close to around 15%, and you believe that NIMs will hover around these levels. Is that correct?
No, see, as you have seen faster growth in the first quarter,
yes,
the AUM growth will be a little more than 15. Definitely, it will be a little higher. But see, that's not a target for us. So I would like to say that focus will be more on asset quality and the credit cost.
Okay, and credit
and of course,
cost...
net interest margin.
Lovely. So net interest margins, Mr. Revankar, what should it hold at? If you could give us a number. Because of that product mix that you're talking about, the yields came down a little bit in the first quarter. So how do you see this pan out going ahead, the guidance on the NIMs? And credit cost, for the next couple of years, it should hover around this 2% mark?
Yeah, see, basically, as far as the net interest margin, if you compare Q on Q, there is a big improvement from 8.33 to 8.79. In the first quarter, especially what happens is the March month, normally we have higher focus or higher demand for new vehicle. And since the new vehicle lending is high in the February, March of the previous financial year, that gets impacted on the numbers of the Q1. And also, to some extent, the gold and the personal loan, there was some moderation in the growth because we are reworking on the strategy in the gold and personal loan. Because of some moderation was there, and because of that, the net interest margin was little lesser than the Q4. But if you compare with the Q1 last year, because this March new vehicle lending is year-on-year phenomena, then there is a substantial improvement from 8.33 to 8.79. So I feel the net interest margin will hover around this number, 8.8 to around 8.9. That range it will hover around. As far as the credit cost is concerned, yes, we would like to keep it less than 2 at any point of time. Last year, for the full financial year, it was 1.97. We would like to improve a little more on the same.
Okay, all right. Got that. We had a few other questions, but we leave it there for now. Appreciate you joining in with all of that perspective, Mr. Revankar. So more than 15%, but you're not putting a number to it. That's not the focus. Focus is on NIMs and credit costs, as you said, on the bottom line front. Thank you very much for being with us here on the program. Well, let's keep it with NBFCs. We have Cholamandalam Investment and Finance joining us. Disbursement growth was 21% on a year-on-year basis. AUMs also saw a healthy traction. Asset quality deteriorated in this quarter. Arun Selvan is President and CFO at Cholamandalam. He's with us right now. Mrs. Selvan, great to have you with us here. Thank you very much for joining us. So when you don't sort of miss on asset quality for many quarters, and then you have a quarter where there is a slight miss that becomes front and center. Could you explain what happened, sir? What caused the pain in Q1 with regards to credit costs and NPAs?
See, if you look at it pre-COVID, this is always the trend. In Q1, there will be a little bit of slippages, but then in Q2, it will hover at similar levels, and Q3, Q4, it will improve. We were better than the pre-COVID levels when we closed the financial year FY24. And from there, what we are seeing is a little bit of, slippage. A few basis points, it has come off. And NCL has also been higher, so that we provided for that. Most of these asset slippages has happened in stage 2 and a little bit in stage 3. We are confident that this will get pushed back by the end of Q3, Q4 this year.
So what would be, would you want to put a number to it? Where do you expect to see credit costs by the end of the year?
Yeah, Q3 you will see an improvement. Q2 we will certainly strive to make it better, but I would say that Q2 always tends to be a little bit of a poor quarter because of monsoons as well as inauspicious months, etc., which brings down economic activities a little bit, thereby reducing the earning potential of our customers. So we don't see a lot of rollbacks happening in Q2, but Q3, Q4 we should see them happening, especially in the context of better monsoon predictions. So the rural economy is expected to go up with also the elections results, favoring rural spend. So these things would augur well for us in the third and fourth quarter of this year.
So in terms of disbursement growth, what are we looking at? It's almost a 22% disbursement growth that you've seen in this quarter. What is the expectation for the full year FY25?
We would keep it in the similar range of 22 to 25%. We will have to see. If you recall, I've said we will be able to tell more clearly once we get over the Q2, because it reflects the monsoon's impact, and still we are dependent on monsoons. A large part of our book is still vehicle finance, which is rural based. So we will wait for it. Yes, we have been having a good traction. The good advantage is we are having multiple products, and even within the businesses, we have multiple sub-products, which helps us to scale up, scale down, depending on the growth in the economy of those specific segments. That's where we are able to push the 20 to 20% plus disbursements, and we are confident we will continue doing it and reach a 25% numbers of disbursement. Yes.
Okay, all right, Mr. Selvan, hi, good morning, and good to see you in as always. Give us your inputs on the rural market, because various sound bites are coming in that suggest there is still a lot of stress out there. What is your understanding, your analysis on ground?
So we are seeing reasonably good traction. Yes, it could be better, but it is still, the monsoon will have to comfortably settle in, and thereby sometimes excess monsoon also is a pain, so that shouldn't happen. So we should have the right levels of monsoon. MSP prices have been bettered, and rural housing subsidies has improved. These things augur well for us, especially in the home loan segment, where we are focusing on Tier 3, Tier 4 type of cities and village towns. So these are positives for us, and we look forward to having a better traction in these segments as we move forward in this year.
Okay, all right. And give us a couple of more numbers then. Rural is not in a very difficult spot going by what you're saying. Give us your sense in terms of NIMs, if you could give us a range on the guidance, and also your credit cost. Just want a number. What should it look like on an average for the year?
See, we stick to our original projection for the full year, which will be like the 7.8% on the NIM, and the credit cost would be in the range of around 1.2 to 1.3 or 1.35%, and ROTA to be in the range of around, pre-tax ROTA to be in the range of around 3.5%. We are working towards that. We are confident of achieving it as we move into the second half of this year. Yes, we had a little bit of a higher credit cost in first quarter, but that is always the trend if you go back pre-COVID levels. So.
Mr. Selvan, your cost of funds came down about 5 basis points on a quarter-on-quarter basis. Not just you, but one has been picking up that the RBI is getting a little worried about banks lending to NBFCs. Recently there was, of course, increase in risk weights on loans to NBFCs, but generally becoming a little more tighter, formally and informally. Could you tell us if what is happening there and what can we expect?
Yes, see, we have a large part of our borrowings coming from banks, but what we are doing is we generate a lot of priority sector assets, which has got a good appetite with banks, and the higher risk weightage don't apply when the banks do on lending towards priority sector assets. So we have been spared of that higher risk weightage, cost thereby, and there is a large amount of demand for priority sector assets, which we are capitalizing both by way of getting an on-lending sanctions from the bank as well as doing securitization. You have seen over the years the securitization book has increased substantially. Now it constitutes around 18 to 20% of our borrowings, and that's where we also focus on. Apart from that, we have also done ECBs at finer rates. We wait and get the better rates on a fully hedged basis, so that helps us to keep the cost down.
Mr. Selvan, could you tell us what is the proportion of bank lending in your overall mix? And X of priority sector on lending, which you described, how much is that? What is the dependence?
See, around 48% is our bank borrowings out of the total borrowings. Again, of which more than, I would say 66% of that would be priority sector borrowings from the banks.
Okay, got that. So overall for the commercial vehicle sector, what kind of growth are you looking at? Because, when we speak to large OEMs, we get a sense that there is about an 8% growth that the medium and heavy commercial vehicle sector has seen, 8 to 10%. You cater to that segment in a big way. So what kind of growth do you see? And between pockets, right, MHCVs, LCVs, intermediate commercial vehicles, where do you see maximum traction now?
See, we expect that in the current year, the growth would be more in the light commercials and the mini lights because we've seen the growth happening in heavies, and the heavies will slow down a bit in the current year is the sort of our internal view. That is where you are seeing that the manufacturers talk about lower growth because for them, heavies constitute a large part of the business. Fortunately, unfortunately for us, heavies don't really constitute a large part of our business, primarily because we can't compete with the fleet operators, with the banks who lend to the fleet operators because the yields are very fine there, especially in a regime where cost of funds is high. So our focus has been more on lights, mini lights. So that's been our stronghold, and we continue to, do a lot of business in this segment. We have also been focusing on the used business, especially in the used segment, which is the sub-10-year vehicles, which is where we saw a lot of traction because of the shift from BS4 to BS6, bringing in a lot of cost variance between the pricing of the new BS6 vehicle versus an old BS4 vehicle of a lower vintage. So we have been capitalizing this. Of course, we have also been growing on the passenger vehicle cars as well as in the two-wheelers. Here again, the focus for us has been more in the rural rather than in the urban, especially in the entry-level cars rather than high-end cars. So these have kept our engines growing, running better as compared to some other competition.
Okay. All right, Mr. Selvan, we'll leave it there. Good speaking with you, sir. Thank you very much. So a little bit of, a deterioration in asset quality in Q1, but should pick right back up. Q3, Q2, both Shriram Finance and Chola told us that because of rains, etc., it's a little uncertain, not as sure. But if rains continue to be as good, H2 perhaps would be much better. that it normally is the trend. So that's the word coming in from Chola Finance as well. So two of the largest NBFCs with earnings, and you heard both of them. You heard from both of them here. Well, Bandhan Bank is the stock of the day, and we discussed this in the morning. 11% move now. So more than anything else, it's a function of, improvement in Q1 combined with, very, very low valuations on this one. So that's a 20 rupee move on Bandhan Bank, 212. Of course, it's been a huge underperformer. PNB is up 6%. That's the other one, which of course is the biggest volume-led gainer on the NSE. And I do think it is sparking a bit of this is something we were talking about in the morning, sparking a bit of a move in the PSU bank space. Pull up the Nifty PSU bank index. I think if you go by sectoral indices, PSU banks are the biggest gainers across the board. So, 3% of the Nifty PSU bank index coming through right now. Maybe just look at some of the big gainers there. So I think UCO Bank, if you can have these names up, you'll be able to see what I'm talking about. UCO Bank is a big mover. Indian Overseas Bank is up about 5% or so. But these are not just these sort of two names, but many others which are sort of moving around as well. So lots happening. Market, of course, coming off a little bit on the Nifty. We got to about within 30 points distance of the 25,000 level. But since we've pulled back a little bit, and there is about an 80-point distance now. So 24,920 at this point. We'll take a quick commercial break here. We are back. The management of IDFC First is going to be joining in to talk about their numbers in just a bit. Stay with us.
Welcome back. We now continue with financial earnings, but the first of the banks is what we are analyzing. IDFC First Bank is on our radar. Company saw good growth in business momentum, excellent growth actually, both advances and deposits, but asset quality has given some jitters. Slippage ratio has risen to a 7-quarter high, and therefore it's not the biggest of the gainers today, but it has moved from red to green. Joining us now, Mr. V. Vaidyanathan, Managing Director and CEO of IDFC First Bank. Mr. Vaidyanathan, good morning and thank you very much for joining us. As always, congratulations for an excellent show in terms of growth of deposits and advances. Let me start with the deposits part itself. We saw the announcement of you dropping your savings deposit rate. What has that done to your cost of deposits? How much has it fallen? What is it quarter on quarter?
Basically, our deposits are coming very strong, as could see, like 39% year-on-year growth. And we don't need that much deposits anymore because now we're largely paid off all the past borrowings, the legacy borrowings, IDFC Limited. So that outstanding legacy, borrowings have come down. So now we need lesser deposits. So we brought down rates of interest. And in any case, we found that interest rates are not that sensitive in the early buckets. So we dropped it. We are very, very happy, brought it down to 3% just now.
Yeah, but for below 5 lakh, it is 3%. But below if you can, I mean, I don't know if you have it right away, but your cost of deposits will be very helpful if you can, if you have it readily.
Yeah. I can tell you cost of funds, if that's a good proxy. Our cost of funds right now is running 6.4%. and 6.45%. And and for the residual 10,000 crores which yet to pay back, if you pay them off, it will come to 6.36, which frankly is the lowest among the let me say mid-tier banks peer group. We're very happy that we're also raising 39%, also lowest in that mid-tier peer group.
Okay. No, you actually taken away my second question, which was when do the legacy, long-term and infrastructure bonds of IDFC run off? You're telling me that that advantage will accrue for the better part of FY25?
That's right. We have 10,000 crores more to pay. 10,000 crores to pay. 7,000 will come up this year and 3,000 next year.
Okay. Yeah, I can see that. Long-term bonds, I think, is 4129, and infrastructure bonds balance is 5306. So together you get a 10,000 crore runoff. Okay, now the Reserve Bank's new liquidity ratio is on the anvil. How much might that push up your cost of deposits?
About 2 to 3 basis points.
That's it. Because some people are calculating 10 bips, etc. For you, it would be that small, is it?
That's all it is. And I'll tell you the numbers so that people can reconcile the numbers. We think that at the new norms, we'll need about 10,000 crores of more deposits or more funding to keep the LCR around, say, let me say 115%, because at that level of conservative, hopefully that's a good number. And if you take a negative 70, 80 basis points on 10,000 crores, our impact is 70, 80 crores. For a large bank, 70, 80 crores is not that material. It'll just go through.
Okay. And what will that do anything to your margins? Can you give some guidance on margins?
I told you, 2-3 basis points. That's not materially moving the number.
No, not at all material, if it is only 2-3 basis points. I wanted to check this, and if you remember, we had the discussion last time as well. Your NIMs even otherwise are fairly high. It's at 6.2 or something, your NIMs? Yeah, on top of that, you have a cost of deposits of 6.4, you said, or cost of funds. So what is the average lending? It would be north of 13%, your average return on loans?
Well, Lata, this is your favorite question, by the way. So
yes.
I must answer
because there are slippages, people worry, and that's why I have to ask.
But I want to correct you on that first opening sentence you made. I need to correct you when you said slippage.
Sure.
7 quarter high or whatever. That's not correct, by the way. Please check your research. But the numbers are to just share with you that our credit cost, because end of the day it's credit cost, end of the day it's provisions. How much are you having to provide? Now, our number we have guided is 1.65%. And because of the joint liability group issue, which we'll come to if you're interested, but that is giving us 20 basis points because of Chennai floods. So 1.85% is best in class in this league of other institutions who are in the same space as ours, best in class. So I just want to share that with you, that even at a NIM of 6.3%, and we have fees of about 2%, let's call it 6.3 plus 2, that's maybe 8.3. And then we have credit cost of only 1.85. It's a very good bank coming up.
Okay. No, at the moment, your slippages, I think, rose by about 23%. Do you think this is a one-off? It will be more controlled in coming quarters?
I told you, because we haven't yet come to the discussion, but basically there were floods in Chennai, Tamil Nadu, and there was some impact. But fundamentally, I told you other numbers. Gross NPA is 1.9, net NPA is 0.5 or 0.6. Credit cost is guided, the numbers I told you. So they're all good.
Okay. So this 1.65 is the credit cost for the current quarter, or for the quarter gone by. What is the guidance?
Guidance is, 1.9 is the number for the quarter that gone by. We are expecting elevated credit cost in Q1 and Q2 because of the floods which I talked about. Q1 and Q2. Even the upcoming quarter, we're expecting elevated credit cost. So let everybody know so that everybody can expect it from us properly. But Q3, we expect to slow down. And Q4, we won't expect to have even lesser provisions. So this is how they play out because of the event of things.
Fine. Got that. Now, let me come to your ROA. You have targeted higher ROAs, but this quarter, obviously, it's slipped below 1. What is your guidance on ROA?
Our ROA this quarter slipped because I told you we had last quarter, same time, we had 30 crores of provisions for joint liability business growth.
Yes.
This year, we had close to 160 crores. So this is straight 130 crore extra provisions for that, Chennai flood, Tamil Nadu flood issue. So you can imagine this we've been hit by that. And
it is a one-off.
Part of cycles of managing the microfinance business. But coming back to ROA, so therefore, our ROA right now is like like stable at 1%, marginally above 1%, on a stable state basis. We think that in the next 2 years, by 2027, we should touch about 1.4%. That's the way we have done the modeling in the bank.
Okay. You have provided a very interesting and new welcome disclosure in terms of vintage loan performance analysis. Can you take us through that? The net takeaway for me was that now the quality of loans is even better than pre-COVID times. But can you explain?
Yes, actually, the background is that many analysts sometimes used to tell us that, look, your credit cost is looking so low. Ever since COVID, our credit cost the lowest, in that peer group of similar lines of businesses, or quite low. So people tell us, we don't know what 27 is going to look like. We don't know. I mean, how do we know what to look like? So we drew up a vintage chart. In the vintage analysis, just for benefit, what we do is that we evaluate a particular portfolio we booked, say, like pre-COVID, and then we vintage curve the delinquency of customers booked post-COVID, and then we check for like-to-like delinquency of 6 months on books. If that is X, what is it now? We are finding at every data point, 6 months on books, 9 months on books, 12 months on books, 15 months on books, every vintage curve, the bookings since post-COVID have materially lower than the past. So I believe Indian credit system has also maybe gotten that much more maybe conscious of credit. Yeah. I don't know, but our numbers are looking good, excluding the microfinance business.
No, that is an observation. If you remember, the CEA in the economic survey also said the twin balance sheets, which were an issue. Now, both corporates and banks have far cleaner balance sheets. Cost to income ratio, is there any guidance you can give on that? I mean, you have elevated levels, obviously, for legacy reasons, but they have been coming down. You can guide on that?
Yes, it's a very important question you asked, so I must explain. So, in the initial stage of the bank, we had close to about 78,000 crores of legacy bonds to pay and certificate of deposits. That's a very big number. So we had to raise deposits to pay that. And for that, we put up close to about 750 new branches, 1,100 new ATMs. Yes. It was expensive to do all that work. So all that cost to income ratio has now come down to 72%. It was 95%. Next 3 years, we think it will be 65%. And in this disclosure this time, Lata, we have given segment-wise 3-year picture of what the cost-income ratio will be and how they will add up. For example, just take one data point for you in the interest of time. On credit cards business, we were 240% 3 years ago. Then we touched 160%. Last year, 116%. This year, we expect to go inflection point. We want to go below 100%. And by FY27, it will be 75%. So by scale, it is coming down. And so people should expect from us cost-income ratio every year from now on, including this year, should come down in 25, 26, 27. You should expect it from us, and we will deliver.
Okay. No, there's no taking away from the credit that you and your bank deserve in terms of the number of branches you'll have increased. I think from 2018 to now, 3-fold or 4-fold increase in branches. That's no mean achievement.
Five-fold.
Okay.
Five-fold, and booked all the expenses and still brought down cost-income ratio.
That's very creditable. Let me, one more guidance. Apparently I have time. What's the expectation in terms of credit growth? Which verticals are going to fire for you?
Regulator has constantly been signaling growing the secured book because, want to go there. For us, frankly, both are behaving well, but we want to heed the regulator. Okay. And we also think it's good in the longer run for our bank. So we are building a gold loan business in a material way. 2 years ago, a year ago, it was 250 crores. Now it's just 1,000 crores. End of this year, we want to be 3,000 crores. So gold loan is a big one. We are growing our tractor financing for PSL purposes. We are growing the commercial vehicle business for PSL purposes. We are building Kisan credit card. So these are the 4 or 5 new businesses we launched, and we want to grow all of them.
Yeah, so you don't have to depend on our IDF. Very quickly, half a second. Any chance that you will tap the market? The market is in a giving mode now.
No. We are, our capital adequacy is 17% plus now. If you factor the latest money we're getting. So not at this point of time.
Well, there are lots of people who are tapping because it is giving and not because they need. But I take your point. You're comfortable on capital. Thank you very much, Mr. Vaidyanathan, for sparing time with us. And we'll invite you again for a more relaxed chat. Okay, so that's IDFC. The stock began in the red. The slippage issue was a bit of a worry, but now in flat terrain. Let's get our technical experts. Mitesh Thakkar joins us now. Mitesh, what's the call on the Nifty itself after the first hour of trading?
So, Lata, I think Nifty, I've suggested that once we get past 25,000, just psychologically important level, I think the extended targets possibly could be in the range of 25,400, 500. So, maintain longs. In fact, closer to about 24,900 could be a good entry point with a 50-point kind of a stop loss. And once we get past 25,000, long positions can be added on.
Okay.
And on the stock side as well.
Yeah.
Sorry.
No, go ahead. I want to ask you the stocks.
Yeah. On the stock side as well, I think we're trading with long buys. So DLF is breaking out today after a good sideways consolidation for last many weeks. So DLF is a buy. Keep a stop at 845. Look for targets of 900 to begin with. Maybe eventually higher levels can come in. And the other one is Oro Pharma, which is making new highs, showing continuation. So buy here with a stop below 1399 for targets of 1450.
Okay. Got that. Thank you very much, Mitesh. We'll touch base with you later in the day. For a moment, it's a quick break and then we will shift our focus to commodity markets.
To be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link, and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance.
Welcome back. Well, markets, of course, in fine terrain. I mean, stock markets, but giving up a bit. We thought we'd be reaching out to 25,000, but giving up a bit. Let's shift focus to commodity markets now. Manisha Gupta is waiting by. Manisha, you successfully crashed gold prices last week. What are you going to do this week?
Oh, well, that. I'm looking at copper right now, Lata, because in textbook, conversation numbers, we are now in a bearish territory for this one. And if it doesn't see a rebound from there, then we are looking at further declines onto this. So the copper prices have declined by 20 to 21% from its all-time highs that we saw in the month of May. For the month of July alone, the copper prices have declined by 7%, and we are currently trading at a 4-month lows in sense of prices there. I want to show you on what we've done in sense of numbers. So on LME, the all-time high was 11,100. We've seen 8,900 on the lower side. As of now, inching close to that 9,000 mark in the Asian space there. On CME, that is New York, we saw the prices hit an all-time high intraday at $5.19 a pound. It's trading at 4 right now. So it has been a considerable decline onto this one. When you look at the inventories, well, they have doubled up in last couple of years on LME, and that's exactly what we've seen happen in Shanghai as well. Actually, if you want to buy copper right now, it's available at a discount. So that is the kind of market this is. There is no demand at immediate physical markets there. Also, when you look at the Chinese numbers, well, China itself, in sense of the domestic demand, has been much on the weaker side. We've seen China, US, Europe, PMI numbers come in on the weaker side as well. So if the demand is not getting damaged further, it's not improving as well. So it's very stagnant as we see it right now, and that's impacting the prices there. Also, the record Chinese refined copper exports for the month of June have weighed in various international exchanges there. If you look at the overall markets, the street still believes that in the next 6 to 12 months, we still could be looking at higher prices going forward. Well, that's what funds also have done. So when you look at bearish prices, the net long positions on LME have seen a 60% decline. So there's winding up of positions as well that has seen decline come in for the prices. Going forward, the picture still looks quite on the bullish side, because when you look at the conventional sector, there's a 0.5% demand, 0.5% increase in demand growth that is anticipated. But it clearly is about renewables, grids, EVs, charging stations. That is where the major copper demand will come in the years to come. And that is a number that has been put out by the International Copper Study Group. They are anticipating that for the next 6 to 12 months, you could be looking at stronger copper prices. Citi, Bank of America, everybody believes that copper prices could be hitting all-time highs in 2025 as well. So strong demand estimates coming in for the long-term period there. For this week, though, you have important data as well coming in. It is going to be the inflation numbers from Australia, Bank of Japan monetary policy meeting. So immediate directions would come in from this.
Okay. Thank you very much for that, Manisha. Clearly some disinflation for the Indian core sector inflation as well. We take a break on that note. On the other side, we're going to continue with our earnings analysis. We connect with Mr. Atul Kumar Goel, Managing Director, CEO, Punjab National Bank, to discuss their Q1 earnings, which has clearly excited the street.
Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus.
Welcome back. We continue with earnings analysis and we focus now on Punjab National Bank, PNB, which reported a good performance in Q1. Actually, today, at the moment, PNB is the best performing banking stock, as you can see. Up 6%, profit is up 160%. And surprise, surprise, this is the only bank, I think, which has not reported a rise in slippages or in the slippage ratio. Joining us now is Mr. Atul Kumar Goel, the CEO and Managing Director of PNB. Mr. Goel, thank you very much indeed for joining us. Well, let me start with the slippage performance itself. What are you guiding by way of credit cost? Will you be able to maintain this impeccable slippage record, falling slippages at a time when others are reporting higher slippages?
Very good morning, Madam Lata. As far as asset quality of the bank is concerned, if you see the last 10 quarters, sequentially there is an improvement in each and every quarter. This time also, 1,755 is the slippage, which is the least in the last 10 quarters. And our guidance is that the slippage number will be less than 1%. Last time we have given the guidance that our gross NPA will be 5%, but we have already achieved 4.98% in the first quarter itself. So we are revising our guidance. Now the gross NPA will be less than 4% by the end of the financial year. Regarding the credit cost, we have given the guidance for the 1% in the last con call, but we are revising to 0.50% because this quarter, this credit cost has reduced to 0.33%. We are having always the 96% PCR, so there will not be any requirement for the aging provision, and recovery will be definitely double of the slippage. So we will see some time there will be reversal of the credit cost also, but very conservative. I am giving the guidance on the 0.50%.
Okay, that's amazing, and I guess that explains why the stock has gone from strength to strength. Let me come to the other big point which all banks are faced with, the loan to deposit ratio. The liquidity ratio will have to go up because of the new RBI rules, liquidity coverage ratio. What is the coverage for you now? And I think it's 125. What will be the extent to which you will have to increase your liquidity cover?
Lata, we have calculated, you are very much right, it is 125. By the new amendment, which the draft guidance is there, it will be 115%.
Okay. So will you choose to remain at 115 or will you still raise, you're more comfortable with 125? Would you be okay with 115? We will try
to increase 115, so we will see the other avenue where we can increase it also.
Okay. So you don't expect any impact on your margins because of this? What is your margin guidance?
Margin will not be impacted on account of this. Margin guidance we have given 2.9 to 3, and we are maintaining the same guidance. Although the first quarter, if you see, the domestic NIM was 3.23 and the global was 3.07.
Yeah, that's right. Your domestic NIM is above 3.2. Considering that you have so much strengths in terms of liquidity buffers, why are your advances growth so tepid? What kind of, 13.9 is, okay, better than the banking sector average, but would you be pushing it up?
Definitely, we are pushing the credit growth also, and we have given the guidance for the 11 to 12%. First quarter, it was 12 to 12.20%. So focus area for the RAM also, there is a good demand from now the rural and the tier 1 and tier 2 and the semi-urban cities also. So we are trying to push also because we are the one of the largest bank of the country and we are providing the corporate finance also. As of date, Lata, also around 1 trillion. The sanction limit is already available on the different stage under disbursement. Sometime in the NBG has cleared. So we are pushing it also, but definitely there should be demand also.
Oh, of course, there is that. Well, just before you came, 3 companies have announced huge capex orders. L&T announced some 5,000 crore of orders. NBCC has announced orders, and of course BHEL over the weekend announced a 10,000 crore order, so maybe orders will come. Let me come to the project finance new provisioning that Reserve Bank is pushing. Draft rules are out and probably the final rules will come in a few months. What can be the impact? You have been enjoying falling provisions. Will your provisions have to go up?
Definitely the draft guidelines, whatever first they have given the timeline also. Last time also I have given the number, the project financing around 64,000 crore rupees is as on date in our books also, out of which 50% is under implementation. So definitely whatever the draft guidelines is there, they are giving the time. So because our balance sheet is very strong nowadays, so additional provision requirement what we'll be having, we will be easily provide, no issue at all.
Okay, no, you will provide, but provisions are your trump card. Look at your, your operating profit year on year is up 10%, but your net profit is up 160%. The same thing was there last quarter also. Your operating profit was up, I think, to about 12%, but your profit went up, net profit went up 250% in the first quarter. That's largely because your year ago provisions were so high. That runs off, I think, in 2 quarters. You will have this advantage of high base provisions for what, 1 or 2 quarters more?
You are very much right, because as I told earlier also, 96% provision coverage is already there, and every quarter this credit cost will further reduce also. Even in the subsequent quarter, the net profit definitely we will increase, because last time we have given the guidance for the ROA around 0.8%, and we have given the guidance 1% will be the exit of the current financial year. Now I am of the view that not exit, we will be in a position to achieve this 1% before the exit also.
Okay, so what is the expectation that because of project finance, will there be an impact on the net profit growth or on your ROE in the coming, by the time the year is out?
And definitely, not only to my bank, the net profit will be impacted of all the banking industry also. The little bit cost of the funding will also be increased. So last time also, if you see on account of the increase, the RW and the NBFC also, there was an impact of the capital adequacy, but some of the, whatever the impact we have passed to the customer also. So in this case also, we will try to pass some of the cost to the customer also.
Okay. Well, the market is in a very good mood. Your stock itself is up 6% at this point in time because of your performance. Will there be any effort to do an OFS by the government, or will you be raising equity?
Equity, last time we have told 7,500 QIP, we have got the approval of the board as the shareholder, but since the profitability has increased, so we are reducing to 7,000 to 500 to 5,000 we will raise QIP in this current year. In addition to that, around 7,000 approval we are having for the 81 and 3,000 for the tier 2 also.
Okay, okay. And so no plans to raise capital now?
And not immediately, but 5,000 crore rupees is the plan for the raising QIP in this current financial year.
Okay. Have you heard anything at all about this expected credit loss rules? Now that all the bank balance sheets are in excellent shape, do you think it's coming, FY25 itself?
Last time also, madam, I told you we should wait for the final guidelines, because regulator will give the 5 years time also. And what is the ECL? ECL is the how the new underwriting is there. I will give one data for the comfort to all of you. Last 4 years, this is the data of the 48 month. We have sanctioned more than 8 trillion. Then this was more than 7.5 trillion. The outstanding around 6 trillion. This new underwriting with the NPA is allowed 2,200 plus, which is coming only 0.30% of the new underwriting. So what is ECL? Okay. ECL is the how you are behaving the new underwriting.
Okay. All right. Well, not, I guess you're best placed in terms of even taking the load of ECL, considering the way in which your bad loans are also coming down. Mr. Goyal, it was a pleasure speaking with you. Thank you very much indeed for joining us, and all the very best for the remaining part of the year.
Thank you.
Well, the market's at this point in time in a really celebratory mode, but most of the gains are coming actually in the Nifty Bank, and that's largely because of the bond performance. Maybe the 10-year bond should come up for you. There are various reasons why the Indian bond yields are falling, but today's fall to 6.92, which will be a fresh 2-year or maybe a 27-month low. We saw 6.92 on the 10-year, I think, before the Reserve Bank started cutting rates. So we are once again back to those levels, and that clearly is extremely positive. You must look at the 7.1. That's the one that is the voluminous traded 10-year bond, and that's at 6.92. That means huge mark-to-market gains for the banking sector, and in addition to the good results posted by banks like PNB and ICICI, you've seen the banking stocks doing very well, 1.2% gain on that index. But all eyes are on the Nifty, actually. One was hoping that it would make that stretch towards the 25,000 mark, but at the moment, it's shying away even from 24,900. So that is the only part which perhaps can be called a disappointment, but it's not very big. If it's not 25,000 now, it's sometime perhaps later this week. But that's a marquee performance. It's quite clearly been a bank's day. After sulking and underperforming for a better part of the week and perhaps the quarter, the banking sector, the banking index is finally out and performing there. Good show by ICICI and PNB, among other banks. Of course, indices disappointed a bit. But banking sector has seen a leg up primarily because of the mark-to-market gains on account of the yield performance, I think. And today that's showing up. With that, we wrap up on Bazaar, and maybe it will be the turn of Chartbusters to see whether we are any closer to 25,000.
Of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest in
The Indian market opens at fresh record highs. The Nifty is just a few points away from the 25,000 milestone. PSU banking and realty stocks, all of them lead the gains. The Nifty around 24,900 now.
Banking stocks like Bandhan as well as City Union Bank, both of them surge on the back of their quarterly numbers. Bandhan Bank's quarterly results beat estimate, while City Union's asset quality improves. Profit also rises 16% on a year-on-year basis.
Interglobe Aviation's shares dip on the back of the company's first quarter numbers. Despite reporting an increase in revenue, the net profit declined 12% year-on-year. Management tells CNBC TV18 they predict high single-digit numbers in Q2 in terms of capacity.
CNBC TV18 Newsbreak is confirmed. Ultratech acquires India Cements to cement its position as the key consolidator in the southern region. Both stocks trade higher on the back of this deal.
Biocon slips nearly 1.5% after the US FDA issues Form 483 with 10 observations at the company's Bengaluru facility.
Hello and welcome to Chartbusters. We kickstart a new week and we're continuing where we left off last week. The Nifty is higher in trade today. We're on the verge of moving towards the 25,000 odd mark, just around 80 to 90 points short. But what's telling you that we are in a raging bull market is the mid cap as well as the small cap index. Way more number of stocks advancing than declining. Hey Manglam.
Hi Nigel, just a bit of nervousness around 25,000, but that's just that. It's just some nervousness. Like, before you approach a person for any potential deal or any conversation or anything, you have a little bit of jitters, heebie-jeebies in your stomach, right? That's exactly what's happening with the market. No real worries. The move on Friday cemented the way the market's, trajectory is right now. The broader market's doing extremely well. The good part is the Nifty Bank is leading from the front today. And that is by virtue of ICICI Bank, which is the top contributor. HDFC Bank is a bit of an underperformer. But speaking about banks itself, J&K Bank, that's the stock on our radar, announced its first quarter results. The net profit has risen about 27%. But more importantly, what's the outlook for this year? We do have Baldev Prakash, who's the MD and CEO of the bank, coming in to discuss their earnings. Thanks a lot, sir, for joining in. It's a big up move that we're seeing on your stock price this morning. So let's get done with the basics first. If you could tell us, what it is that you're targeting in terms of loan growth for this year, what are your NIM projections for this year, and the cost of deposits, because all these have been problem points for the industry going forward. If you could give us a sense of what your targets are.
Thank you. So as far as the credit growth is concerned, our guidance was around 15%. We maintain that guidance. We will see that we achieve and surpass this number. Similarly, NIM, the guidance which we have given is 3.75 to 3.85. I think we are already at the upper band of this guidance at 3.86 this quarter. we will see that we will maintain this guidance going forward also in all the 3 quarters. As far as the credit, the cost of deposit is concerned, we are actually as per our guidance, we will maintain the cost of deposit around 4.6 to 4.7 going forward in these quarters also.
Okay, all right. Hi, Mr. Prakash. Good morning, and thanks a lot for joining in. Give us some more details then on the asset quality front. Could you tell us how do you see this panning out? I'm looking at annualized slippage ratio, and that's improved. It's come down to around 0.7%. On an average, where does this number settle at? And also, if you could tell us about the gross NPAs and net NPAs. I ask you this because there's a good improvement in the asset quality numbers.
So on a quarter-on-quarter basis, Nigel, you will see that we have done extremely well in the asset quality. And the good part is that we are having hardly any slippages. Well, 2 things which are working rightly for the bank is that the SOP for recovery is being meticulously followed by all the branches and all the controlling offices. And the second thing is that the quality of new loans, the new loans which are booked is extremely good. And because of that, there's no stress in the new book, and the old recoveries are coming. Going forward also, we have given a guidance of 3.5% of gross NPA. We are at 3.91 in this quarter. We are very confident that 3.5 will be surpassed.
All right, 3.5 on gross NPA will be surpassed from 3.9%. You know, one of the things that the street wanted some clarity on is the impact of these draft liquidity coverage ratio norms that have been, released by the RBI. One wanted to understand what exactly is the proportion of your deposits coming in through internet and mobile banking, and were these norms to be notified, what would be the impact on your LCR? What is it right now? How does it change?
So we have done internal calculations. So as of now, our LCR is 1.35, 135%. And the maximum impact will be up to 15%. So that means we are comfortably at 120%, which is much above the regulatory requirement. So as far as LCR is concerned, I think we are better placed.
Okay, all right. 135 to 120%, that could be the potential impact of these draft RBI norms. Also, sir, I missed the credit cost guidance number that you could give us.
So credit cost guidance number, I don't have the exact number right now, but whatever guidance we have given in the beginning of the year.
I think earlier, Mr. Prakash, earlier, I think you were talking about it being between 1 to 1.5%, and post-technical write-offs, you said that it will be even lower at around, I think, 70 bips or 80 bips.
So actually this quarter and in the earlier quarters also, we had hardly any credit cost. Going forward also during this year, it will be quite benign, below 1%, because of the recoveries which we are expecting in the already written off accounts.
What is the kind of recovery that you're expecting? Your restructured book is close to 1,750 crores. Just wanted to understand this year and the year after, what are the kind of recoveries that you're expecting?
So recoveries in the accounts which are old NPA accounts where the 100% provisioning has been done, and the restructured book is already, this book is performing well now. So whatever is left is fully provided for. So the recoveries which are coming in the old NPA accounts and the written off accounts, they are taking care of the provisioning right back.
No, so
because
what amount
cost is going down?
Right, and what amount of recoveries are you expecting this year and the year after?
So we have a book of around 4,000 crores in the technical write-off. We are expecting around, we have taken internal targets of around 350 to 400 crores. That we should be able to achieve it.
Okay, all right. Mr. Prakash, I'm looking at your total expenditure. That's gone up on a sequential basis by close to 11%. Could you explain this to us? What was the reason of a higher OPEX in the past quarter?
So that was mainly because of the depreciation we have booked one time for the software to enable the bank for declaring the dividend, which is one of the requirements. So as far as our overall OPEX is concerned, I think major contribution was of staff expenses, and that has been taken care in the last quarter also, and this quarter also. If you see, my staff expenses are aligned with the industry.
So going forward, what's the kind of cost to income ratio that you can guide the street for?
So cost to income ratio, we have done very well, 76 to 61.9 today in this quarter. And going forward, the immediate target is in the next quarter is below 60%. And I'm confident we will be reaching to around 56, 57 by end of this year.
Cost to income ratio comes down to 56, 57%, right?
Yes.
All right, Mr. Prakash, you know, the last few quarters when we have been speaking, you have been giving us guidance and more or less you have been achieving that, and it's reflected in the stock price as well. And I recall that I think towards the end of 2023, you all had gone ahead and raised some capital. I think you mentioned it will be good enough for the next few years. So any plans on raising more capital, or are you well placed?
So as far as equity capital is concerned, we are well placed, and depending upon some regulatory requirements or changes, we will try and raise only Tier 2 bonds. The decision will be taken in the third quarter.
All right. Thanks a lot, Mr. Prakash, for joining in and giving us the outlook for the company, maintaining your credit growth guidance of 15%, deposits of close to around 4.6 to 4.7% on a cost basis, NIMs in the range. You've maintained all your guidances, and more importantly, no much impact coming in from the draft norms by the RBI as well. The stock was doing well all since morning and now has moved to the high point of trade. With that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Today we have Anubhav Sahu joining with the stock.
We're talking about Himadri Specialty, which posted a 38% growth in volumes aided by specialty cover and black product lines. Now, sharp ramp up in recent quarters have brought the gross margin close to pre-COVID levels, though we think there is still a scope for margin improvement. Now, as the utilization has reached optimum level, company is also going through an expansion of 70,000 ton for specialty cover and black. This capacity would get operational by Q3 of fiscal 26. That said, stock is advisable for investors looking for a potential play in energy transition. Now, company continues to invest in startups working in the lithium-ion electrode material space. Further, it plans to produce 2 lakh tons of lithium iron phosphate cathode active material in phases over 5 to 6 years. In phase 1, company would add about 40,000 ton capacity, which would get operational by Q3 of fiscal year 27. While this certainly has a technological and execution risk, what works in favor for the company is years of R&D activities in this space. For the company is cash surplus, which provides fundraising scope to partly utilize it for about 1,500 CR capex in next 3 years. Now, as the valuation is rich, long-term investors can wait for a market-wide correction to add the exposure.
Right, with that, we'll take a short break. Come back on the other side. We have another management lined up for you. P.N. Vasudevan, the MD and CEO of Equitas Small Finance Bank, joins in to discuss the first quarter performance.
Always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles.
Welcome back. Well, the markets are holding with gains, but unfortunately, we have come off a little bit from the top. I think par for the course with the kind of rally that we've seen. The markets were on the verge of holding at around that 24,950 when we kickstart trade. But we've come off considerably actually in the last few minutes. What's holding up is L&T. That one's holding well in the green. But stocks that have come off the high point of the day, let's get a few of them up for you on the screen. I think the tech pack as well has come off. Tata Consumer, that's slipped a little bit. That's down closer around 2% as we speak. NTPC has done a bit of a U-turn. So pull up the intraday chart out there. Sun Pharma as well is down more than 1%. And bulk of that fall has happened in the last 25 minutes or so. Eicher Motors as well seems to have slipped a little bit in the last few minutes. But as promised, let's get straight to our next management. Equitas Small Finance Bank, they reported a weakish set of numbers in the first quarter. The lender's latest earnings spotted some disappointing results, with profits down on a year-on-year basis. Net interest margins as well declined a little bit. But to understand what went on in the past quarter, what's the way ahead from here on? Mr. P.N. Vasudevan, the MD and CEO of the company, joins us on the show. Hi, Mr. Vasudevan. Good morning and thanks a lot for joining in. Let's get a couple of basic numbers out. I think you're guiding for growth of around 25%. But a couple of brokerage notes, they are suggesting that it could be a little less than that. Are you confident you can do 25%? Point number one. And also the loan mix is changing a little bit. There is a declining share to the MFI share. And that in turn could be, asking for lower yields. So what does it mean in terms of margins going ahead?
Yeah. Good morning. So on the advances growth, yes, in the beginning of the year, we have guided for a 25% growth for the year. First quarter has been at around 17-18%. But for advances growth, we need also equivalent growth in the deposits. And on the deposit, we have been actually doing quite well. The first quarter saw a deposit growth of almost 33%. And the CASA after quite some time, we were able to actually hold on to the CASA levels for the first quarter compared to the last previous quarter. And our retail TD has done really well. Last year also that had done very well. And this year also, the first quarter, we had a TD growth almost at 50% over the previous year on year. So on the deposit side, we are very comfortable. And another very equally crucial thing is the CD ratio, which now, is the talk of the town. And we are now at a level of around just under 87%, which is a very comforting level. And so from a deposit CD ratio perspective, we are all ready for managing growth. Now coming to the advances side, even though the first quarter was lower at about 17%, we should still be able to see the bank reaching that 25% guided growth for the full year, because we have a range of products, and the first quarter is generally a seasonally weaker quarter. Subsequent quarters are generally better, and so we should still look at that 25% growth for the year to be delivered by the bank. Now you asked for the second question, which is on the NIM side.
Yes.
The effect of reduction of microfinance as a contribution of the total portfolio, and whether that will have an effect on the NIM and contract the NIM. The first quarter, we had about a 20 basis points drop in NIM. Almost 10 basis points was contributed by the CD ratio, which has been coming down over the last few quarters. But now we have reached a CD ratio at a very comfort level. So we should see the CD ratio being maintained from this quarter onwards around the same level. And so the 10 bips reduction of NIM because of that might not kind of repeat again. The second 10 bips reduction was largely contributed by the fact that microfinance contribution dipped to the overall portfolio. And there is some lot of effort in the system to try and see how do we make up for that. We have that MLAP, that's a micro loan against property, which is lending less than 7.5 lakh rupees against security, which is equally at the same level of NIM as microfinance. So there's been a more focus on that in the last 1 or 2 quarters, and going forward, we are hoping that that might actually be able to fill up that gap of microfinance from a secured perspective and still yielding at similar levels of NIM.
So MFI? So sir, MFI as a percentage of your portfolio, what is it and where do you see it stabilizing?
It's currently at 17%.
Yes.
And, over the rest of the year, it might drop down to anywhere around the 15% level. And because we plan to introduce our personal loan and credit card over the second half of the year, and the expectation is that the drop in microfinance will actually be largely taken up by personal loan and credit cards, which are generally at the similar NIM kind of contributory products. And then the MFI, which I mentioned earlier, that should also help in terms of holding on to the NIM.
Personal loans and credit cards over the second half of this year, that should be high-yielding assets. But, the one thing that we try to understand from you is your decision to apply for a universal banking license. That it is in the offing is something that you can always monitor from the way your provisions have moved. In the first quarter itself, you've taken it up all the way up to 70%. Your net NPAs have come down as well. So when are you likely to apply? When are you likely to, receive the confirmation for the same? And what does that then do to your overall numbers?
Yeah, so RBI had come to the guideline in the first quarter of conversion of SOB to universal bank. And while we are compliant with all the conditions that RBI has laid down in that scheme, the only thing which we are not compliant was the net NPA, which should be less than 1% for 2 previous years. Ours was about 1.15% or so. So the first quarter, the board took a decision that we will move the PCR from around 55-56% all the way to 70% at one shot. And that would then help us also bring the NNPA down to less than 1%, which has all been done. And so that now makes it comfortable from both the PCR and NNPA perspective. And we need to hold this for the next 2 years till March 26. And if you are able to hold it till March 26, then sometime in the calendar year 26 is when we should ideally be able to look at applying for the universal bank license. And if and when we do get that, there will be certain benefits that we definitely see, like the small finance being dropped from the name, the PSL target coming down from 75 to 40, and the capital adequacy going down from 15% to somewhere around 11%. These are the benefits. So basically, you can leverage maybe 1.5 to 2 times more because of capital adequacy going down. But from a business perspective, we got the AD1 license also recently from RBI, so that products of AD1 will get launched sometime in the second half of this year. So from a business perspective, even though we are a small finance bank, by and large, even after converting into a universal bank, our focus may still remain in the informal sector lending space on the lending side, because that's an area where we have created a large amount of capability over the last 15, 17 years. And we are very strong in that segment.
We take that point. Just a final question then before we let you go, sir. A lot of the people then believe that because you have to maintain your PCR at above 70%, net NPOs below 1% for the next 2 years at least, that may have a bearing on your return on assets. That is likely to fall from 2% to about 1.5%. If you could finally give us a guidance on that, and we'll leave you.
Yeah, so basically the question is the credit cost, which will be the impact on the ROA.
Both credit cost and ROA, yes.
Exactly. So on the credit cost side, we have earlier guided for a 1.25% credit cost for the full year. First quarter was 1.5%. If we remove that the one-time provision we made for the PCR, if you remove that, then on an ongoing basis, it would have been about 1.5% credit cost for the first quarter. The question is how much will that be for the remaining part of the year? The seasonally weak first quarter is behind us, so we should look for better performance on collections for the next rest of the year. But as we have mentioned in our con call, by end of second quarter, we should be able to come back with a much clearer guidance on the credit cost. And along with that, we will come with a guidance on the ROA also.
Okay, all right, Mr. Vasudevan. We look forward to chatting up with you as the quarter progresses. For the time being, we'll hold you to these numbers. Advanced growth of around 25%. You're sounding confident on asset quality. And we'll have to see things, how they progress with regard to the universal license. For the time being, we'll slip into a short break. Come back, continue our focus on markets and on individual stocks. Don't go anywhere.
become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC.
Welcome back. Well, the markets are holding around that 24,900 odd mark. One stock you should keep an eye out on is Vedanta, because, you know, a few months ago or a month or so ago, the promoter entity went ahead and sold some stake. Because of that, the free float has gone up, and there could be some MACI inflows that we expect in the second half of trade. So keep an eye out on that one. For the time being, though, we'll wrap up on this edition of Chartbusters. That's it from Mangla, myself, and the entire team that put this show together. You stay tuned. Trading Hour comes up next.
Most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh, my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
P&L impact, given that now to shore up this LCR, you'll deploy more money in your securities which are lower yielding rather than loans.
Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me is Surbhi Upadhyay, and it's a strong start to the week. And I think it's countdown 25,000 on the Nifty, right? We're at we were 65 points away. 24,935, and it's good to see follow-on buying because Friday we had that big monster rally. The Nifty moved up more than 400 points, and today we've added on another 100 points. Mid-caps are outperforming, and banks have come back into the action. Look at the banking Nifty, 850 points up.
And I guess that would be the most heartening part for a lot of people. And this is despite the fact that it's not like we've had blowout numbers. Of course, ICICI Bank's numbers were again solid, again a very strong showing from the bank without too many issues to speak of. But you've got others which have shown marginal hiccup in asset quality, for instance, or a little bit of a miss on profits. But despite that, you've got the banks bouncing back, and that's extremely good news for the market. And not just banks, you have a couple of very strong pillars that are working for the bulls today. So there's banks, there are stocks like L&T, there's Reliance that's lending support. And then you have some of the plays on the PSU side that are still working really well. I mean, look at stocks like BPCL, ONGC. These are still up and about. So largely speaking, the market seems to have plenty of legs. Of course, some of the high flyers from the pharma space from last week, they're cooling off. Remember Cipla, massive surge after what was a great quarter. So that's a stock that's cooling off a bit. But otherwise, it's bulls continuing to charge ahead.
Okay, in fact, let's get to the big story from last week, right? Mankind Pharma is all set to acquire 100% stake in Bharat Serums and Vaccines, BSV as we call it, from Advent International. And it's a big deal. The enterprise value is 13,600 crore rupees. This, remember, was a CNBC TV18 news break. With this acquisition, Mankind Pharma will now enter women's health and fertility drug market. To discuss this and more, we have with us Rajiv Juneja, MD and Vice Chairman, and we also have our in-house expert, Ekta.
Thanks very much for joining. Thanks very much for that, Rima. Well, Mr. Janeja, thank you very much for taking the time out and speaking with us, and congratulations on this acquisition. We did quiz you about this extensively just a couple of weeks ago, but nonetheless, just wanted to start by asking you about the funding of this deal. You know, it's around 13,000 crores plus in terms of enterprise value. How will the deal be funded from Mankind's end? What is the mix of equity, internal accruals and debt?
4,000 crore rupees would be coming from internal accruals by the end of the year when this deal will be finalized. And the rest would be a mix of debt and equity both. Majority would be debt and minority would be equity. I cannot just tell you how much that would be, but yes, that would be mixed back. It's a fantastic kind of a entity which we have acquired. We are very proud of it, and thank you so much for your wishes. We hope that we come up to everybody's expectations. We are very confident for that.
Okay. So just wanted to, understand this a bit further. So you have around 4,000 crores in terms of internal accruals right now, or cash on books. All of that will be deployed towards this acquisition.
So why not? For any enterprise like us, debt, we would always like to have less. Equity is very close to us. So we are supposed to be making a balance of it, squeeze out everything and give some kind of a pressure on ourselves only to perform even better. That's a way forward to make our dream kind of a company become successful.
Okay, so what would the debt component be up to? Because you just some time ago, you raised your borrowing limits to 12,500 odd crores. You mentioned that you'll probably not even, you look at equity to be the minimum in terms of this, funding of the deal. So what can be expected to go up to? Around 8,000 crores in terms of debt? Would that be a fair assumption that you'll probably take on your books, 8,000 to 9,000?
Try to understand that both Mankind and Bharat Serum both are cash generating entities. We generate quite a lot of money, every year. So whatever that cash would be there, we'll just deploy that for internal accrual. It can be 4,000, it can be a bit approximately plus minus. Apart from this, debt versus equity ratio will not be crossing 2 times. We have decided internally. So that would be like that only, just to keep it play safe, conservative. And I hope that in next 2 and 3 years' time, we'll be able to just become neutral to any debt.
Okay. Equities, 7,500 crores was what you had taken in terms of a board approval. You're saying that it's going to be as little as possible because you don't want to dilute stake. So around 1,000 to 2,000 crores, give us a figure or a range upwards that you would probably be working with, which would be a maximum comfort limit for Mankind.
Comfort limit would be minimum only. In the sense, it can be anything, 20%, 25%, 30%, not more than that, from the rest of the amount after giving this 4,000 crore rupees. So it will be, in the back, this will be a mixed bag. Majority debt, minority equity, we'll see at that time only.
Okay, all right. I think we'll quiz you about the mix closer to when you would, maybe probably a couple of weeks down. But the acquisition itself, we understand that, this acquisition has high entry barriers. It is in the women's health space, critical care, and that is going to bring a lot on the table. But there was some concern about the valuations. It's around 8 times EV to EBITDA, 8 times FY24 trailing sales, 28 times EV to EBITDA on a trailing FY24 basis. Can you give us a sense in terms of the justification or the rationale behind the valuations when it comes to this acquisition?
See, first of all, try to understand the philosophy of Mankind. Our strategies have always been very, very clear. We have articulated our strategies a number of times. The first basically is the bottom-up approach. That was the starting actually. And in this process, we were covering 4 lakh doctors. It was our way of creating some kind of entry barrier. And next was our OTC flavor, OTC products, just to make Mankind brand as a quite a substantial brand. And third was creating some kind of a chronic business that we were quite successful. The fourth was creating a specialized division that we did 5 years back from Mumbai. And the last was super specialty business. So this strategy from day one was absolutely clear. Now, coming back to your question, by the end of this year, this would be closing, right? If you see on the in year 26, our EV/EBITDA would be in the range of 17 to 18x. So we don't see, it's a expensive buying, it's a good buying because it has really added a lot of value, weightage to Mankind. It's not a branded generic kind of a thing. It's a company which has come with high entry barrier products, complex products, difficult to make products. Plus many other things are there. Like for example, many products are there which will be unlocking. It has a flavor of OTC. Lactair is one brand. Osopan once upon a time was a very big calcium brand, which is not. It's a lot of things are there. It's a combination of things. So when you want to buy a value asset, you end up paying the right price. It's not expensive price, in our own opinion. Plus, Mankind has always played a longer game. We never have ever thought anything in short term.
Okay. On the margins, BSV reported margins of 23%. I'm not talking about the adjusted at 28%. You closed FY24 with 25% margins. What are the blended margins based on the synergies that we can expect in the next 2 to 3 years? Where would the margins on a blended basis fall once the integration is complete?
If you just deduct one-offs, any which way you look at the Bharat Serum, their top line growth is more than Mankind. Their EBITDA margins are more than Mankind. In 21 to 24, their growth in EBITDA is 21%. Their EBITDA margin last year, if you just leave one off, would be approximately in the range of 27%. So any which way you look, it's attractive buying for us in terms of financial terms, in terms of having the kind of products, kind of R&D power they have got, which Mankind never had.
Okay. All right. Mr. Janeja, just a larger story about Mankind. You do have a consumer business which is quite popular in terms of its brands, but now you're looking very significantly and very closely at the chronic care segment in India. Give us a sense in terms of where Mankind would be. You crossed 10,000 crores in terms of revenue in the previous year. What is the larger picture for Mankind? Is it going to be a domestic focused company? Are you probably also going to look at entering the export market? Is the consumer business now going to become a very small aspect of the larger picture of Mankind, which is probably going to be a pure play pharmaceutical company now? What's the larger vision?
The larger vision has always been very, very clear that we want to institutionalize, first of all, Mankind. That's one thing. And apart from this, we'll always be domestic focused company, and time and again we have narrated whenever the question of export would be there, we will be interested to export something which is difficult to make, complex, with high entry barriers. And if you look at Bharat Serum's number of products, in number of cases, their products have no competition. One product I will specifically mention, that is anti-D, zero competition till 2028. They have a patent. Their antibiotics are nobody else really makes it. In one of the fastest growing market, which is infertility, they have 2 or 3 competitors. We should see Mankind going to those places where entry barriers are very high. And what's the meaning of that? Instead of having 10 competitors, 2, 3 competitors, or in some cases, no competition. Now comes the question of consumer side. In consumer side, we have hived off our consumer division because we're very confident that this will grow a lot. Who knows tomorrow that one of the products we have acquired from Bharat Serum, Lactair or Osopan, can be given to our consumer division. Time will tell us. But because these products have a consumer division kind of OTC, OTX kind of flavor. Why we have hived off consumer division? Because we want to bring right talent. We want to make it a very responsible company. Board should be different. So once you create that kind of a company where tough questions are being asked, we are challenging ourselves. We want to just make sure that right things are happening. And we are doing quite good in that as well. We launched the Praga News is doing fantastic. Manforce is good. And recently we have come in a one product, over news. I mean, because 78% would-be mothers don't know which are their most fertile days. We have some kind of a fascination for women products. Again, look at this Bharat Serum. How many products have come for the women's side? So not only now mankind would become number one in terms of gynec side, women healthcare side, we have some kind of, I'll say by default, it's happening.
Okay, all right, Mr. Juneja. We'll touch base with you closer towards the closure of the deal as well to get more clarity in terms of how exactly it's going to be funded and more questions there. Thank you very much for joining in and speaking with CNBC TV18.
Victor, thanks a lot.
Okay, Eka, thank you very much for taking this conversation forward. We need to slip into a very short break. We'll come back and discuss commodities with Manisha Gupta. Stay tuned.
Goes down, so there is a negative spread. So the NIM impact of mid-single digit and earnings impact of mid-single digit. While for PSU banks, the LCR is still going to be comfortable, but the margin impact and the sensitivity is relatively higher in terms of the EPS impact on their P&L. Even IDFC First Bank has relatively lower LCRs. PSU banks, they have been consuming excess liquidity and they have brought down LCR very dramatically by 15 to 20 percentage point in last 2 years. They are still higher than your private banks. Currently, private banks are around 120%, PSU banks are around 130-35%. That is how things stand today. Among the top 15 banks in India, IndusInd, IDFC First Bank and Federal Bank have relatively lower LCR compared to the peers, of course, much above the regulatory minimum of 100%. We estimate that the LCR, pro forma LCR can go down by anywhere from 10 to 20 percentage point and drive margin compression and earnings impact for the bank. So it's an incremental negative for the banking sector.
Our liquidity is for existing. We are very much comfortable. We are at the range of 135 to 140. That's the existing liquidity what we are maintaining it. What the guidelines yesterday our regulator has issued, we have assessed roughly in the morning, and it is impacting 10 to 11 basis points. I don't think that will have a problem for the Canara Bank, because even after doing all these things also we will be more than 120-125%. So I don't think it impacts our credit growth or CD ratio or anything.
Well, let's focus on the insurance space. And it appears that the bulls, well, they are back interested in the insurance companies, or at least they're looking to get insured, it seems so. Because in the last 1 month or so, if you look at it, well, the Nifty is up close to 4%, but these insurance companies are actually underperformed. They have come back into play. And in the past week, they're up anything between 10 to around 15%. What went so right? Well, let's put up a few factors.
Welcome back. Let's now talk about the commodities market. We have Manisha joining in. She's looking at silver this morning. Manisha, tell us what's the latest.
Well, we have seen prices decline for the last 2 or 3 weeks when it comes to the precious metal prices, and silver's decline has been sharper. If you look at the last 5 or 6 trading sessions, we've seen silver prices decline by 3%, and for the month of July, we're down by nearly 5% now. For 3 consecutive weeks, it has been a declining trend continuing for this one, as it has been the case with the other industrial metals as well, which have been declining. Well, weak industrial data and, more importantly, unwinding of the long positions by funds and money managers has been weighing onto the space as well. In the international markets, we've come off from $32 an ounce to below $28. For the Indian markets, we did see an all-time high of 95,700 rupees a kg, which has seen a decline to almost 82,000 right now. In the previous week, we did see prices decline 81, below 81 as well, with most charters telling you that this is slightly bearish as a trend that we've seen in silver, and a breach of 80,000 on the lower side also is a possibility. Well, India's import duty cut by 9% also has been weighing even more for the Indian markets right now. For this week, though, it is going to be important to watch out for the dollar on how that moves. You have Australia inflation numbers coming in, and then Bank of Japan monetary policy meeting where there is an expectation of an interest rate movement. These are some of the major cues that the street will watch out for.
Thank you very much for that. We will slip into a very short break on that note. On the other side, we'll also invite the management of TCI.
Have,
we actually have Vineet Agarwal with us on the show. Go ahead.
Okay. So, well, looking at numbers that TCI posted, we have Vineet Agarwal with us on the line. Let's just quickly run through the numbers before we get the conversation started. So, for the first quarter gone by, the revenue growth that TCI has put forth is around 10%. EBITDA is up by about 3%. The profit growth is around 11%. Small dip in margins, just about a 50 basis points dip. Margins have come in at 9.9%. This is, of course, a year-on-year comparison that we're doing right now. Mr. Agarwal, great to have you with us. Can you just start by outlining what the trends are like and, just take us through all the three segments? First quarter is done. We're practically, getting over the second quarter as well. Where do you see sluggishness and where do you think is the bulk of the growth going to come from this year?
Hi, always good to be here. Usually the first quarter is the weakest quarter because, typically after you're coming off from the March quarter, which is really, really good, things tend to slow down a little bit. We have, for example, in the automotive sector, there's a lot of stock that is still there, and that stock is not moving as fast as it should have. So there is a collection of that material that is happening. Simultaneously, in other sectors, so if I go division by division, freight business did reasonably well. However, the LTL business has not picked up as we expected because MSMEs are still not there yet. I think with the elections in the first quarter, things were a bit slow. There was a little bit of less buying, and also orders were not flowing through completely, as in money was not being transferred as much and flowing through the system. On the supply chain side, generally, things were good. We've acquired a lot of new contracts, especially in the automotive sector, as well as in the warehousing business. So both of them are looking very attractive. In the automotive sector, even though there are some companies that are stagnant in terms of sales, there are new companies that are coming up. For example, in the EV space, and there we are doing a lot of transportation for them, using both road as well as rail. The Seaways business did reasonably well, much more than expected. We had 2 ships that were in dry dock in the first quarter. Even then, freight rates have firmed up. Actually, what has happened is that with the Red Sea crisis and international freight rates moving up, some of those ships have actually moved out of the domestic sector into the international sector, which means that the domestic freight rates have firmed up. Simultaneously, bunker prices, that is the oil prices, have also firmed up. So that led to an increase in rates. We were able to keep up the voyages as we had in the previous year as well. So that has helped that business. Net, it has been a much better quarter than expected, and the guidance continues for 10 to 15 on the top line and 10 to 15% on the bottom line.
10 to 15% on the bottom line. I think in the last conversation you had spoken about 10 to 11%. So is there scope to push up margins all the way to 15%, or you're just giving a wide range?
Well, there are lots of uncertainties that always are in the marketplace, especially with the crises that are happening overseas. So that tends to affect the margins a little bit up and down. We are looking at positive territory, so I would be confident to say that 15% is more likely.
Okay, and even on the top line, do you think you will be able to push closer to 15%? Because last year you managed only a 7% growth, and Q1 has been 9%, so still not in double digits.
Yes, I think if you see the general trends that are there, typically in now onwards, we'll see festival season, really the stocking that starts happening now, whether it is the consumer sector, whether it's automotive, those will start playing out. Then we see the budget has been good in terms of the flow towards infrastructure spend will continue. So that trickle-down effect, which is a 3.5 times effect of any infrastructure spend, that should help as well, capital goods sector and the related sectors. Apart from that, there is hopefully by maybe with some with the monsoon season being good, we should see again a better pickup overall. So capacity expansion and private capex should also start coming in. So that means that we should definitely start looking at a higher growth rate for the quarter. We are directly linked to GDP growth as a logistics sector. So we feel that there will be definitely some pickup in the second half of the year.
Okay, so sounding fairly confident of maybe 15% growth rates at the top line and the bottom line level. Got that. Speaking of capex, what about your own plans? I think the earlier figure that you've shared is about 275 crores. Does that stand, and what's the progress?
Yes, the capex is about 375 crores for this fiscal. This included the acquisition of two ships, that's the order of two ships that we have just placed as of last week. These are two ships that will be ordered in China, and they will be delivered sometime in the year 2026. So some advance payment for that will happen as well. Simultaneously, we are also investing into trucks as well as warehousing space and, of course, containers and the like. So the 375 crores stands. I think we'll be around 350 to 375 crores this year.
So, Vineet, just a question. Since you're adding more capacity on the seaway side, you're getting these ships in. Say by the end of the year, what's the revenue mix that you would hope for? And I think more realistically, let's talk FY26, because that's the highest margin business, right? That's where margins go as high as 27, 28%.
So, well, this year's revenues for the seaways businesses will be almost the same as last year, or maybe slightly better. But we don't expect the capacity to come in, as I said, till 2026. So then definitely there is this is about a 20% expansion in capacity. But notwithstanding, we're also looking out for a second-hand ship. Since the markets are very hot right now globally for shipping vessels, we are still waiting to see for it to cool down a bit and then acquire another vessel in the next few months, hopefully. So if that happens, then capacity expansion by 2026 should be in excess of 30-40%. But also some ships will go out of service because they will get to the end of life. So 25% capacity expansion would definitely mean a 25 to 30% jump up in revenues by 2026 for this division.
Thank you, Vineet, for joining in. Now we'll get into that break. But on the other side, we'll discuss the big deal. Why is Ultratech Cement buzzing in trade? How are they planning to fund this big acquisition? That's the big news maker today. And we'll also talk about the upcoming IPO of Ola Electric.
Adverse regulation that came in the budget. One of the fears was that maybe, in fact, the taxation that they pay, that could be moved up a little bit. That didn't happen. The second factor was, in the last budget, we saw that traditional products, where the premium was more than 5 lakhs, it came under the tax net. Well, the fear was that even those below 5 lakhs premium, that as well could get caught up. So that didn't happen as well. And the third factor was, currently, if your ULIP premium is less than 2.5 lakh, well, it doesn't attract tax. The fear was that as well could have been brought under the net. And all those three didn't take place, so the street was happy. The other factor was that the impact of the surrender value. People were fearing that this could have an impact. Back of an envelope calculation told you that it won't have more than 1.5% to 2%. But nonetheless, that was a bit of an overhang on some of these companies. But the managements have indicated that they are trying various ways to wriggle out of this. And few factors that they have been talking about is that the agent's commission, well, instead of it being paid all upfront, it could be delayed. It could be paid in a bit of a staggered manner. And also they're looking to squeeze in maybe a clawback clause. So that's what could help them as well and mitigate the fall of the surrender value out there. The industry basically is coming together, and it appears they're looking to bargain with the agent's commission. The third factor is, if you look at the results, they're fairly good. Whether you look at the APA or the VNB, they were fairly good in the past quarter itself, though margins, the VNB margins did come in for some pressure. But now the street is calling for bottoming out of the VNB margins. How is that? ULIP as a percentage of the total mix, that had gone up drastically. Now the indications are it's hit peak and maybe in fact it'll pull back. Remember, ULIP margins are in fact relatively lower than the other products. So because of that, in fact, maybe bottoming out of VNB margins is something that the street is looking forward to. And finally, if you look at the valuations, if you look at the reverse, DCF, it implies that the street is now factoring in single-digit growth on the VNB. But maybe, in fact, it can grow in mid-teens or maybe high teens as well. If that's the case, then it has some valuation comfort. And even if you look at it on a price-to-EV basis, well, then, in fact, as well, it's not out of whack. It's more or less in line with the past averages. And some of them are, in fact, trading at a bit of a discount as well. So the short point is insurers, life insurance, they came back. And the bulls, they got insured, at least in the recent past.
It's perhaps too early to call it a full report card because it's not a full accounting of things. As you said, what we're basically trying to do is looking at how earnings expectations for FY25 have changed in the last 1 month for companies out of the NSE 200 list. And these are the top tracked, well-owned companies, liquid, large, mid companies. And you know, how many have seen upgrades to their full year estimates and how many have seen downgrades. So the reason I say it's not a full accounting, if it's not even half the accounting, is because only 70 have reported out of NSE 200 as of yesterday's close. But out of the 70 which have reported, I mean, I think the numbers are pretty, stark. 40 have seen EPS being downgraded. Only 18 have seen EPS numbers being upgraded. And mind you, out of these 18 companies also, you got lots of, I mean, about 4 or 5 of them where the upgrades are about 1%, 1.5%, small upgrades. So I'm counting for that as well.
Welcome back. The big story is that Ola Electric is finally going to be making its debut on the exchanges. Today, the price band is out, but the IPO opens on Friday, 2nd of August, and will close on the 6th. Remember, this is India's first pure-play EV two-wheeler, which will be getting listed on the stock exchanges. Sonia, take us through the key details, the financials.
So, this is the much-awaited IPO of 2024 and details are finally out. As you said, it's not only India's first pure-play EV two-wheeler maker, but it is also India's largest electric vehicle two-wheeler manufacturer that will be hitting Dalal Street in a couple of days from now. The IPO opens on the 2nd of August. It closes on the 6th of August. And this is, the Indian electric two-wheeler industry is expected to grow at a compounded growth rate of 11% to reach a size of $35 to $45 billion by FY28. That is what Ola has projected in their RHP. And hence, there's a lot of scope for this business to grow. Now, let's not forget that Ola Electric, although the revenues are growing very well, it is a loss-making company. For the last 3 years, the financials of which the company has shared in the RHP, Ola has posted losses and the losses have only, mounted. So as of FY24, they reported a loss of 1,584 crores. This compares to a loss of 1,472 crores. But let me take you through the details of the issue itself. The price band has been set at 72 to 76 rupees per share. The total IPO offering is 6,146 crores, out of which it is a fresh issue of 5,500 crores and an OFS of an offer for sale of 646 crores. Now, in this, the promoter Bhavish Agarwal is amongst the others which are selling their stake. There are also investors like SoftBank, Temasek, Matrix Partners that are selling in this IPO as well. Now, the company intends to utilize 1,600 crores of the net proceeds for investments in R&D as well as in capex. If you look at the financials, as I said, the revenue growth has been quite good. So the total income was about 5,240 crores in FY24. This compares to 2,780 crores in FY23 and just 456 crores in FY22. So it's been a big jump in revenues, while the losses have also piled up for the company. But Ola is very, very confident about the penetration of electric two-wheelers in the Indian auto industry. So they say that e-two-wheelers penetration is expected to expand from 5.4% currently to about 41 to 56% by FY28. That's the kind of penetration that they are looking at. If you look at the market share as well, right, Ola is far ahead of its other peers. Also considering that it's a pure play EV two-wheeler maker. Ola Electric has a market share of 46.2% as of June 2024 compared to its closest peer, which is TVS Motor at 17.5%, Bajaj at 11.3%, then followed by Ather, which was expected to pick up in a big way but did not, just 7.7% market share, and then Hero MotoCorp at 3.9%. So the big story, of course, is that this listing will take place it's expected around the 9th or 10th of August. The risk factor is that the losses have piled up, but the positive, the larger theme is the huge growth that we're looking at in the Indian electric two-wheeler industry.
I guess there'll be some scarcity premium also associated, right? Because there is
the first
no,
time you're getting a pure play
you
EV
get-
company, you know,
Exactly.
two-wheelers or four-wheelers, whatever. It's the first pure EV play that you have.
Yes.
So it'll be very interesting to see the market's reaction as well. Thank you very much, Sonia. Very helpful numbers and details over there, putting Ola Electric in perspective. Let's move on. The other big story, of course, happened over the weekend. Yesterday, to be more precise, Ultratech has clinched the deal to acquire India Cements to, of course, cement its position as a key consolidator in the southern region and, of course, just becoming larger and larger in size. The deal will be triggering an open offer for shareholders of India Cement at the deal price. Nisha is here with all of the details. Nisha, so it seems that the Aditya Birla Group's expansion spree continues.
That's right. It's a big competition that they have to counter, which has come in from the new entrants, Adani, a few years back. And therefore, Ultratech's bid to really create and preserve their numero uno position is making Aditya Birla Group quite aggressive on the deal street as well. And of course, given that they have monopolistic situation in a large part of the country, South India is going to be a playground for more consolidation. Talking about this particular transaction, well, after buying out a chunk of stake in India Cements from the investors, Radhakrishna Damani, the writing was on the wall that the acquisition is likely to happen because India Cements had been waiting with a gap of succession there for an acquisition for a long time with many contenders out there. But Aditya Birla Group has clinched this particular transaction by looking at buying out not just the promoter stake, but even the associates put together with over 32% stake for 3,954 crore rupees, which, remember, now puts a total chunk at above the majority controlling position of 55.5%. And this together is coming in at an acquisition cost of roughly 5,800 crore rupees. Add to that the mandatory open offer, which is going to be triggered at 390 rupees per share, and that could take the acquisition cost as per tendering in the open offer above probably 7,000 odd crore rupees, depending on how it's tendered. Now, the deal is likely to be closed along with the open offer and the regulatory approvals required. And here, CCI is unlikely to be any constraint given their position in the southern market, which is not that much. And therefore, it is likely in 6 months' time. Now, India Cements adds the capacity by about 14.45 million tons. Now, Jefferies has an important deal valuation, comment to make. They say that the blended EV per ton deal valuation at $110 per ton is a tad expensive. So that needs to be considered, but that's all for the competitive edge in the cement consolidation. And KM Birla is saying that he has accelerated the target of 200 million tons of capacity by FY27. Now, looking at the current situation, 154 million tons is Ultratech's total capacity, 200 on track at an accelerated pace. But very important to note here, and my biggest takeaway is that while build versus buy has been Ultratech's strategy, it has taken a clear turn with now acquisitions probably contributing a much larger amount in its capacity expansion in the last few years after the entry of another big conglomerate. And therefore, a series of acquisitions have taken place, and India Cements also adds to the might. But it won't stop here because South India is going to be a playground for Ultratech for more consolidation in future.
Thank you very much for that. And with the potential development in Andhra Pradesh, also investors are looking at South emerging as a big player, as a big market in terms of growing demand in the next 2 to 3 years. Though currently, pricing has been a bit subdued. Nisha, thank you very much for that. On the other side of this short break, we will invite the management of Embassy REIT to discuss their Q1 numbers.
Essentially, the list of companies which have seen the largest downgrades, I'm not putting out all of them, but Bank of Maharashtra, Paytm, which of course was a big mover, but for other reasons, JSW has seen full year 25 earnings being taken down 12%. There is Loris, a lot of tech companies, right? Coforge, Tata Elxsi, Tata Technologies have seen these downgrades. Tata Communication is another one which is down about earnings around 6%, marked down by the street. These are all from the sort of Bloomberg consensus estimates. Asian Paints, Dalmia Bharat, and SRF as well. As I said, total of 40, but the top ones there. Now, which are the companies which have seen upgrades? You'll find a lot of insurance companies here. So look at this: ICICI Pru, there is ICICI Lombard, SBI Life, HDFC Life. This is the cohort which has seen the maximum upgrades. There is asset management company HDFC AMC as well, which has seen about a 8% upgrade. Others, there is Suzlon, Kotak Bank, Canara Bank, and a BPCL out there. So 18 here, but of course I've not put all of them, but the top upgrades which are really coming through. I mean, markets continue to do very well, and I hope that as the earnings season proceeds and we get to the 50% mark, and then of course beyond that, you get more positive surprises because, at the end of the day, stocks, at least in the medium to long term, will return what earnings return. So you need earnings growth to pick up substantially. At least till now, from what we've seen, that has not been happening.
Well, in many respects, this is a landmark judgment. It was pronounced by a 9-judge bench. It's coming after 9,000 days of waiting. This first case was filed way back in 1999. What is the issue at the heart of it all? Well, the core issue that was being argued here before the apex court is that can the state governments prescribe a cess by their own legislative competency? Can a state government pass a law saying that, or basis the mineral output, a certain percentage has to be paid in the form of cess or tax? The answer is yes. An affirmative answer coming in from the apex court, the Supreme Court saying that yes, indeed, the states do have the legislative competency to go ahead and to pass such laws which provide for paying of cess. This is a burden that will fall on the miners. In terms of the impact, there are 4 aspects to consider. Number one, the impact on the miners themselves. There was a big question mark over payment of these cess, payment of these levies, of this tax to state governments. That has been answered. So that squarely falls on the shoulders of the miners. The Supreme Court has said that basis the mineral output, the state government can compute a cess that has to be paid by them. So a huge impact as far as miners are concerned. Speaking of the miners, who are the miners that were here before the apex court? The likes of Hindalco, Tata Steel, Ambuja Cement, ACC, all the big names were...
Welcome back. The countdown is on. The next milestone is just about 10 points away. 25,000 in striking distance. What a move for this market, and what a charge on the street by the bulls. Well, while we're looking at that timer and that clock, let's quickly get in one more conversation in. Embassy REIT came out with the Q1 report card as well. The company's revenue growth is about 2.3%. Profit after tax declined due to higher depreciation and finance costs. The occupancy remained at around 85% levels. Let's get in some more perspective. Arvind Maya, CEO of Embassy REIT, is with us. Mr. Maya, thanks for joining in. Let's start by looking at rentals, because I think the rent has gone up and your DPU growth is also very, very healthy. You're guiding for 7% for the whole year, but looking at the way this quarter has gone, Q1, could you be exceeding your guidance?
Good morning, everyone. So honestly, yeah, I think I want to start by saying that FY25 is a year of growth for us. What I mean by that is, one, of course, our overall portfolio has expanded to 51 million square feet. Our DPU is expected to grow by 7%. Our rentals have grown over the year. So overall, very positive. And Q1 started in line with our expectations. We did about 1.9 million square feet of lease up, and DPU has grown by 4%. Overall, we are sticking to our guidance. We are expected to grow anywhere from 7 to 8%. So that's where we expect to be during the course of the year.
You've also hiked your gross leasing guidance to 5.6 million square feet versus 5.4 million square feet earlier. Can you tell us the reason why?
Yeah, sure. So beginning of the year, we gave a leasing guidance of 5.4. That's gone up to 5.6, largely because of some early renewals during the quarter. But I think just to give a sense of overall market, it's important to say that of the 1.9 million square feet which we did this quarter, it's evenly balanced between pre-leasing, new lease up, as well as renewals. Also, an interesting statistics for this quarter is we did a pre-leasing of 0.9 million square feet, 0.6 committed and 0.3 growth option with one of a large tenant, where we are actually redeveloping one of our existing buildings in Manyata. What I mean by that is we're breaking down an existing building which is 0.3 million. We are constructing a new building which is 0.9 million by utilizing our FSI. So all of this adds to the growth in the coming years.
Okay. In terms of, the outlook going forward, is the change in taxation going to impact you in any way whatsoever, the long-term capital gains tax change that's happened in the budget?
It was very positive for our unit holders. Just taking a step back, it's been about 5 years since we as Embassy REIT did the first REIT listing. At that point in time, we were about 4,000 unit holders. As we speak now, we are about 110,000, which means there's a growing acceptance of REIT as an asset class. And one key aspect which we've been working with various government bodies as an industry is to classify our units as equity or equity-like. So we believe that this alignment of long-term capital gains to 12 months is a step in the right direction. What we now need is index inclusion of units in various Indian equity indices that will enable more liquidity in our stock and also increase more of our unit holders.
Arvind, a lot of the business decisions are made keeping 5-7 years, the long-term picture in mind. We're talking about FY25, but if you could give us the picture for the next 3 years, what are the projections that you have on the various parameters?
Sure. I think when you look at over the next 3 years, right, the portfolio growth comes into play very significantly. What I mean by that is we have close to 9 million square feet under construction as we speak. Why we are very bullish on this is because this is expected to add close to 1,000 crores to our net operating income over the next 4 years. But I want to give 3 important sub-statistics, if I can use that word, on this 9 million. First of all, 100% of this 9 million is being developed in our 2 core markets, which is Bangalore and Chennai. Secondly, 6 million of this is being developed in Embassy Manyata and Embassy Tech Village, which we believe are probably the 2 best assets in India. And lastly, about 5.7 million of this is being delivered in the next 2 years, and 70% of this is already pre-leased. What that means is more or less this growth is kind of confirmed. So this, under construction or organic growth for us is a very important lever over the next 3-4 years, coupled with the fact that we expect a 5% escalation, which is inbuilt into our contract year over year. And lastly, the growth in occupancy. Today, we are at 85% occupancy. We have guided to a 88% occupancy by end of the year. And we believe our target is to go to a pre-COVID occupancy of around 95% over the next couple of years. So a good pipeline of growth in our portfolio over the next 3 to 4 years.
All right, Arvind, a short chat today. Thank you for joining in and giving us some perspective, and good luck with the rest of the year. Well, with that, we will take a break. Look at that ticker. Just about 2-3 points to go. Let's take that break, come back, see where the Nifty is. And of course, we'll have the management of SL Propack also, EPAC Durables also with us.
State levy. That answer they've met with a disappointing answer from the apex court. That burden will now fall on the miners. In terms of the impact also on the state governments, let's bear in mind that mineral-bearing states, the likes of Odisha, Karnataka, Maharashtra, Rajasthan, Jharkhand, Chhattisgarh, MP, these are the larger states which bear these mines. These states are looking at thousands of crores of revenue coming in over the course of a mining lease. That's 2. Second, as far as the impact on the centre is concerned, this is a huge hit for the centre as well. The centre, bear in mind, has been arguing before the apex court that this power of taxation falls exclusively in the domain of the centre, that the states have no business levying this tax. They've been met with a disappointing answer as well. The centre's petition being disposed of by the apex court. So again, a big landmark judgment coming in from the apex court in terms of miners, pain coming in for them in the form of additional cess by way of state governments.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not
No,
not
there
an
are many
expectation?
areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are
so you're
the trinity which has to be taken care.
Welcome back. The eye remains on that 25,000 milestone, and not to forget, Asia is also on a very strong footing. Nikkei is up 2.5%, Hang Seng is up 1.8%. But even as we count down, let's invite EPAC Durables. They reported their numbers last week. Good set of numbers, very, very strong. 77% jump in the company's revenues. EBITDA too has seen a 76% increase on a year-on-year basis. Ajay Singhania joins in to talk more about the numbers. Ajay, morning. This is Rima here. Thank you very much for joining in. It's been a very, very strong quarter. And I remember in the last conversation, you spoke about how, last year Q1 was weak. So AC makers were sitting on a lot of inventory, which got cleared out from Q2 to Q4. And Q1 is when you see fresh demand production, manufacturing kicking in. So that's played out. But can you sustain this kind of growth over the subsequent, 3 quarters of this year? What is the visibility that you have? And can you give some numbers in terms of a guidance?
Sure. Thanks, Rima. I mean, definitely this has been an excellent quarter for the industry, and we've grown like 77%. And in terms of sustainability, yes, not only just next 3 quarters, we see a definite good growth in the market for the next 4 to 5 years. Definitely the market is poised. Currently, the brands are sitting on extremely low inventory. So definitely this momentum is going to continue over next 3 to 4 quarters, and beyond that next 3 to 4 years for sure. I don't need to repeat, but the level of penetration we have in the country for air conditions. So, I mean, this is just the beginning of it. We see excellent growth and demand, not only for air conditioners, but also the coming season looks to be very good for the small domestic appliances as well, the other business we are into. So, I mean, overall, yes, all the appliances are set to grow definitely on a good scale numbers this year.
You had forayed into new product categories like air coolers, etc., which you all started in January. Has that contributed, and what would the number be?
Yeah, so this being the first year, definitely we are in a stabilization phase. So we have done pretty good in Q1 because it was the first quarter we did good numbers. And then we are now adding newer customers, newer products for air coolers, as well as we are very excited to announce that our washing machine is on track. And Q3 is when we will see our washing machine in the market. So even on that front, we are very excited that it will give us good numbers, and we will see very good growth even in these the large home appliances we are entering into. So altogether, our strategy of growth, exceeding the market growth for AC, and then the diversification of product portfolio for air coolers and then washing machines, we are on track to achieve the numbers we have in mind.
Mr. Singhania, do you see any scope to push margins forward? I mean, obviously the top line growth has been very, very robust. You're around 6.5–7% margin. Now, depending on the customers you're dealing with and all the, the product portfolio you're looking at, even beyond ACs, what should we expect on the margin profile, say, over a one-year basis?
See, the overall EBITDA margins we achieved last year was close to 8.12%. And that's the kind of guidance we have, that we continue to maintain that at least 8% is the bare minimum we'll maintain for sure for this year and beyond. And then there is definitely room to expand with the kind of diversification we are looking at. So the product mix definitely will help us further boost our metal margin beyond 8%. But for 1 year, let's say, maintaining at 8% definitely is something we aspire to, because last quarter there were some challenges in commodities which went up, which is going to now settle down, and then the impact is also getting passed on in this quarter and onwards. So there will be recovery on the margin front.
And in terms of product mix, beyond ACs, which are the other products which typically fetch you higher margin where you're trying to grow?
See, the small domestic appliances definitely fetches us comparatively better margins, but then because of the ticket size, the impact obviously does not get reflected substantially in the balance sheet. But now that larger appliances we are getting into, like the coolers and washing machines, especially washing machine, we are entering with the fully automatic, which is a big ticket size product. And then we are looking at expanding the portfolio for the washing machines as well. So we have a complete lineup to begin with the fully automatic, and then semi-automatic, and then even going forward the front load. So that entire lineup, once it's rolled out, we will see the margin profile getting changed comparatively better.
Ajay, short conversation today, but we have so many earnings to pour over, and markets too are on a on a high. So thank you very much for joining in. We'll get into a break. We'll come back with more.
Two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unique talents and its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through a stadium. They will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people and no doubt visitors in the opening ceremony. It's not just for the select few who can somehow manage entry into a stadium, but there's more to this than that. Consider that the Olympics is the biggest sporting event in the world. The number of people who watch it's going to be such a showcase, such a show-off for Paris to the world. All of Paris will be on show. The stage along the 6-kilometer ride along the River Seine is going to take.
Welcome back. The Nifty is within kissing distance of 25,000, and today you have a charge of the banks that just cannot be ignored. Look at the Bank Nifty, 2% higher, and banks across market capitalization and across ownership, PSU, private sector, large cap, mid cap, small cap, everything in financials is just firing away. Of course, ICICI Bank really leading from the front over there with a 3% move after numbers, but SBI, even IndusInd Bank, in which some people can quibble and say that, maybe some, asset quality issues are showing up. None of that matters. Today is just all out buying. Axis Bank and so many others. Actually, even beyond the large cap banks, the likes of PNB 7%, Bandhan 11%, J&K Bank, Bank of India. It seems like banks are the big trade in town today, Rima.
Well, almost at that 1,000-point rally now for the Nifty Bank, and the Nifty still very, very close to 25,000, but not yet got there. We'll wait by to see how the second half of the trading session pans out. For now, it's a wrap on trading hour from the entire team. Thank you for watching.
Iconic landmarks of Paris, Notre Dame, the Louvre, and this is really going to be a presentation to the world. Consider also that Paris is perhaps the most visited city in the world. By some estimates, about 50 million visitors to Paris every year, spending about 30 billion euros just within Paris. So there's a lot of money in tourism for Paris, and this is only going to multiply the viewing and invite more tourists. It makes show sense and it makes money sense. And to that extent, France and Paris particularly are already a winner.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed.
Stocks see all-round gains with the Nifty index inching closer to the 25,000 milestone. Realty and capital goods lead the charge even as consumer goods and IT drag.
After buying 23% in India Cements, Ultratech now snaps up the shares of promoters and associates in India Cements to up its stake to 55% for nearly 4,000 crores. The move ups the ante in the India Cement sector.
Ola Electric Mobility looking to mop up about 5,500 crore rupees via a fresh issue of shares and an offer of 650 crore worth shares or offer of 646 crore shares in its IPO to be launched on August 2nd. The issue will test the market's appetite for the two-wheeler EV story.
Bandhan Bank climbs on a dip in slippages and a positive outlook, while PNB gains on maintaining its trend of improving credit quality, even as ICICI Bank manages to turn in a steady show despite the headwinds. Hello and welcome to a halftime report. I'm Ekta Batra. With me is Manglam Malu. Well, the big headline today is not earnings, but whether we're getting to 25,000 on the Nifty or not. Well, the low point of the day has been around 24,866. So even if we don't get to that 25,000 mark, just look at the kind of strength that we've seen for our markets today. Up around 0.6% at this point in time. We have the mid-cap index, which is up around 1% at this point. And the Bank Nifty is making a comeback as well with a gain of around 2% at this point. So all of the parameters are looking good, and let's see, it's set up for success as of now for the Nifty to probably hit that 25,000 mark.
Very, very close, Ekta. You know, it is just about 15 points away right now. Maybe a blink of an eye or maybe one big tick on, you know, a name like HDFC Bank or Reliance, for instance. Reliance actually is off the highs by about 40 basis points. So just pull up Reliance. The high on that stock has been close to around 3,055, and currently the stock is close to around 3,042. So 13-14 rupee on Reliance can easily take the Nifty to 25,000. The other one I'm looking at is HDFC Bank as well. Now that's been an underperformer of the Nifty Bank. The Nifty Bank is up around 2%, and HDFC Bank, its largest weight, is actually up just 0.2%. So to that extent, it will be a very important one to track. 17 points away from 25,000. Let's see whether we hit that today or not after a big 400-point move on Friday. We'll keep an eye out on all of this. So as we look at the Nifty, you get into this conversation that Shireen had with Sanjeev Goenka, Chairman, RP Sanjeev Goenka Group, telling the, telling Shireen Bhan that they intend to reach market cap of 2 lakh crore for the group in the next 30 months. He also discussed the overall group's growth outlook and how they plan to grow the PCBL and Firstsource businesses. Listen in.
For us, this is now a period where we are going to be investing significantly across our businesses in terms of research, in terms of capacities, in terms of growth. The last few years were a period of consolidation, of reinvention, of application development, but now all that is done, practically done. So it's now going to be very high on in terms of growth. So all our businesses will be expanding significantly. But the biggest expansion will be in the chemicals and the carbon black sector. But of course, every business is growing exponentially.
Before I get specifically to PCBL, because you said that that is going to be the growth engine in terms of expansion plans, but what would the group level capex be, for instance, over the next 12 to 18 months?
Over the next 12 to 18 months, we will be spending about 35,000 crores, and over the next 3 years, about 50,000 crores.
And what's the growth aspiration? You've now got a market cap of almost, what, $7 billion? What's the growth aspiration?
We touched 70,000 crores this morning, I'm told. And this is without taking our unlisted ventures. But over the next 30 months, 2 lakh crores.
2 lakh crores is the target that you're working with. Let's now talk about PCBL in specific. It is, of course, as you pointed out, the largest producer of carbon black in the country. I'm just taking a look at your financials. From 3,244 crores in FY20, you've gone up to 6,420 crores in FY24. There's been a margin expansion from 14% to about 16%. Your profit after tax has gone from 288 crores in FY20 to 491 crores. What's the ambition, what's the aspiration, both on growth as well as expansion for PCBL specifically?
So PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks, you make X%. In specialties, you make X plus so much. And that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries.
Okay.
We recently took over a company called Kinaltech in Australia, which has successfully tried this on a pilot scale. Now we will take them over and make it commercial. So it's a lot of things in chemicals and rubber blacks and specialty blacks. And from this level of profit, I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5
what
times growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
Let me now move from chemicals and move to talk about what's happening on the IT side with First Source. You've got a new CEO coming in September, Ritesh Idnani. You know, the guidance for FY25, a growth of between 10 to 13% and margin of 11 to 12%. How is this business shaping up for you? Again, what's the aspiration now as far as First Source is concerned? Since you are setting 5-year targets at this point in time, let me ask you what you hope to do with First Source.
I would actually expect profits, PAT, to grow about 2.5 times in the next 3 years. We've got our building blocks clear. We are expecting, what we've done is very simple Banya unlocks.
Cash flow and cash is king.
Cash flow and cash is king. So shift to high margin businesses, focus on costs, shift to expanding wallet share with existing customers, move to more and more higher margin businesses as opposed to lower margin businesses. We are acquiring as we go along. We've just in the process of completing an acquisition that we did in America recently, and the integration is just about happening. And that's a constant process. So to get into higher margin offerings, to become more and more relevant to our customers, to shift the onshore-offshore mix, to reduce attritions, to invest in people and quality of services, to invest in technology, to invest in analytics. So a lot is happening, and we are getting to growth rates which are not only aggressive but attractive. I can't speak much more about it, but at this point in time, we are very satisfied with what we have achieved. We have a new team, virtually a brand new team, and that team is beginning to deliver. And I see this delivery becoming stronger and stronger with each quarter. So where we were having, say, one major win in a year, we are now getting 2 wins a quarter.
Okay.
And these are major wins. And the target is to get to 3 wins a quarter.
Okay, that is Sanjeev Goenka laying out the plans. They are targeting a capex of around 50,000 odd crores over the next 3 years, and they've laid out a growth map for the company. Plan to spend around 35,000 crores in terms of capex just over the next 12 to 18 months. Talking about the various business plans there, we need to take a short break on that note, but we'll connect with Adish Patil, who's the CFO of Aarti Drugs, to discuss their Q1 performance. Stay tuned.
To support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government.
Welcome back. Well, 24,891 is currently where the Nifty is at. So let's see whether we get back to those levels closer towards 25,000. But let's get talking to a couple of companies then. Aarti Drugs is in focus. That stock is down around 2 to 3 odd %. It reported what was a weak performance this time. The company's margins contracted while the API revenue fell as well. To discuss this and the outlook going forward, we have Adish Patil, who's the CFO of Aarti Drugs, joining in. Adish, welcome to the show. Well, let's start with the revenue decline this time round. It's been quite significant and it's led by a decline in all of your segments: API, formulation, specialty, chemicals, intermediates. Tell us what took place, what resulted in the pressure.
Yeah, hi, good afternoon. So yes, this particular quarter, even the volumes were less. We were not expecting, actually we were rather expecting exports to pick up sooner, but it did not happen. I think the key reason remained the geopolitical tensions across the world, a lot of countries where we export to probably are still haven't got stabilized governments. A lot of elections are going on, because of which the government tenders are less, and in turn the API exports is little down. We saw, in fact, a lot of volume degrowth in exports this particular quarter, even though our gross contribution margins improved year on year as well as quarter on quarter. On the standalone basis, that is a major segment which we have, API and spec-in segment. But because of the lower operations, means you can say operating leverage was quite low, because of which the EBITDA margins got impacted quite severely this particular quarter.
All right, as we're speaking about that, just hold on to those thoughts, Adish, because we have numbers at the bottom of your screen. One coming in from Adani Wilmar, where there's been a sharp expansion in operating profits and understandably on the bottom line as well. Remember, from the last time, same quarter last time to now, there has been a big drop in oil prices as well, edible oil prices that is, and as a result of which we've seen a turnaround in the edible oil businesses of all these industry leaders. Adani Wilmar, of course, sells edible oil under the Fortune brand. We had numbers from Patanjali Foods as well, which showed a marked improvement in the operational performance of their oil business, and the stock understandably up about 6%. Speaking about that itself, Tata Chem also, the margins should be under pressure over the next couple of quarters, as there's been a sharp fall in soda ash prices, which necessarily is not particularly good, and which is why the stock has come off from the highs of trade as well. But let's continue, get back to our conversation with Adish. Adish, when it comes to FY25, the street is expecting an improvement in revenues as well as margins. What is the kind of revenue target that you have for this year? Volume target, if you could give that as well, rate variance, etc. And what are the kind of margins that you're gunning for on a full year basis?
Okay. So earlier, before starting this quarter, we were gunning for around, 14 to 15% kind of a volume growth. Unfortunately, because of the decline in the first quarter, the second quarter will just go in making up those lost volumes. And the second half of the year, we still feel that we will be able to post that kind of a volume growth. So on a composite level, we believe some high single-digit volume growth should be there for the entire year. Means we are depending on the greenfield project, which will be coming online soon.
Okay, all right. So second quarter is probably going to be weak as well. Just hold that thought, because there's all of a sudden been a sharp reversal which has taken place in the markets with the Nifty. In fact, hitting the red line now. It's down around 34 odd points. Maybe an intraday chart will tell you more in terms of what's taking place. Maybe there's profit booking which is taking place at the higher levels. But Bank Nifty, surprisingly, there's a huge reversal which is taking place, because it was up around 2 odd %. And currently the Bank Nifty is just about flattened out at this point in time. We also have the mid-cap index, which is relatively better at this point. It's up around 0.6%, but curious case of a fall which has taken place for the Nifty as well as the Bank Nifty as we speak.
This reeks of, basket selling. That is what typically happens, because Nifty, the July series, expiry took place last week. The Nifty Bank is, this Wednesday itself, 31st July, is the last trading day of this month. And the Nifty Bank has taken a 1,000-point downtick. You have HDFC Bank, ICICI Bank, Kotak Mahindra Bank, Axis Bank. So all of them falling in a similar manner. Typically, this happens when there is, one large sell order which has come in, and immediately after that selling is executed, we see a bit of a recovery as well. So, the market has seen some bit of recovery, of course, no way to the extent of the decline that we saw. But once that selling was executed, we've seen some recovery. The Nifty Bank is now about 100 points higher as against in the red just moments ago. So it's extremely volatile right now.
Yes, extremely volatile, but somebody taking profits off the table would not be completely unheard of in a market which has given such stupendous returns. So we need to put that into perspective as well. But nonetheless, the Bank Nifty is recovering now, so just about higher by around 126 odd points. We'll try to get to the bottom of what really took place just in the past couple of minutes and the sharp fall that we saw. But as you can see, even the mid-cap index is inching up. We have the Nifty, which is inching up a little bit as well from the low point. It's down only around 3.5. It's back in the green at this point. But remember, it's off the day's high, definitely. But Adish, just to continue our conversation, so you're saying that the second quarter is going to go in making up a lot of the volumes that you've managed to miss in Q1. But where does that leave you in terms of the FY25 guidance? Because the last time we spoke to you, you said that there could be a 10% top line growth despite a negative rate variance of 5 to 8%. And, you're also anticipating an improvement in margins. I'm assuming there could be a tweak to this.
Yes, definitely. So because we lost, we'll be not gaining that much volumes in the first half of the year. Though second half we'll be having 14-15, but on a composite level it will be around 7 to 9% volume growth. But at the same time, for the entire year, we also expect around 5 to 7% rate degrowth year on year. So probably that will leave us in the 4 to 6% range for growth in terms of value as far as top line is concerned.
Okay, so just about, can you repeat that? Total top line would be how much for the entire fiscal?
So on a value basis, we'll still target for around 5% in spite of the rate decline.
Okay, all right. And margins?
Margins on a yearly basis, probably about 13% EBITDA level. But as far as the last quarter is concerned, we would definitely like to go beyond 14% for at least the outgoing quarter.
Right. You have this 600 crore capex which has come on stream. So just wanted your thoughts on one, what more do you have in terms of capex plans for this year and the next? And what are typically the asset turns on capex in your industry? And because of this 600 crore coming in on stream, what's your aspirational revenue target, say, over the next couple of years?
Yeah, so at the full potential level, we should be going beyond 4,000 crores of turnover once we are able to achieve around 90% capacity utilization for the said projects. Having said that, current year we are also spending a lot on oncology product registrations, that is on the formulation side, which has a total peak potential of around 300 crores for our formulation products as well. And apart from that, we are also looking at further derivatives of certain expansions what we have done recently. So that will further increase our revenue in spec chem and intermediate segment.
Okay.
And by when does it reach 90%?
So we will target around 3 years, 3 financial years, so FY27 probably.
Okay. Your net debt was at around 564 crores at the end of FY24. What is your plan in terms of reduction? And do you probably have to take on a lot? Do you have to take on debt because of, say, working capital?
Yeah. So as far as the API industry is concerned, it is quite working capital intensive. Right now, we'll be sitting at around 575 CR of debt. The reason it has gone up a little bit is because of the term loans for the ongoing capex what we are doing, and also we have a little pile up in the raw material inventory which we can bring down, and our working capital can come down a little bit from these levels.
Okay, so what is the plan on reduction and what is the target on the debt?
So our debt to equity as of now, means as of June end, it was around 0.44. So our plan is that whenever we are doing capex, there will be certain quarters or years when there will be peak debt to equity, and our peak debt to equity should not go beyond 0.7, 0.8. That is our plan. But at the same time, we are getting our cost of debt is quite low. Even our working capital is around 7.5% or so. So that definitely improves the ROE. So we don't want to remove debt completely off the books, but we'll maintain it around 0.5, 0.6 debt to equity.
All right, just one word before we let you go. You said that you're looking to improve your working capital days by reducing inventory. What are they at right now, and what is your aspiration here?
Yeah, so we feel that around 30-40 CR can be easily reduced, and that is purely on the side of raw materials. Our raw material days have gone up slightly higher, and we can easily reduce that by around 10-15 days.
All right, Adish.
Okay, all right, Adish. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is the management of Aarti Drugs. they've reduced their FY25 guidance. Earlier, they were guiding for around 10% growth to around 5% growth. The negative variance would be around 5 to 7 odd %. And they are targeting volumes of around 5 to 7 odd %. So they're hoping for a recovery in terms of volumes going forward. Currently, the stock is under pressure. It's down around 3.5 odd %. Not done much this year either. We'll take a short break, but Rachna Vedya will join in with some trading calls on the other side. Stay tuned.
Will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil.
Welcome back. You're watching us here on Halftime Report. We're tracking the volatility of the market as we were, moving towards the 25,000 mark on the Nifty, led by the Nifty Bank. There was one fall, sharp swoop down of about 1,000 points on the Nifty Bank. Seemed like a case of basket selling, and from there on, it's made a bit of recovery. The Nifty Bank is now up around 300 points, but there was that bit of intraday basket that was sold. So we'll keep an eye out on how this pans out, because we are tracking the Nifty's journey to 25,000. What's interesting is it started on Friday itself. In July series, the Nifty was up 362 points. 2 days of the August series so far, the Nifty is up already close to around 450 points, and as we speak can go higher as well. For the Nifty Bank, this volatility can also be explained by the fact that the Nifty Bank July series expiry is actually day after tomorrow and not on Thursday as it happened with all the other frontline indices. That's because it happens on a Wednesday, and 31st July is still a working day. On the Nifty, 25,000 call writers are still very active, close to around 1 crore shares written on that. telling you that levels upwards of 25,000, 2550 could see some bit of profit taking. But at the lower level, 24,750 thereabouts is an extremely strong support, which is why we saw the market bounce back immediately from lower levels as well. 150 rupees in options for the 24,900 put. The one stock that I'm watching out for today is India Cements. After the huge open interest build up post the deal announcement that came by over the weekend, the stock may enter F&O ban. And remember, this is actually the last series for India Cements to be in F&O itself.
Okay, all right, Mangalam. Thanks very much for that. So that's the F&O update there. We have Rachna Vaidya who joins in to talk about the technicals of the market. Rachna, hi, welcome to the show. Well, what did you think of that sudden dip that we saw, which is now seems to be largely bought into? We have the Nifty, which is up around 28 odd points. It's still off the day's high, but nonetheless.
Yeah, good afternoon, and thanks for having me here. And as far as the recent dip is concerned, the sudden dip is concerned in Bank Nifty and Nifty, well, I believe it is playing exactly as per the charts. And if you see on the charts on the Bank Nifty, on the futures level, the level that it had just hit before a few minutes was exactly a resistance that had played out on the daily charts, which was 20 period average. And there was also a weekly resistance over there. So rightly so, that the prices have retraced from therein and are now moving towards the support. So just like every good thing that begins has to come to an end. So this was a kind of two-day move that we saw, and which has played out very well as per the charts, but now it has come to a halt because of the resistances in the path.
All right, take that point, Rachna. Thank you so much for joining in. Good to see you in. Rachna, of course, has co-written a couple of books with the late Ashwini Gujral as well. So, comes in with some technical, expertise of the technical side of the market. Individual stocks, give us some stock picks.
Yeah. As far as the individual names are concerned, especially at this point in time after the sharp fall, I would say the stock that we'll look at will be from a delivery perspective and not from the intraday perspective, because we had a very nice move in the most of the names in the intraday basis, which has already played out. So whatever we see now will be from delivery point of view, and one of them is PNB and the other is DLF, and we'll be talking about the futures of both of them. So as far as PNB is concerned, today it also has a tailwind of the news behind it, which was a very good result that it came out with. And the price action that we are seeing today is the first day of the move, and it has broken out of a downfalling trend line, and a reversal is just begun today. So I believe there is a lot of space on the upside which is yet to be covered. And as far as the futures of PNB hold the level of 123 on a closing basis, we could be very soon seeing this chart, or the price is going towards 140. So that would take a few days of time, but 140 is the level that we keep as a target. And as far as DLF is concerned, again, this is a sector also which is showing strength at this point in time. And as far as the price action of DLF is concerned, again, the same thing. It has come out of a downfalling trend line, and today is the first day of the move. So definitely we can see some follow through over here in the upcoming days. And as far as this counter holds on the level of 850 on the futures on closing basis, we could be seeing the charts moving towards 900. And once 900 is also taken out, then we could be seeing the chart move towards 940 as well. That will take a few days of time.
Okay, all right, Rachna. Thanks very much for joining in and taking us through all of those calls that you have. Well, for the mid-cap index, it's recovered to a gain of around almost 490 odd points. We have the Bank Nifty, which still has some way to go, so it's up around 0.5%, but there is buying coming into a couple of the heavyweights. So a couple of stocks which stand out are UPL, which is up 2.5%, L&T, Divi's Labs, which has had a great month, in fact, and the others including BPCL and State Bank of India. We'll take a short break, but up next, we'll be talking to the management of TTK Prestige to discuss their Q1 performance. Stay tuned.
₹3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance.
Welcome back. We have the management of TTK Prestige with us. The company reported a rather subdued set of numbers in the first quarter, led by weakness in the consumer sentiment, though we did see some traction in the cookware segment where the growth was about close to double digits itself. The stock lower by about 2%. The important part is what the recovery has been like in the second quarter and what the company aspires for this year. Venkatesh Vijayaraghavan, who is the MD designate and CEO of the company, joins us on the show. Thanks a lot, Venkatesh. Always a pleasure speaking with you. The last time we spoke was at your stint at CK. But, you know, let's talk about TTK here. What have you seen in terms of recovery, consumer sentiment recovery in the second quarter so far? And in light of that, what is it that you can guide for this year on the top line?
So as you could see, I think from a demand side, we see two contrasting perspectives today. We are very clearly seeing some part of the channel which are growing very fast. For example, our own exclusive stores, large format stores and e-commerce as a channel is growing significantly faster. We do see a signaling of demand generation and demand return back that's happening in the categories as you would see. However, the general trade, which is a large part of the industry today, is still to see a demand recovery, and that's one of the pressure points that we are seeing as we move forward. While we do believe that the industry is sort of bottomed out and it should go up from here, critical to this growth would be the demand generation that happens from rural and from the modern and from the general trade channels, which we are seeing a stress at this point of time. The good point, the silver lining, is that the alternate channels in terms of large format stores, exclusive stores, e-com as a channel, these have started growing very aggressively. And we do believe that as we move forward, this would probably help the industry at large and Prestige at large to grow faster.
Okay. All right. Mr. Venkatesh, your cookware segment did well. It was up around 10% this quarter. What was demand like within that particular category? And are you anticipating an increase in commodity prices to probably have an impact on the performance in Q2?
So commodity prices have been a little transient. There's been an increase in commodity prices and a softening as we move forward. We do see pressures of the commodity pricing in the short term. But however, in the long term, I think it would stabilize, and that should not be of concern as we move forward. In the short term, yes, there's been a stress on the pricing. The material pricing has been a concern, and we are addressing that through internal corrections as well as in terms of some of the actions that probably the industry would take as well. As far as the cookware industry is concerned, the cookware category is one of the categories which has a significant potential in terms of both penetration as well as in terms of premiumization. So amongst the categories we play, cookware is a category that we see very clearly an opportunity to premiumize, and that's playing out in the market as we see, and an opportunity to continuously keep increasing the penetration. So it's a game that probably would be played more aggressively as we move forward. Of course, it is seeing competitive intensity as well. While we've been present in all categories, a lot of peers have got into these new categories, and that's something that probably would be something to watch out for. But we do believe that cookware is a segment that would be driven by both penetration and premiumization as well.
All right. So could you give us a sense then, what is the kind of delta that we're looking at here for the entire year? What is the revenue growth that you're targeting? How much faster would the cookware segment grow? And in that itself, what will your portfolio mix be like? Because, at the premium end, you have competitors coming in, but you've also looked at introducing your mass brand as well, Judge, which will help you gain market share. So if you could give us some outlook on these metrics going forward.
So while I won't be able to look at specifics right now, but I think directionally what we do believe is that one, the industry starts bouncing back. Two, it is being led largely by the large format stores and e-commerce chains, as I told you. Therefore, we expect or we're dependent on rural and general trade to sort of bounce back. The signs of them are yet to mature, and we do believe that over a period of time, probably it should sort of start kicking in as well. As far as the categories are concerned, we are very strong in cookers and cookware, and we continue to remain market leaders, and we are accelerating growth in these categories. Appliance is one category where there's been huge competitive intensity, and we are not market leaders as yet, but with reasonable market shares. And we do believe that's an opportunity that we would accelerate with a combination of new products introduction and also scaling up our presence in some of the categories. So as a combination, you would see growth being driven by accelerated channel growth from specific channels. As the traditional channels start moderating, we should see the base effect coming for us better as a market leader, and an increased emphasis on premiumization in cookware and an accelerated growth from the appliances. That's the way I would see it happening. While I won't be very specific in terms of direction, I would positively look at growth as we move forward into the year.
Okay, all right, Mr. Venkatesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from TTK Prestige. That stock a bit subdued today, down around 2% odd. For the markets, well, there is a further recovery which is taking place. So we have the Nifty at around 24,876, Bank Nifty, which is up around 0.7%. We'll take a short break, but more stocks on the other side. Stay tuned.
Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and
Welcome back. Well, let's just talk about specific stocks now. We have Cipla, which is in focus. Remember that it reacted very well to its numbers on Friday, but today it's seeing some amount of profit taking. The management has indicated, very importantly, that $235 to $240 million would be a sustainable run rate for the US. Remember, this quarter it came in at $250 million, so they're expecting maybe some amount of come off, but it would still be a good amount of business that they would be generating from the US. Separately, the management has maintained its guidance for an FY25 EBITDA margin of 24.5% to 25.5%. So no real big surprises on the negative side, which have come in for Cipla, probably routine profit taking. Some brokerages such as Goldman have a sell with a target price of 1,400 rupees. Nomura is neutral. Antique also has a sell. So maybe there's some amount of, some amount of pressure on account of that. We'll do one thing. We'll take a break. But on the other side, Manisha Gupta will join in. She has the Union Food Secretary Sanjeev Chopra with her. Stay tuned.
Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both
Stellar recovery for the market. The Nifty Bank is now up 420 points. Remember, at one point it had gone into the red from a 1,000-point gain, so nearly 40% of those declines have been recovered. Let's see where we go from here. The Nifty once again inching closer towards that 24,900 mark itself. The mid-caps continuing to do well. Ultratech has moved to the high point of trade. Let's get you excerpts from our exclusive conversation with the Union Food Secretary. Manisha Gupta caught up with Sanjeev Chopra, who's the Secretary, Department of Food and Public Distribution, quizzed him on the food industry concerns around fund allocation and policy implementations on the union budget. Hear that conversation.
I don't think that kind of an impression is really correct, because from the times, let's say, of 2013-14, when the allocation for agriculture was about 15,000 crores, to the present position when we have agriculture and light sectors with a total allocation about 1.5 lakh crores, I think we've come a long way in the past 10 years in case allocation has risen so steeply. That just reflects the commitment of the government for the farm sector and for the farmers.
There have been concerns, of course, when you look at pulses and edible oil, the kind of import that we do, and inflation concerns have led to a lot of measures that the government took in last 6 or 18 months as well. Are we looking at now easing off from that? Do you see a situation where you think that the things are getting comfortable?
So we have a very institutionalized mechanism of monitoring the prices in the government, and every week these prices are reviewed by a committee of secretaries. And then later on, we also apprise the committee of ministers. So we are maintaining a close watch. As of now, the prices of the pulses, particularly tur and urad, so they are still in the red zone, and quite appreciably so. So we are watching the situation, and any easing of the restriction that have been imposed, or whether it is the pulses or whether it is wheat and rice or sugar, so they would be taken at an opportune time when the government feels that the position or the stability in the sector warrants a kind of restriction to be done away with.
How difficult is it balancing the farmers where you have promised double income? And we have seen a lot of work being done there because of the kind of increase we've seen in MSP. The other is the stakeholders, which includes of industry, exporters, importers, and then the consumers.
Oh, it's definitely very tough. It's not easy at all. It's a tightrope walk. We need to keep the interests of all the stakeholders, taking the sugar sector in particular, in case, let's say, we have the sugar mills who have their own interests. The consumers also want stable prices. The producers, the sugarcane farmers also would like increased FRP. So maintaining a balance between these interests, which are at times a little conflicting, is certainly requires some bit of tightrope walking.
I'm assuming you meet a lot of industry guys, and one thing that resonates from everywhere is a long-term, predictable, sustainable policy.
True, the policy, of course, has to be something that can be relied upon for the short to medium term, and the government has ensured, to the extent possible, that the policies that are brought about in terms of the various crops that the ministry deals with are kept at a level where there are no surprises which are just sprung on the industry. But having said that, let me also say that the government is also conscious that these surprises sometimes become inevitable, keeping in view the interests of the economy and keeping in view the interests of the 140 billion consumers of the country. 140 crore consumers of the country. I'm sorry.
So when we are looking at sugar now, and this is an area, as we were all talking, I mean, we were one of the leaders when it comes to Bio Alliance there, Ethanol Alliance. How are you looking at the push here? Because as you've been saying, I was hearing your speech, and water concerns and of course the price concerns, and the other grains are being part of this as well. Are we looking now to a roadmap which tells us on what can we expect in sense of ethanol blending? People have talked about flexi fuels, etc. So there's a lot on your plate right now, even just with this one sector.
True. So broadly, the picture is that in case we are now aspiring to have a 15% ethanol blending this year, and that is up from about 1.5% blending, which was there in 2013-14. So we really have come a long way, and I think globally it's accepted that India has done wonders in the ethanol blending program. And going forward, while the reliance was majorly on molasses-based feedstock, going forward, that kind of reliance would be there, but it will be tempered by an equal reliance on the grains, particularly maize. So we've seen this year, we've had a sharp jump in the ethanol that we got from maize. And going forward also, we expect that in the next 2 years or so, when we are looking at 20% blending, maybe half the ethanol would be coming from sugar and roughly half would be coming from grain.
Mr. Chopra, this is my final question. And if there are two things that are top of your mind right now when it comes to agriculture and food, what are they?
So agriculture, of course, the first major thing that we need to look at is the crop diversification, because of the ecological damages which are being caused by the selection of a particular monocropping, if I can call it that, particularly in the northern part of the country. So that is one thing that really is of concern to us. How do we change the cropping pattern in the country? And the second one, of course, is to how we can have more reliance, self-reliance in pulses and oilseeds.
Deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details, and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also, some of the donations you have made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs.
If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
A volatile afternoon session for the market today. Key indices recover from the day's low, even as 25,000 level for Nifty 50 remains elusive. Now, the bank Nifty are the big winners, while FMCG and IT dragged mid-caps outperform.
After buying a 23% stake in India Cements, Ultratech now snaps up shares of promoters and associates in the company to up its stake to 55% for nearly 4,000 crore rupees. The move ups the ante in the Indian cement sector.
Ola Electric Mobility is looking to mop up a hefty 5,500 crore rupees via fresh issue of shares and offers 646 crore rupees shares for sale in its IPO to be launched on August 2nd. The issue will test the market's appetite for the two-wheeler EV story.
Bandhan Bank climbs on a dip in slippages and a positive outlook, while PNB gains on maintaining its trend of improving credit quality, even as ICICI Bank manages to turn in a steady show despite the headwinds.
Sanjeev Goenka, the chair of the RP Sanjeev Goenka Group, tells CNBC TV18 that after a period of consolidation and reinvention, the group is back on the growth path with 50,000 crore rupees lined up to be spent over the next 3 years. Hello and welcome. You have tuned into Business Lunch on this Monday afternoon. I'm Nisha. With me as always is Hormaz. And Hormaz, what an eventful day in the market it has been. I would say it's a case of having a cold feet right at the conversion at 25,000 mark for Nifty 50. Just stopped short of that at a kissing distance, Nifty 50, and is down about 100 points from the highest point on the trading session. So a lot of profit booking it has caused this. And take a look at HDFC Bank, the big heavyweight. That particular chart mirrors what Nifty 50 had gone through, but another big boy, Reliance Industries, that one is still holding steady. If you really take a look at the overall market, Sensex gaining about 175 points at the moment. Bank Nifty far outperforming the key indices and is retaining 0.9% of gains, and mid-caps too about 1% gain. So it's only the Nifty 50 which needs that push for the 25,000 mark and making a record there. Advanced decline ratio, well, in favor of the advances, with the broader market really doing well. And really take a look at some of the PSUs like BPCL shining in trade. But lots more to talk about that, Hormaz.
There's a saying in Hindi, as they say, haath ko aaya, muh na laga. It was that kind of a day for the Nifty. Almost 24,999.8 was the high that it made the index, but then has reversed very sharply, as Nisha was highlighting, from the highs of the day. But there are certain pockets that are still continuing to do well. The oil marketing companies, BPCL, as Nisha mentioned, was having a good day. HPCL, Indian Oil also are having a good day, courtesy the upgrade that has come in from UBS. The railway PSUs are having a good day, say the likes of RITES, the shares of which are up 11% now. The board is going to meet on the 31st of this month to consider a bonus issue of shares. So that stock is doing very well for itself. 11% higher now is RITES, 741 on the stock. But the other big story that we focused on over the weekend was a confirmation of the CNBC TV18 news break, where Ultratech clinched the deal to acquire India Cements to cement its position as a key consolidator in the southern part of the country. The deal will now trigger an open offer for the shareholders of India Cements at the deal price. Now, Nisha, you've been tracking the contours of this deal. Tell us more.
The writing was on the wall, Hormaz, the moment they acquired over 20% stake from Radhakrishna Damani. So let's take a look at the contours of this transaction. So Ultratech has clinched the deal in India Cements by also getting the promoter stake and associate stake. That means that a controlling majority position of 55% stake at a total cost of about 5,800 crore rupees is what it has managed to get, and that will trigger an open offer which will be done at 390 rupees per share for India Cements. Now, considering that the open offer will be tendered, the cost of acquisition could rise above 7,000 odd crore rupees. At the moment, 55.5% stake at 5,800 crore rupees. Now, this is a big acquisition because remember that Ultratech has a large position in the northern and western regions, and because of CCI constraints, its ability to consolidate or buy out further in these regions is restricted, while South India is struggling with many standalone companies, and that's going to be the playground for further consolidation for this group. If you really look at the expansion spree for this company, Ultratech, which is preserving now, remember, its numero uno position as the largest cement producer in the country, and also giving a fight to the newer entrants and deep-pocketed Adani Group, which has been really growing with acquisition and consolidating its position. So really looking at the numbers, 154 million tons for Ultratech, 200 million tons is FY27 target for this particular company, and really to take a look at the organic and inorganic contribution by the end of this financial year, with the kind of aggression that Ultratech is now showing on consolidating its position. Now the contribution from inorganic expansion is likely to be higher for a company which has strategically been on build versus buy so far, but it's a competitive space, Hormaz.
It's a competitive space indeed, and the competition is only likely to intensify with this deal now. Thanks a lot, Nisha, for that update and for the news break as well. Now, N. Srinivasan, the Vice Chairman and Managing Director of India Cements, has assured employees of the company that their jobs and future would be secure under the Aditya Birla Group-owned Ultratech Cement. Jude Sanith is joining us with more. Jude, please tell us what N. Srinivasan had to say in his address.
Well, in what can only be described as an emotionally charged morning for 300-odd employees of India Cements, a visibly ailing N. Srinivasan spoke to them with some degree of difficulty, and this includes employees who are unit heads, plant heads and department heads, assuring them of quote-unquote policy continuity under the Aditya Birla Group. In fact, Srinivasan told these employees that he had himself spoken to the chairman of the Aditya Birla Group and said that careers at India Cements would not be affected, that there would in fact be no quote-unquote witch hunts, and that good employees would in fact be rewarded by Ultratech Cement. He also added that the transition from India Cements to Ultratech Cements would be smooth and solid, as if he were himself at the helm of affairs. In fact, in that address, N. Srinivasan also went on to reminisce some of the glory days of India Cements 40 years ago, from all the limestone exploration to discovery to actual manufacturing of cement, even reflecting on how far the company had come. He also seemed bullish on the cement market as such, even giving his employees a tip or two about wide availability of cement, especially in the north and northeast regions. But in conclusion, N. Srinivasan also urged his employees, now former employees, to continue working as hard as they would ever be doing, and also to ensure that the future continues to stay bright, even as he said that there was no reason to have doubts or to worry about their careers or their future, even adding that he will miss them in the times to come. So the fact is that N. Srinivasan himself has bid farewell to the N. Srinivasan era of India Cements. And what can we say? I guess the sun has set on one of the longest innings as far as cements is concerned, especially here in the south.
Thanks so much, Jude, for getting us that very important and critical details coming straight from Chennai. Jude reporting from there where N. Srinivasan is, where India Cements is based. It's end of an era, Hormaz, in all practical purposes for N. Srinivasan, who's been such a big figure in the cement industry down south there. Take a look at Ultratech share price. It is at the high point of the trading session, 1.85% up in trade at the current moment. Don't lose sight of the movement in that stock price. Now moving on, Power Grid reported a muted quarter and earnings were largely below the analysts' estimates. And the revenues came in at a little over 10,000 crore rupees and the margin was flat at about 86%. CNBC TV18's Shilpa Ranipeta spoke to R.K. Tyagi, who is the chairman and managing director of the company, and G. Ravi Shankar, who is the director of finance, and began by asking about the company's capex outlay. Listen in.
As I told that we have a capex target of about 18,000 crores. Mainly it will be transmission line, 90% of which will be for transmission line projects, and balance will be in data center, and then it will be smart metering and some solar generation.
All right. Can you give me the amounts for data centers, solar generation and smart metering?
Solar will be around 200 crores.
Okay.
Data center will be somewhere around 500 crores.
Okay.
And smart metering you can say around 300-400 crores.
Okay.
So if you see predominantly it will be in the transmission.
Transmission.
Yeah.
All right, fair enough. Can you also give me the capitalization outlook for FY25?
Capitalization, it will be around more than 18,000 crore again, and mainly it will be again RE-linked transmission projects in Gujarat and Rajasthan and this Telangana and Andhra Pradesh.
Right. And what's the outlook on ROE, sir? And also, if you could quickly give me an outlook on the bidding also.
In RTM projects, these ROE is 15.5%. After 1st April 2024, it is 15% by CRC, our regulator. On TBCB, we get it is based on bidding and competitive bidding. So we are in early teens. We are getting this bids one.
You had mentioned that you were the L1 bidder for 3 projects in the first quarter. For the rest of the fiscal, what is the outlook looking like in terms of you bidding for more projects?
So around 1 lakh projects are in pipeline at various stages of tendering. So these 1 lakh projects linked with RE will be tendered out subsequently, and we will be participating in these projects.
The management of Power Grid in conversation with Shilpa Ranipeta. A muted reaction to its results came out on Friday. The stock trading low by just over 1%. Time for a short break here on Business Lunch. Up next, we focus on the Ola Electric Mobility IPO as the company heads to Dalal Street. More updates on the other side. Stay tuned.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain. documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Back with us here on Business Lunch, and Ola Electric is also all set to make its debut on the bourses. The IPO is set to open on the 2nd of August and will close on the 6th of next month. Sonia is joining in with more details. Sonia, tell us more.
Well, this is indeed the most awaited IPO of 2024 because it is India's largest electric vehicle manufacturer that will be hitting the Lal Street. It's also India's first ever electric vehicle manufacturer that will be hitting the Lal Street. So lots of firsts over here. The IPO opens on the 2nd of August and closes on the 6th. And the Indian electric two-wheeler industry is expected to grow at a compounded growth rate of 11% to reach a size of $35 to $45 billion by FY28 as per the Ola Electric RHP, and hence there is a lot of scope for growth in terms of this business. But let's not forget, while the revenues have seen a healthy growth, the company is loss-making. For the last 3 financial years, the company has reported losses to the tune of almost 1,600 crores in FY24, 1,472 crores in FY23. And if you look at the IPO details as well, it is the price band has been set at 72 to 76 per share. The total IPO offering is 6,146 crores, out of which 5,500 crores is a fresh issue, while the OFS, the offer for sale, is 646 odd crores. The promoter Bhavish Agarwal is amongst the selling shareholders along with other investors like SoftBank, Temasek, Matrix Partners, etc. And the company will be utilizing about 1,600 crores of these funds raised for research and development purposes. But let's look at the fundamentals. It is a fast-growing company on the top line. In fact, the total income in FY24 grew 88% compared to FY23, but the losses have also piled on, as you would expect some of these startups to do so. But if you look at the industry, right, the electric vehicle two-wheeler industry is still at a very nascent stage. The penetration is only 5.4% currently. Ola is expecting the electric two-wheeler industry to reach a penetration of 56% by FY28. Even if you look at the market share, Ola is currently the largest electric two-wheeler player in India by a margin. The current market share is 46.2%. Its closest peers, TVS Motor Trade, currently enjoying a market share of 17.5%. And remember, the other added advantage is Ola Electric is a pure play electric two-wheeler maker, while TVS and Bajaj and the others like Hero have IC engines as well. Let me leave you with the valuation picture. If you look at the market cap to revenue on your screen, Ola is much more expensive compared to a lot of its peers like TVS Motor, Bajaj Auto, as well as Hero MotoCorp.
Sonia, thank you for so many details and exhaustive research on the much-awaited Ola Electric IPO. And remember that, yes, it is a step down in terms of valuation from what its pre-IPO rounds were. So needs to be seen in terms of the valuation, how the market rewards it post the listing. But take a look at the market first, and Nifty 50 is losing more ground at this particular point. It's absolutely on the flat line, has lost all its gains at this particular moment at 24,840 level. And a large part of that has been led by some of the blue chip banks losing sheen and seeing some profit booking. So Bank Nifty is the one now with gains of 0.6%, had dropped down further. And a lot of large banks like Axis, Indicent, ICICI Bank, all of them, along with the heavyweight HDFC Bank, have seen some bit of profit booking. Moving on now, the Petroleum and Natural Gas Regulatory Board has revised the petroleum pipeline tariffs, and Sonal, our colleague, is right here with all the details on this development. Tell us, Sonal.
Thank you so much for that. Well, it is for petroleum products, something that we all see, petrol, diesel, LPG, which is transported by these oil marketing companies to the final destination. That is where PNGRB, which is the regulator, has gone ahead and revised the product's tariffs. The transportation tariff will be set at 75% of the railway tariff, except for LPG, where the tariff has been set as 100% of railway tariffs when it is basically transported via railway rakes. There's a one-time escalation of 17%, which is still FY25, and after that, there'll been an annual escalation of 3.4%, which shall be considered on a 10-year CAGR based on the wholesale price index. The above revision, it is more positive for any pipeline which was older than 2010. And for any pipeline after 2010, it is positive to neutral, depending on how these oil marketing companies charge it to the final consumer and how much is already recovered as well. Now, ICICI Securities has put out a note where they say it is overall positive for oil marketing companies in the near term. The pipeline gross margin contribution as a percentage of total gross margin stood at 10% for IOCL, 3% for HPCL and 1% for BPCL. So IOCL tends to benefit the most with this, but we'll have to see how is it recovered and how is it charged going forward in terms of escalation. But yes, it's a positive one, positive regulation coming in for oil marketing companies.
Positive for OMCs indeed. Sonal, thanks a lot for that. One of the other reasons why OMCs are having a good day today, all three of them, HP, BP, IOC, trading with gains of up to 2%. Time for a short break here on Business Lunch. On the other side, we get you the latest from the Paris Olympics that's underway. Stay tuned. Back on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Kamala.
Hello. Hi.
Hey there.
Oh, hi, you're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
today in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
P&L impact, given that now to shore up this LCR, you'll deploy more money in your securities which are lower yielding rather than loans, and CD ratio goes down.
You've tuned us on Business Lunch and straight to sports, and it is day 3 of the Paris Olympics today, and all eyes will be on the badminton pair of Satvik Sairaj and Chirag Shetty, who need to win their match on Tuesday to stay in the race. This after today's match was cancelled following an injury to their German opponent. Now another clash to watch out for will be India taking on Argentina in hockey, our national game, and India's wait for a medal at the Paris Olympic Games ended after 22-year-old shooter Manu Bhaker secured a bronze medal in the women's 10-meter air pistol event. With this, she becomes the first woman shooter from India to reach an Olympic final in an individual event in the last 20 years. What a feat! And Manu has also been qualified for the bronze medal match in the mixed team event. So we are going to cheer for Team India at Paris Olympics, Hormaz.
Another medal coming for Manu Bhaker. That's a fantastic feat. Hopefully, yes, we qualified for the bronze medal match. So hopefully that's another medal coming into her kitty. But with that, it's a wrap on this edition of Business Lunch from Nisha, me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
Spread, so the NIM impact of mid-single digit and earnings impact of mid-single digit. While for PSU banks, the LCR is still going to be comfortable, but the margin impact and the sensitivity is relatively higher in terms of the EPS impact on their P&L. Even IDFC First Bank has relatively lower LCRs. PSU banks, they have been consuming excess liquidity and they've brought down LCR very dramatically by 15 to 20 percentage point in last 2 years. They are still higher than your private banks. Currently, private banks are around 120%, PSU banks are around 130-35%. That is how things stand today. Among the top 15 banks in India, IndusInd, IDFC First Bank and Federal Bank have relatively lower LCR compared to the peers, of course, much above the regulatory minimum of 100%. We estimate that the LCR, pro forma LCR can go down by anywhere from 10 to 20 percentage point and drive margin compression and earnings impact for the bank. So it's an incremental negative for the banking sector.
Our liquidity is for existing. We are very much comfortable. We are at the range of 135 to 140. That's the existing liquidity what we are maintaining it. What the guidelines yesterday our regulator has issued, we have assessed roughly in the morning, and it is impacting 10 to 11 basis points. I don't think that will have a problem for the Canara Bank, because even after doing all these things also we will be more than 120-125%. So I don't think it impacts our credit growth or CD ratio or anything.
Well, let's focus on the insurance space, and it appears that the bulls, well, they are back interested in the insurance companies, or at least they're looking to get insured, it seems so. Because in the last 1 month or so, if you look at it, well, the Nifty is up close to 4%, but these insurance companies are actually underperformed. They have come back into play, and in the past week, they're up anything between 10 to around 15%. What went so right? Well, let's put up a few factors out there. There was no adverse regulation that came in the budget. One of the fears was that maybe, in fact, the taxation that they pay, that could be moved up a little bit. That didn't happen. The second factor was, in the last budget, we saw that traditional products, where the premium was more than 5 lakhs, it came under the tax net. Well, the fear was that even those below 5 lakhs premium, that as well could get caught up. So that didn't happen as well. And the third factor was currently, if your ULIP premium is less than 2.5 lakh, well, it doesn't attract tax. The fear was that as well could have been brought under the net. And all those three didn't take place, so the street was happy. The other factor was that the impact of the surrender value. People were fearing that this could have an impact. Back of an envelope calculation told you that it won't have more than 1.5% to 2%. But nonetheless, that was a bit of an overhang on some of these companies. But the managements have indicated that they are trying various ways to wriggle out of this. And few factors that they have been talking about is that the agent's commission, well, instead of it being paid all upfront, it could be delayed. It could be paid in a bit of a staggered manner. And also they're looking to squeeze in maybe a clawback clause. So that's what could help them as well and mitigate the fall of the surrender value out there. The industry basically is coming together, and it appears they're looking to bargain with the agents.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's turning out to be a very volatile session. We were speaking about it getting closer to that 25,000 mark, but we are off around 100 points from the highs of the day. But yes, it's the earnings that continues to be in focus and some profit booking from the highs.
Some profit booking, we just touched the 25, just about to touch the 25,000 mark before we saw a bit of profit booking coming in. Quite a lot lined up on the show. Let's start off with the top headlines. A volatile afternoon session for the market. Key indices recover from the day's low, even as 25,000 remains elusive for the Nifty. PSU banks and realty are the big winners, while FMCG and IT drag. Mid-caps outperform.
Bandhan Bank climbs on a dip in slippages and a positive outlook. Management tells CNBCTV18 that they will see advances picking up in the next 3 quarters and loan growth will be in the range of 16 to 18%.
Sumitomo Chemical surges in trade after reporting strong Q1 numbers. Revenue surges 16%, while EBITDA doubles on a year-on-year basis. Management says favorable market sentiment and stable input costs have been the primary growth drivers.
OMC surge after UBS upgrades the stocks to buy and raises target prices. Meanwhile, Petroleum and Natural Gas Regulatory Board has revised transportation tariff for LPG to 100% on railway tariffs, which analysts say is positive for oil marketing companies in the near term.
Well, welcome to Midcap Radar. Markets have been extremely volatile, and at this point of time, what we're looking at is actually the Nifty slipping from the 25,000 level. It didn't hit it, but it was very, very close. We have quite a lot lined up on the show, and the first up, since this is Midcap Radar, we have Hormaz standing at the wall. Hormaz, which are the top midcap movers today?
You said you saw profit booking from higher levels, but I'm pretty sure the bulls would not be wanting profit booking from 24,999.8, and that's where the Nifty has reversed from. But sticking to the broader markets, there are plenty of gainers from within that space, and earnings reactions continue, as you highlighted. Bandhan Bank is now up 13%, its biggest single-day move since July of 2020. Sumitomo Chemicals also having a good day, and City Union Bank and J&K Bank also seeing gains of anywhere between 4.5% to 6.5%. And some PSU banks are the top sectoral gainers in today's session. PNB is also an earnings reaction, mind you, 7% higher on PNB. Bank of India, Bank of Baroda and Union Bank also seeing a positive rub-off from these earnings from PNB. Railway PSUs are staging a bounce back. RITES is up 11%. The board meet on the 31st to consider a bonus issue of shares. IRCON, RVNL, IRFC staging a comeback. All of them at the highest point of the day with gains of anywhere between 5 to 7%. Stocks on the back of volumes, and Adani Wilmar came out with results 6.5% higher. That spike after the result announcement. Equitas, Small Finance Bank, an opposite reaction, but with large volumes, 4.5% lower there. And lastly, some broader market losers: Lakshmi Organic, Emphasis, Suven Pharma, and Latent View not having a good day at the office today.
All right. Thank you so much, Hormaz, for joining us with that list. But let's get talking about individual names now. Keynes Technologies, the first management on the show, reported a mixed set of first quarter numbers. Margin was a miss despite having a strong revenue growth. Jairam Sampath, the director and CFO at the company, is joining us now. Mr. Sampath, good afternoon. Thank you so much for joining us. Well, it's been a strong growth, and you're guiding for a similar growth in FY25 as well. I wanted to know what will the drivers for that growth over an already high base would be, and what about margins? Do you think that could come under pressure, or is that something that you will be able to maintain?
Yeah, thank you. Thank you for having me on the show. Good afternoon to everybody. So fundamentally, the first quarter is a small quarter. It's about 15-16% of the total year. So you don't get the kind of operating leverage that you would get in the other quarters. So there is an actual increase in margins while we go through the year. That's the first thing. The second thing is our business is based on order book. So what it would essentially mean is that already the orders are in place and it's a matter of execution. So in short term, we can pretty much with certainty say how much revenues that can come in. The third thing is, since the order book is with us, we can pretty much compute the kind of margins that are likely to be there, and that's what is reflecting in the guidance that we have provided.
Okay. Mr. Sampath, you've given a target or a guidance of 60% revenue growth as far as FY25 is concerned. Q1, you've seen close to 70% growth. Margin expansion, you've expected, almost 100 basis points. Are you sticking with both of that? While revenues have been higher, margins have actually slipped on a sequential basis too.
Yeah, it was expected. In the first quarter, as you know, this was the election quarter, and we didn't have too much of activity happening in the government procurement sector, which actually drives some of our OEM sales, which are especially in the railways and other large project areas. So we are pretty confident that this is back on track now that the first monsoon session also will be concluded now and budget is also done. So you can look forward to some good, exciting times ahead.
Next thing that the street is watching out for, Mr. Sampath, is the OSAT or the PCB approval. By when does that come in? Because most of the analysts have not factored it in their target prices or their earnings estimates. What is the timeline looking like here? You've not used your QIP proceeds yet as well. So any timeline that you can give a sense of here?
It should be happening anytime. So of course, when I say anytime, this is in the last penultimate stage, when it goes to perhaps a cabinet committee or so. So we're not very privy to the exact processing inside the government, but suffice it to say that it's in a very short time frame, the approval for the OSAT is likely to be there. We have also purchased the land in Gujarat, and we have kept all the other project-related activities, collaborators, team, everything is ready. And so that we understand that there have been a couple of months behind schedule on this particular thing, but I think we probably will catch up so that we do our revenues in semicon by, say, FY26 fourth quarter. We start, giving some significant revenues.
Mr. Sampath, please correct us if you're wrong. We understand that, the current order book is standing at slightly over 5,000 crore, with an average order inflow per month of close to 480 crore. Can you sustain this particular order inflow growth? And on the back of that, FY25, where do you expect to close, or how do you expect your order book to stand at?
Yeah, so what happens is order books expand faster when large orders come in. And so it's you must see our estimate is that by the end of the year, we'll be at about 5,700 or so. The order book will be about 5,700 crores or so. So some of the big orders, especially in the industrial area, have already come in. So that kind of pushes up and temporarily makes it look as if the monthly order rate has gone too high. But actually, this is at a very steady pace. And this year, based on this order book, of course, one can say for sure that 3,000 crores of sales revenue should be definitely possible. And we'll see probably the second half of the year whether anything better is feasible.
Okay. Mr. Sampath, how much of it will come in from exports? Currently, it's around 15% of your revenues. Are margins higher in export markets? Second question is on the working capital. It has reduced, but do you think it will continue to be above that 100 days mark?
Yeah, so the working capital is also a function of the first quarter is always, it's like a post-lunch session kind of a thing. It comes on the back of a very busy fourth quarter. So obviously all the parameters look a little bad, but it picks up during the year. So I think working capital is in the right direction. We have actually stocked up a little bit. So in absolute terms, inventories have gone up. And since we had a busy quarter, so a little bit of, since first quarter, a couple of customers, some delays, etc. But I think in the receivables front, so we think that this all gets sorted out, and by the end of the year, we have projected about 10 days reduction in our working capital, net working capital cycle that we will do. As far as the exports is concerned, in the short term, you don't see much changes because right now the entire business is driven by a very strong tailwind in the domestic sector. But all the new customers that we are onboarding, there is a fair bit of export content. So by the end of the year, you can start seeing some large exports happening. And then also FY26, I think we can expect a little larger share of exports than the current 10-15% kind of number.
Okay, Mr. Sampath, that's all the time we have with you today, but we'll have you once again on the show to discuss when you do get the OS80 approvals. Let's now slip into a short break. The management of City Union Bank joins us next to discuss the Q1 numbers and more. Stay tuned.
Kamala!
Hello. Hi.
Hey there.
Oh, hi. You're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh, my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
P&L impact, given that now to shore up this LCR, you'll deploy more money in your securities which are lower yielding rather than loans, and CD ratio goes down. So there is a negative spread. So the NIM impact of mid-single digit and earnings impact of mid-single digit. While for PSU banks, the LCR is still going to be comfortable, but the margin impact and the sensitivity is relatively higher in terms of the EPS impact on their P&L. Even IDFC First Bank has relatively lower LCRs. PSU banks, they have been consuming excess liquidity and they've brought down LCR very dramatically by 15 to 20 percentage point in last 2 years. They are still higher than your private banks. Currently, private banks are around 120%, PSU banks are around 130, 35%. That is how things stand today. Among the top 15 banks in India, IndusInd, IDFC First Bank and Federal Bank have relatively lower LCR compared to the peers, of course, much above the regulatory.
City Union Bank is buzzing in trade today. The bank's asset quality and deposits saw some improvement on a year-on-year basis, while net interest margin contracted. To discuss this and more, we have Mr. N. Kamakodi, the MD and CEO at City Union Bank, joining us. Good afternoon, sir. Thank you so much for joining us. It's a good quarter and the street is cheering that. First up, we understand that after a while, albeit on a low base, you've actually seen loan growth on, coming to the double digits. While that is commendable, can you sustain this for the rest of the year? And the second question, sir, is that when you're talking about deposits across the industry, gathering deposits has been a bit of a concern. So where do you see deposit growth trending forward?
Actually, till let's say COVID, pre-COVID period, we had almost 2 decades run when our growth rate in advances was about a couple of percentage point more than the industry average growth, and there was some pushback during the COVID period, which we are trying to get back now. Last year, we had a certain amount of, like say, implementation of the digital lending processes and all, which have started yielding some results already. So the year as a whole, there could be some amount of, like say, fluctuations on the quarterly basis. But here on the, if you look back to our credit growth by December 2022, we had an annual growth rate of the previous year of about 14%, which like say came down because of some changes and all. But now things are in the growth path, and we have touched a double digit for the June. Hopefully, we are trying to push it, like say, more and more towards the for the end of the current financial year, and we hope we should be in a position to take it forward to the next level.
Okay, so when
we feel for the go ahead.
Please go ahead, Mr. Kamakodi.
The basically, like, our next target will be to align our growth rate in tune with the growth rate of the industry, is what I mean as the next level. And we hope we should be able to push the deposit growth also to align with that of the credit growth without having any issues. That's what we see, and that is what we are trying to achieve and demonstrate going forward.
So your loan growth will be in the double-digit mark in FY25, Mr. Kamakodi. Can we assume that?
Yes, that is for having that only we are trying to move, and our internal target is to achieve the industry growth rate for the financial year 24-25.
Okay, so Mr. Kamakodi, while you've spoken about advances and you've also spoken about deposits, currently, what is the cost of deposits? Because we understand that there is significant competition in the marketplace for gathering or deposit accretion. And secondly, we've actually seen some NIM contraction that's come about. So going forward, where do you see NIM trending?
Basically, like you had a major change in the regulation that, like, till 31st March, like say, whenever there is an overdue for the like say accounts, you can charge a penal interest. But from 1st of April, the penal interest had to go for the penal charges. That's why we had about like say some reduction in the like say interest income. I mean, because of that, the reduction in the net interest margin, which actually moved as the other income per se. The cost of deposits, we had about, it was hovering between 5.7 and 5.75 between the fourth quarter last year and the current quarter. In fact, there was a 3 basis point reduction in the cost of deposits for the first quarter compared to the previous quarter, that is fourth quarter last year. We feel by and large the cost has stabilized, and overall, in terms of both the cost and NIM, they should be around the same level as we move forward, is what we expect at this point of time.
Okay. There is a dip in MSME lending and there's a rise in the gold portfolio. Is there any segmental focus? We've spoken about it earlier as well. And also, how are credit costs across segments? You said it is expected to be stable, but if you can give us a segmental view of this.
Actually, like if you had, like say, the I had checked the numbers for a year before last, we had about 1,000 crore slippage, which reduced to about 1,000 crore for the financial year 24. About 300 crore reduction was there, and this year we expect a similar trend to continue with the reduced slippages. And overall, for the last 4-5 quarters, the recoveries from the NPAs have stabilized over and above the slippage, which we expect to continue for a few more quarters, is our current expectations. The NPA numbers, the asset quality numbers are very much holding up.
Mr. Kamakodi, last question, we're pressed for time. There have been a couple of statements from RBI. Number one, in terms of the CD ratio, and number two, there have been issues in terms of draft provisioning norms for liquidity coverage ratio. In both of these cases, how will it impact you, and are you comfortable at current levels?
Basically, like, in fact, this question came during the analyst call also. We expect the LCR for the system itself to stabilize somewhere between 115 to 125 or something like that. Like say some amount of reorientation of the asset book will happen going forward, but we also think that we should be in a position to like say fully comply with that by minor changes, and we don't expect any major issue. But like say there were some changes in the calculation of the LCR earlier. We had like say declared like say some of us we had about like say substantially higher at closer to 200 and all, which because of the change in the circular and the like say reclassification and change of definition and all of us should be stabilizing somewhere in that 115 to maybe 120 in that range, and we should be comfortable with that. Should not be an issue on.
All right. Okay, Mr. Kamaguri, thank you so much for joining us today and giving us the outlook for the bank going forward and general industry trends as well. It was a pleasure speaking with you. That's City Union Bank, but it's time to slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Well, let's focus on the insurance space. And it appears that the bulls, well, they are back interested in the insurance companies, or at least they're looking to get insured, it seems so. Because in the last 1 month or so, if you look at it, well, the Nifty is up close to 4%, but these insurance companies that actually underperformed, they have come back into play. And in the past week, they're up anything between 10 to around 15%. What went so right? Well, let's put up a few factors out there. There was no adverse regulation that came in the budget. One of the fears was that maybe, in fact, the taxation that they pay, that could be moved up a little bit. That didn't happen. The second factor was, in the last budget, we saw that traditional products, where the premium was more than 5 lakhs, it came under the tax net. Well, the fear was that even those below 5 lakhs premium, that as well could get caught up. So that didn't happen as well. And the third factor was, currently, you know, if your ULIP premium is less than 2.5 lakh, well, it doesn't attract tax. The fear was that as well could have been brought under the net. And all those three didn't take place, so the street was happy. The other factor was that the impact of the surrender value. People were fearing that this could have an impact. Back of an envelope calculation told you that it won't have more than 1.5% to 2%. But nonetheless, that was a bit of an overhang on some of these companies. But the managements have indicated that they are trying various ways to wriggle out of this. And a few factors that they have been talking about is that the agent's commission, well, instead of it being paid all upfront, it could be delayed. It could be paid in a bit of a staggered manner. And also they're looking to squeeze in maybe a clawback clause. So that's what could help them as well and mitigate the fall of the surrender value out there. The industry basically is coming together, and it appears they're looking to bargain with the agent's commission. The third factor is, you know, if you look at the results, they're fairly good. Whether you look at the APA or the VNB, they were fairly good in the past quarter itself, though margins, the VNB margins did come in for some pressure. But now the street is calling for bottoming out of the VNB margins. How is that? You know, ULIP as a percentage of the total mix, that had gone up drastically. Now the indications are it's hit peak and maybe in fact it'll pull back. Remember, ULIP margins are in fact relatively lower than the other products. So because of that, in fact, maybe bottoming out of VNB margins is something that the street is looking forward to. And finally, you know, if you look at the valuations, if you look at the reverse, you know, DCF, it implies that the street is now factoring in single-digit growth on the VNB. But maybe, in fact, it can grow in mid-teens or maybe high teens as well. If that's the case, then it has some valuation comfort. And even if you look at it on a price-to-EV basis, well, then, in fact, as well, it's not out of whack. It's more or less in line with the past averages, and some of them are, in fact, trading at a bit of a discount as well. So the short point is, insurers, life insurance, they came back, and the bulls, they got insured, at least in the recent past.
It's perhaps too early to call it a full report card because it's not a full accounting of things. As you said, what we're basically trying to do is looking at how earnings expectations for FY25 have changed in the last 1 month for companies out of the NSE 200 list. And these are the top tracked, well-owned companies, liquid, large, mid companies. And you know, how many have seen upgrades to their full year estimates and how many have seen downgrades? So the reason I say it's not a full accounting, if it's not even half the accounting, is because only 70 have reported out of NSE 200 as of yesterday's close. But out of the 70 which have reported, I mean, I think the numbers are pretty, you know, stark. 40 have seen EPS being downgraded. Only 18 have seen EPS numbers being upgraded. And mind you, out of these 18 companies also,
Welcome back. You're still tuned into Mid-Cap Radar. Markets, they continue to be volatile. Nifty is just up 12 points right now. It has come off again. Then it tried to go higher from those levels. Mid-caps are doing well today, but that index, of course, has come off from the highs yet again. Bandhan Bank is one stock you should keep an eye out on because in a market like this, it's been seeing a one-way move. So 13% higher on that one on the back of management commentary, earnings as well. And as you were mentioning, Vivek, a lot of earnings, they're coming in thick and fast.
Earnings coming in thick and fast, like you mentioned, Bandhan Bank, City Union Bank. Remember these banks have actually been laggards. City Union Bank giving us quite a bit of strong guidance on the back of that. The stock trending near the day's highest point. But that's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner, that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we did see some amount of volatility come through in today's trading session. So remember that at one point in time we were inching towards 25,000, but now we're at around 24,820 odd. We did see a dip during noon, where after that it seems as though the markets have not really recovered from that sudden dip that we did see for the markets. But nonetheless, the mid-cap index is still holding up quite well. We have the mid-cap index up around 1% at this point, and the advance decline ratio favoring the advances. Let's welcome Astha Jain, research analyst at HEM Securities, to answer all of your fundamental queries. We'll have Richard Jain with us soon as well. Astha, welcome to the show. Well, it's been a choppy day, a lot of stocks in focus. So let's get in a quick question first. We have V. Vaithalingam, who writes to us from Tamil Nadu, holds around 100 shares of Deepak Fertilizers, which is bought at around 100 odd rupees. He wants to know what to do, whether to hold or sell at current levels. So over to you on this one. He's sitting on a good profit at this point in time. What would you recommend on Deepak Fertilizers?
So as he's sitting on the good profit, so my recommendation would be to partially book the profit and partially keep the holding, because what we are expecting that going forward, we really need to see the results, especially the bottom line growth in the quarters coming, because we are a bit skeptical about the bottom line growth, the way the company will be able to maintain the margins or not. So, and how the monsoon will pan out, because as we can see, although monsoon is pacing up, but still we really need to see how these criteria can be taken care by the company going ahead in the financial performance. So overall, book partial profit and remain invested in the partial holding is recommendation from our side.
Okay, all right. Well, we do have the Indian Bank numbers on your screen, where there's been an improvement in terms of the gross NPAs. So 3.77 versus 3.95% on a Q-on-Q basis. Net NPAs have improved as well. As you can see, the stock is up around 2% at this point. Do you look at the stock, Astha?
So yes, we do track Indian Bank, but first of all, I would really like to see the deposit growth, because that is the major factor which we are right now seeing in all the banks, as we have seen in the past also, like some of the quarterly updates which have came in from the PSU banks like BOB, the deposit growth was soft. So we really need to see how the deposit growths are going out for this bank, especially their asset quality seems to be fine, but all eyes on the deposit growth. Meanwhile, prima facie, the numbers are looking good.
Okay, all right. The numbers looking good. NII is up around 8.3% to 6,178 odd crores. So there's been a growth year on year in terms of the NII. Profit should come up for you. Gross NPA looks like there's been a marginal improvement taking place. Well, Shrisas Daga writes to us from Mumbai, holds 1,200 shares of Varun Beverages, which is bought at a level of around 265. Long-term investor wants to know what to do, whether to hold or to sell at current levels. Again, sitting on a good profit on that one as well. What would you recommend on this one? Varun Beverages, 1,691 odd rupees in terms of a current market price. What is your view on this stock?
Basically, we are waiting for the results, which are scheduled on 30th of this month only. So hardly a day left. So I think it's better to wait for the results. Although what we believe the company will going to post strong performance, because the distribution actually has grown up strongly. This is what we believe. And in fact, now their international operations are also gaining momentum, as we have seen, like Zambia, like Zimbabwe. So now they are expanding their operations there also. So we really need to see how the company will be performing in the financial results. Meanwhile, we are expecting strong numbers from this counter. So recommending a hold only for a day or two till the results come. And our price target for the same is 1,710 at the initial level. And if everything goes well in the result, then 1,750 can also be set as the another price target for this counter. So hold is recommended from our side.
Okay, all right, fair enough. A hold is recommended on Varun Beverages. We have the Strides Pharma numbers, which are looking good. Net profit is coming at around 70 odd crores versus a loss of 7 crores year on year. But Ola Electric is all set to make its debut in Dalal Street. The company's IPO will be opening from the 2nd of August till the 6th. Yash caught up with the company's chairman and MD, Bhavish Agarwal, and CFO, Harish Abhichandani. Listen in.
From the beginning, our issue is largely a primary issue. Even now, if you think almost 90% or more than 90% of the capital raise is going to be primary.
Correct.
Because we are investing for growth, and we are investing for making this company and the Indian EV ecosystem much larger. So the secondary was always a small portion of it, and my share was a small part of that. And you're right, I have cut back a little bit because I do feel there's a lot of growth ahead. There's a lot of opportunity for investors to make money ahead, and I also see my own, share value rise in the future.
Okay. Harish, to you, as far as the objects or the proceeds are concerned, you also mentioned that about 800 crores is what you expect to use towards repayment of certain borrowings. Where do the consolidated borrowings at this point of time stand for the company with the utilization of the IPO proceeds? Where do they go to? And what is a comfortable level that you see as far as borrowings are concerned? Would you again look to raise it as growth picks up going ahead? Or do you think these would be the levels after the reduction where you would want to stay at?
So if you look at our borrowing strategy, where we have borrowed is for creating assets.
Correct.
And we are continuing to strengthen our balance sheet. Hence, one of the objectives of the issue is actually repay of debt, because it further strengthens our balance sheet as we go into the new journey. And we always borrowed and have borrowed only for creating the two-wheeler factory, gigafactory. So our investments have been, obviously, we contribute our equity into it, and the borrowings are, substantiate that to that projects. So our borrowing strategy is primarily driving creation of sustainable, tangible assets. So it's not for any other, working capital use or anything like that.
Correct.
So borrowing strategies look, if we are embarking on these mega projects, banks are more than willing to participate in that journey with us. We are bringing in our share of equity, and banks are contributing the rest. So that's how borrowing strategy kind of spans out.
What will be the revised number post you use those proceeds, and how would it impact the finance cost largely for the company once the number goes down at this point?
So clearly with repayment of borrowings, finance costs will drop. So we are using 800 crores from the IPO proceeds to reduce our borrowing. And hence the finance cost will drop. And the thing is that the overall borrowing is largely, as I said, we have a term loan for our gigafactory and we have a term loan for our two-wheeler factory. So those term loans will remain on the balance sheet, and there are long-term term loans around it.
Okay. Paresh, I want to speak to you a little about the revenue also. FY23, we saw a 6x jump. FY24, it almost doubled revenue from operations. What I want to understand from you, and I'm sure investors would want to look at that, by how soon do you expect some sort of stability in the revenue, that it's consistent at a particular level? What would be that consistent growth that you see in your revenues? And of course, by when do you expect to achieve that consistency or predictability in the revenue growth?
Yes, we've seen very strong revenue growth. Like you said, FY23 over 22 was almost 6x, or slightly higher probably. And FY24, which we saw in the RHP, was almost double. 5,300 crore almost from 2,700 crores.
Yes.
So we've seen very strong revenue growth, and I actually believe as a business and as an opportunity, we're just scratching the surface. EV is a mega trend, one of the most important mega trends in automotive after 100 years. 100 years ago, automotive moved from coal engines to internal combustion engines, and it's that level of a shift. And we are just scratching the surface within scooters, and so far we have a portfolio of scooters. In our book, we've talked about how our bikes are going to come along over the next year. So the potential for electrification of India's automotive segment is very large. And as we go along, we've also focused on building a foundation for electrification. Our strategy has been focused on vertical integration, building core manufacturing capabilities in-house, and especially the core R&D capabilities like our cell, which is going to be a foundation for accelerating EV penetration by reducing cost and by making core technology in India. And as we keep executing on this foundational element of our business model, the EV penetration will continue to rise category after category. So far it's scooters, then it'll be motorbikes, etc., etc. So I do foresee this whole opportunity for us and the whole industry, frankly, to grow into. Our revenues, I can't put a number to it today, as you understand, but we do expect revenue growth, and even after FY24, over the last 3 months, the monthly numbers are all in public domain in this industry on the Vahan portal. So you can see how our volumes have continued to grow over last year.
Two interesting things that, of course, the company is also in the process of working on. One is the electric car and the electric bike. On both of those aspects, how would you want to sort of people to look at that, both those interesting avenues? When does electric bike come on board? When does the car come on board? What are the plans?
Bike is something we are very excited about. We announced our bikes last year, 15th August, and as you know, your viewers also would know, 15th August is our annual product launch day.
Correct.
You know, for 3 years we've been launching new products every 15th August, India's Independence Day. So this year also we have something very exciting lined up for 15th August, which is roughly a week after our listing, so it will be even more exciting.
Correct.
So last 15th August we showcased bikes, and hopefully we will have some very exciting announcements this year to showcase on the bike front to people. Car, we have always been clear that it's not part of our agenda. Right? We are focused on the two-wheeler space. Scooters is where we have a lot of scale already, and now the next focus for us is the bikes.
Okay. One last question to you as we conclude this interaction. I was just looking at the RHP document also. You are currently working at about 49% capacity utilization. What is the level that you're looking at here? What can this be scaled up to? And with that kind of, what would be the additional manufacturing that would come on board?
Let me first explain the capacity side. So our infrastructure, which is the two-wheeler factory, is actually built for up to 4 million units. The whole civil infrastructure, the utilities, etc. That's all geared to handle up to 4 million. We have an installed capacity within the factory for 1 million units. And this 49% is, of course, historic March. And as we see the current data, we see that trend going up. So we are well on verge to use our capacity in the current financial year. And other than that, I mean, capacity utilization will continue to grow as we scale up. The motorcycles are going to come. So as the product launches happen, the capacity utilization will continue to grow. But we have designed a capacity for a significantly larger scale. Investments have been made upfront, and it's as we leverage that, the performance capacity will go up.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unity.
Welcome back. Well, for the markets, there is some pressure on specific stocks. So Titan is down around 2.6% at this point. Bharti Airtel is under pressure as well. And Tata Consumer along with Cipla and ITC. So there's a medley of stocks which are under pressure. Do watch out for Divi's because it comes out with its numbers this Saturday and has been gaining ahead of that. So it's picked up around 6-7% in this month itself in terms of market capitalization. And for the year, it's up around 25%. But let's get in some queries now and let's get in some opinion. Ruchit Jain is with us along with Astha Jain to answer all of your queries. Ruchit, didn't get a chance to ask you on the technicals for today. It's been a dip, but the dip hasn't really been bought into for the Nifty. What would you suggest?
Yes, hi, very good afternoon, Ekta. Well, there's no doubt about the broader trend. That the broader trend for the market still remains positive, especially if you look at the F&O numbers from the start of this series. FIs have been on the positive, have been trading with a positive bias since last 1.5 months. And where just before the expiry, the positions were a bit overbought with long-short ratio around 80 to 82%. Post the expiry, that ratio came down to around 57%. This has created a room for fresh long formations that have been seen in the derivative segment by FIs. And still there are no signs of any kind of divergence from the mid-cap or the small-cap fronts. Yes, markets have seen a sharp run-up in last 3 or 4 trading sessions, and hence there could be some in-between declines, but no signs of reversals, and hence it continues to remain a buy and dip market.
Okay, remains a buy and dip market. Okay, well, let's get in a query now. We have Kurian, who writes to us from Kerala, who holds 500 shares of Indian Hotels, which is purchased at 430 odd rupees. So he's sitting on a profit there, good profit, and wants to know the prospects of this particular investment. So he's bought, his buy price is 430, currently trading at around 646. Ruchit, let's toss it over to you first.
So I think whenever we are witnessing any kind of dip in last 1.5 years, we are witnessing good buying interest when the stock comes around 100 DM. Recently, also the stock corrected in the month of July, but that 100 DM acted as a support and the stock has resumed its uptrend. It has potential to rally towards 700 to 720 in the medium term. So I would advise to continue to hold on for potential targets around 700, and near-term support for the stock is now placed around 580, which is quite above the buying price. So the risk-reward ratio is favorable to continue to hold on the long positions.
Okay, all right. And what about you, Astha, on Indian Hotels? Astha? Okay, we'll try and get Astha back to talk to us about Indian hotels. But let's get in Gurmeet, who writes to us from Chandigarh, holds 500 shares of NBCC, which he's bought at 34, wants to know what to do, stay invested or sell it. Well, sitting on a profit on this one as well, and in fact, a good entry price for NBCC, 34 odd rupees, currently sitting at around 186. Ruchit, what would your recommendation be on this?
I think the entry is in a margin of safe, hold on in case some corrective phases also. The trend still remains positive, no signs of reversal, and since he has kept a good patience, and so I would recommend to continue to hold on and keep a revised stop loss method. Now the major support for the stock is around 150. So we can keep a stop loss below 150 for now and continue to hold on. And as the stock prices move higher, we can revise the stop loss on the higher side. So it's better to continue to ride this trend. I think many congratulations for such good profits. And I think yes, if he has kept so much patience, then it's wise to continue to holding this. It's wise to continue to hold these positions for a bit longer period of time.
Okay, all right. So you'd recommend holding it for a longer period of time. Well, we'll try and connect with Astha again, but as of now, we need to take a short break. On the other side, we have more queries lined up. And we take this break with the news that the Bank Nifty is just about holding with a gain of around 90 odd points at this point. Mid-cap index up around 1 odd %, so outperforming. Advanced decline ratio has still been in positive terrain, so that's the big positive which is coming through. Take a break and be back.
Its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through a stadium. They will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people and no doubt visitors in the opening ceremony. It's not just for the select few who can somehow manage entry into a stadium, but there's more to this than that. Consider that the Olympics is the biggest sporting event in the world. The number of people who watch, it's going to be such a showcase, such a show-off for Paris to the world. All of Paris will be on show. The stage along the 6-kilometer ride along the river Seine is going to take in some of the most iconic landmarks of Paris. Notre Dame, the Louvre, and this is really going to be a presentation to the world. Consider also that Paris is perhaps the most visited city in the world. By some estimates, about 50 million visitors to Paris every year, spending about 30 billion euros just within Paris. So there's a lot of money in tourism for Paris, and this is only going to multiply the viewing and invite more tourists. It makes show sense and it makes money sense. And to that extent, France and Paris particularly are already a winner.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway.
Welcome back. Well, you're still tuned into your stocks. We have with us Astha Jain and Richard Jain to answer all of your queries. Now we have Saurabh, who writes to us from Ahmedabad. He holds 3,000 shares of Nykaa at 185. He wants to know whether to switch to some other stock or probably stay invested at this point in time. So he's bought Nykaa at 185 and just about sitting flat on his gains, flat on his investment. Well, Astha, what would you recommend on this?
So we are positive on the future outlook of Nykaa, and that's why we are recommending hold with the initial price target of somewhere at around 200 to 205 odd levels. Talking about this counter, what we believe that their BPC and fashion segments are doing well. In fact, they have now done the partnership with various well-renowned brands, so that will also help the company, and they have the plans to open more and more new stores. So we are positive on this counter only from the long-term perspective, and hence recommending hold. I think there is no need to take out the profits from it. Keep hold this counter with a price target of 200 to 205 at the initial levels.
Okay, 200 to 205 at the initial levels. The stock is up around 13-14% in the past 6 months. What is your recommendation, Ruchit, on the technicals of Nykaa?
Well, I have a similar recommendation to continue holding the stock because, post listing, we did see some price-wise corrective phase. But I think if you look at last 3 or 4 months, the stock price has now entered some consolidation phase, which seems to be more of a time-wise correction. So I think price-wise downside seems to be limited as, the stock is going through a time-wise corrective phase. And once we see a breakout above 190, 195, so technically the stock could head higher towards even towards 230 to 240 in medium term. So I think if we can keep some patience, then continue to hold on. Possible targets technically seems to be around 230 to 240.
Okay, all right. 230 to 240 is what you're recommending on the technicals. So positive view coming in on Nykaa, both on the technicals and fundamentals. Shank Mukherjee writes to us from Kolkata, holds 84 shares of Bank of Baroda, which is bought at 256 odd, and wants to know what to do, whether he should hold or sell this particular counter. Sitting on a loss at this point, but not much, just about flat. Well, we've been discussing a lot about the banks this time. So, Astha, I'm going to toss it over to you. A lot of banks in focus on account of numbers as well today. But BOB?
So it is a long-term holding from our side. Long-term recommendation holding. Why? Because first of all, results are set to get released on 31st of this month. So hardly 1 or 2 days left. So better to wait. And we believe that maybe the results might not be that strong, because what we have seen from the quarterly update is their loan growth was soft at around 8%. And in fact, deposit growth was also not very encouraging. So maybe some muted numbers can be expected from this counter. But in the long term, we believe that this counter will definitely fetch the good returns. And hence we are positive on this counter only from the long-term perspective. Remain invested in the counter. In the long term, 290 can be set as a price target. Maybe time period can range from 3 to 6 months.
Okay, all right. Well, Astha as well as Ruchit, we're going to let you go on that note. It's been a pleasure listening to your views. Thanks very much for joining in. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.
Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4 additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat.
Generally for us, quarter one is a muted quarter. In fact, over the last years, you would have seen the quarter one, we have shown degrowth sequentially from quarter 4 to quarter 1. This year, we've been able to hold it there.
Basically, our deposits are coming very strong, as could see, like 39% year-on-year growth. And we don't need that much deposits anymore.
Last time we have given the guidance that our gross NP will be 5%, but we have already achieved 4.98% in the first quarter itself.
As you know, this was the election quarter, and we didn't have too much of activity happening in the government procurement sector, which actually drives some of our OEM sales.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Well, that is the list of top managements that you saw through the course of the day here. It's all about earnings. It's all about individual single stocks and some of the sort of, best top movers today as we played out those sound bites for you. We'll do more of that over the next 60 minutes or so. This is Closing Bell. We're coming to you from the CNBCTV18 Motilal Oswal studios. I'm Prashant with me. My colleagues Surabhi and Rima and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon. Hi. It was also about getting so close to 25,000 on the Nifty. The high today was 24,999.8.
Yeah, absolutely. I mean, just when you think that laws of gravity don't apply to this market, suddenly then you get some validation. There's something called gravity. So I think just that 0.2% shy of 25,000, and that's when the selling came in. Nigel.
I'll tell you what, good things you have to wait sometimes, right? So wait a little bit longer. Good things are coming, but maybe wait a little bit longer. Some patience. Patience always, when you're expecting some good things. So I guess I'll take it in the stride.
Well, that's as close, right? I mean, I actually thought the high was about 24,994 or something. Actually, it's not. It's
99.8. That's how close we got.
I remember with the Bank Nifty at one of these many thousand points that had happened. Same thing had happened.
0.1-0.2%.
It's almost there for all practical purposes. But anyway, the market taking a small cut. I mean, actually, as we were walking in, the Nifty was showing about a 50-60 point cut. Now, that's also been bought back into. We're down just about 10 points. So there's a very flat kind of a screen going on. But mid caps and small caps is another picture entirely. I mean, those indices are up between 0.75% to 1%. And that'll come up on your screen, 1% in the mid-cap index, and I think same for the small-cap space as well, just under 1%. PSU Bank Index is the biggest gainer. It was up 3% in the morning. It's up about 2.5% now. Post the PNB numbers, I mean, there are Bob and SBI, which are yet to report as far as the largest banks, PSU banks go. Real estate and CPSC, government stocks, is another area which is doing very well. And on the downside, FMCG is seeing some profit booking. And IT, which had such a sharp move on Friday, that is, IT index, I think, was up 1.5-2%. That is down a little bit as well. So that's an interesting space, really. Stocks like Emphasis and all sort of blew the lights out. Not the earnings, but the stocks. And Emphasis is actually one of the big volume-led losers on the downside. The last I checked was down about 4%. So lots to discuss here over the next 60 minutes. Rima.
Hi, the story is also in the banking stocks today. The Nifty Bank at its day high was up more than 1,100 points, and now it's up only about 200 points. So quite a bit of a come-off coming through for the Nifty Bank, now up close to about 0.4%. That said, individual banks, some of them, like a Bandhan Bank, that's up close to about 13% right now. The slippages have halved for the company, very strong asset quality, and plus the stock's been an underperformer. City Union Bank is up close to about 6%. Outside of that, oil marketing companies have come in for buying. So BPCL, IOC, HPCL, railway stocks are higher. So RVNL has an 8.5% gain. IRFC is up close to about 5%. And in that PSU basket, you've got numbers like BEL, decent numbers, and the stock is up 3.5-4%.
Yeah, some of those numbers have been well received by the market. And some of the banks as well. I mean, while, of course, PSUs anyway have a lot of momentum behind them today, the ones like PNB reacting to numbers, Whirlpool, another name reacting to numbers on the positive side. Zen Technology is up about 5%. So these are the smaller stocks that have done well. Just want to point out here that the VIX has increased quite a bit today. The VIX has spiked up almost 7% in this yo-yo move that we've had in the market, which is not what this market's used to almost. Yeah, that's the India VIX, 6.5% on the higher side. So let's see which way this goes, because while mid-caps are having a good day as usual, the fact that banks could not hold on to the gains, that big follow-through move, it looked like a big momentum day for banks, and then things turned around. So yeah, that fall has been sharp and swift. Let's see where we finally end. But yeah, volatility is spiking. That for me stands out as the hallmark of the day. Nigel.
Well, that's right, and it's still a stock-specific market. You pull up the intraday chart of Strides, that one's bursting away as we speak, 4.5% higher. BEL came out with its set of numbers, that as well as at the high point of the day. And the Aditya Birla Retail Fashion, well, that stock has spiked up. The one that we're waiting for is ACC, and that one, in fact, is looking a little bit nervous ahead of its numbers. That's moved to the low point of the day. I think the numbers should be around the corner. We should be expecting them anytime soon. For the time being, though, let's get in Mitesh back into the conversation. Well, Mitesh, we were bracing for the 25,000 mark, bells, claps, excitement, but missed it by a whisker. What's your view on the Nifty? Tell us the support levels. The 20-day MA is still close to 400 points away from current levels. So what's the near-term support?
Yeah. So I think, Nigel, there is a lot of call open interest at the 25,000 strike. About 90 lakhs plus is the open interest. So I think one, it was psychological level. Two, I think, there's call open interest. So some supply and some, selling was expected. I was saying that if we get past 25,000, then I think we'll see another 400-500 points. I think that seems to have taken a break, at least for a day or so. but we haven't turned negative as yet. So we'll just, keep watching the index and trade only about 25,010, 20 levels once those levels are being captured, and then see how it goes from there. On the stock side, Gujarat Gas is something, which I like. That's a stock which is making a fresh high. So buy here with a stop at 654 and a target of 690 can be looked at. And BEL, I think you just mentioned that as well. That's done well today. The intraday charts are turning slightly positive. So BEL is a buy with a stop at 314 and a target of 332 can be looked at.
Okay, all right, got it. Thanks very much for that. Nitesh, we'll come back to you for some more thoughts. We have Deepan Mehta joining in, Director Elixir Equities. Deepan, thanks so much. It's been a complete flurry of earnings. We'll talk about Bandhan in more specific detail in just a bit. We'll have Sudarshan to sort of revise the numbers for us as well. But overall, what have you made of the kind of move that we've seen in banks? Of course, there's a lot of volatility, but still the likes of a J&K, etc., getting a big thumbs up from the market. I mean, is this more about market move and mood and momentum, or are there certain earning stars that stand out for you in what we saw over the weekend?
Yes, Abhi, good afternoon and thank you for having me on your show. See, by and large, I think banks and NBFCs have disappointed in this earnings quarter, as they did the last time round as well. There are a few outliers, of course, like J&K Bank, I thought came with very good set of numbers. And earlier in the earnings season, Bank of Maharashtra, also PSU Bank, came with very good set of numbers. But by and large, I think it's the same story what we saw last quarter, that net interest margins and net interest incomes have slowed down. And now I think the base effect is catching up as far as provisioning is concerned. So year-on-year provisions are much higher for a whole host of banks and NBFCs, which is having a direct effect on the net profit. And just that because valuations are attractive and cheap stock prices haven't fallen further. But this particular trend will continue till we don't have some liquidity easing up and banks are able to raise deposits in a far more, I would say, a significant manner than what they are doing just now. So it's best to remain more or less neutral. Another outlier which came out with very good set of numbers is Cholamandalam. I thought very good set of numbers from that, and Shriram Finance as well. Considering that both of these are focused on vehicle finance, I think that's one segment which has done very well in the entire bank and BFC space.
Yeah, I mean, and some of the managements, Chola, for instance, and even Shriram was talking to both the managements, and they're very sanguine about minor hiccups here and there in asset quality, saying it's seasonal. Both of them saying the second half of the year is going to be very, very strong. And the market's like that. And these are managements that have always delivered very well on execution. So that explains it. But let's come to Bandhan now, actually, and try and understand what happened that sparked a 10% move on the stock today. You can cut it whichever way you want. I mean, yes, slippages have fallen. But at the same time, the gross NPA level is slightly higher. So let's get Sur to put it all together for us, the numbers, the word on the street, and the management commentary, because we did speak with them in the morning as well. So Darshan, what a move, 13%.
That's correct. So it has moved almost up to 16% and is set for the biggest single day gain in nearly 4 years, that is since April 2020. And after the strong earnings on management commentary is positive. In the interview to CNBCTV18, company says it sees advances picking up in the next 3 quarters, and it is largely out of pandemic issues, and loan growth it expects in the range of 16 to 18%. And on the NIM front, it says it will be in the range of 7 to 7.5%. But now the question, what will be the next triggers in the coming months? So I can find out 2 triggers. First is appointment of the new MD and CEO, and second, if company manages to get any credit guarantee fund. On the brokerage front, most of the brokerages remain bullish. CLSA has an outperform call with a target of rupees 240 per share. It says it went into results with muted expectations on asset quality, but it was positively surprised, and it sees loan growth largely coming in the second half and has raised profit estimates by 5 to 7%. JP Morgan too has an overweight call with a target of rupees 260 per share. It says asset quality performance was better than estimate in a seasonally weaker Q1, and overall gross slippages fell below 3% after 14 quarters. Kotak Institutional Equities has a buy call with a target of rupees 250 per share. It says healthy earnings growth led by operating profit growth and decline in provisions, and it finds risk reward favorable at the current valuations.
I think that last line, Sudarshan, that you mentioned, I think that really sums it up, right? Look at the stock in a market which has seen stocks go up 500, 600, 7%. You get one mover, which is absolutely flat. and maybe the market wants to latch on to it. Thanks so much. That's today. Let's look at a one-year chart on Bandhan, and then come all these statements with the promise of better asset quality, good growth, and therefore the stock price targets, a lot of them around 240, 250, 260. That I think could explain a lot. Very quickly, Deepan, are you convinced on Bandhan?
I think there's a good trading rally in Bandhan. It may continue for a few more months, but just want to add one line here that Bandhan's numbers should be seen in the context that other microfinance companies like, the other microfinance companies by and large haven't really delivered, like Credit Access and Spandana and Bandhan Bank, which has a large exposure to microfinance. They have come out with good set of numbers. From that point of view, it is quite impressive. And look, the stock is trading extremely cheap. You can always justify a higher PE multiple.
The stock is trading at 1.5 times price to book, so relatively very inexpensive compared to the rest of the pack. So that's Kotak Institutional Equities valuation, 1.5 times price to book. But Sudarshan is still with us. PSU banks are also big gainers today on the back of PNB numbers. Take us through that.
That's correct. So amongst all the PSU banks that have reported earnings so far, PNB has reported the strongest set of earnings. NI and operating profit were up 10% each year-on-year, and profit was up 160% year-on-year and 6% sequentially. On the asset quality front, slippages have fallen 20% sequentially to rupees 1,755 crore, and gross NPA was down 9%, and net NPA has fallen 13% sequentially. In the ratio, gross NPA is coming at 4.98%. versus 5.73% in the last quarter. In the interview to CNBC TV18, PNB says ROA of 1% can be achieved before exit of fiscal FY25, and NPAs and credit cost company expects to reduce further from the current levels, and NIM guidance company says it will be in the range of 2.93%, and it maintains the same for the financial year 2025. But brokerages remain cautious on the stock. Morgan Stanley has an underweight call with a target of ₹80 per share. It says SMA 1 and 2 appears elevated at 2.5%, and it will be key to watch going forward. Citi has a sell call with a target of ₹105 per share. But after PNB earnings, next we'll focus on SBI and BOB. BOB is reporting earnings on July 31st, and SBI coming Saturday, that is August 3.
Wonder why all the... Thanks so much for that. Guys, I wonder why all the big banks have chosen to report numbers on a Saturday, right? I think it was HDFC Bank, ICICI Bank, now even State Bank of India. So it's busy Saturdays ahead.
Absolutely. Busy Saturdays. Deepan is still with us. Deepan, any thoughts on, if you want to comment on, add to anything what Sud said, please feel free. But REC also reported numbers. That a non-stop rally in REC, PFC is kind of ended. It does rally once in a while, but generally has been strong. Even today, it's up about 2.5–3% or so. Numbers were pretty good. No NPL, so to speak, really over the last many quarters actually now. Any thoughts here?
Oh, I think it's the same thing, that valuations are attractive and growth rates may pick up for both PFC and REC. There's a lot of investment taking place in the power industry, and therefore the demand for loans certainly do look up for these two companies. And in a way, I think they don't have an NPA problem because a lot of them are backed by, or the loans have kind of a sovereign guarantee. They lend mainly to the public sector or to the government departments. So from that point of view, it's pretty safe. It's just that in the past, the growth rates were very, very feeble, and volume and performance was very volatile. But now I think going forward, you could have secular growth in both these companies, which is why I think Street has bid up the prices over there, and valuation multiples also have expanded. But if you look at the entire bank NBFC space, I think this quarter has been the quarter of the laggards. Like say, Bandhan Bank has done extremely well, J&K Bank, maybe Bank of Maharashtra, PNB. So the companies which have not, the banks and NBFCs which have not done well over the past several years, now they are coming back with, I would say, a great deal of force, and good trading rallies taking place over there. But end of the day, the entire bank NBFC's overowned sector, it has a very large weightage in most portfolios. So from that point of view, one needs to be a bit careful.
Deepan, what about Mankind Pharma and its acquisition of Bharat Serum vaccines? It's been about 2 days, enough for digestion of the news. it's a good asset they've acquired, very strong, very synergistic. It makes sense over the long term. But the argument is that Mankind is overpaying for it because they are paying 7 to 8 times on its revenue, which is much higher than the other pharmaceutical deals, which happen at 4 or 5 times revenues. Weigh in on Mankind Pharma, because on Friday, the stock opened higher, Mankind, and then ended in the red, and today it's absolutely flat.
Yeah, Rima, I'm very positive on this particular transaction. The reason is that we have a longer term view. Maybe next couple of years, maybe a bit of a stress on Mankind Pharma's balance sheet. But going ahead, I think it's a great acquisition. It's a profitable company. It fills in a lot of niches which were missing in Mankind Pharma. And if you go back into the history of all the acquisitions which have taken place in the domestic pharma industry, by and large, I think they've been very successful, although they may have overpaid for it. And one bad example, of course, is Ranbaxy acquisition by Sun Pharma. But by and large, I think domestic acquisitions have worked out very well for pharma companies. And I think this one will work out very well for Mankind Pharma as well. There's concern around higher debt. But look, the balance sheet can certainly take that much debt and the profits can easily service the interest. So very positive on Mankind Pharma. It's a company in which we and our clients are invested. So to that extent, our views could be biased.
Okay, so positive on Mankind. Deepan, before we let you go, I just have one last stock to discuss, and that is BEL. Let's get the stock up. It's around 3.5%, I think, higher. And the numbers have come in. Numbers look good. The revenue is up 20%. The EBITDA has jumped 41%. The margin has also improved. The margin has moved up from about 19% to over 22%. So it's been a really good quarter for BEL. Now consider the stock price. 2 years ago, same time, July of 2022, this was a 100 rupee stock. Now it's a 300 rupee stock. So Deepan, my question is that the kind of performance you're seeing, let's say what they've done this quarter, is it enough to keep fueling a further up move? Should you be still buying? I mean, it's good. Execution seems to be happening. But the question is, you need to map that with the kind of rise in stock prices, 100 to 300 already. How do you approach a stock like BEL?
Yeah, so we again a stock in which we and our clients are invested. And we are just remaining invested because at these elevated levels to buy, you are paying just too much for a business. Price to earnings multiple is at all-time high. But thankfully, the numbers also have come through. So wait for a correction if you want to buy into the stock, 15-20% correction whenever it is there. And that would provide a risk return in your favor and some amount of margin of safety. So existing investors remain invested. For a fresh investment, I think buyer declines. But the key figure here is the order book position. I have not seen that. And if order book position also has improved, which means that the earning visibility remains pretty much stable.
Okay, all right. Deepan, thank you very much. Good chatting with you as always. Thanks for taking out the time and being with us today. We do have to take a very quick break on that note. Come back on the other side and we'll also have with us Rupen Rajguru of Julius Baer to talk about the market and the way ahead.
Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners.
Okay, welcome back. Basically you've got the market which is up, 15 points. It's flat on the Nifty. And I think you've got the Sensex, which is not doing very much. Large caps, by the way, quieter, but broader markets are doing just fine. Rupen Rajguru is with us, Head of Equity Investment and Strategy at Julius Baer. Rupen, good to have you with us here. Thanks for your time. We had a slew of numbers over the last 3 days, post-Friday till now. What has caught your eye, and what, to your mind, deserves a bit of a re-rating, deserves a bit of a move, trading-wise or otherwise? Bandhan, for example, is seeing a big move. You got a few others like PNB, which are seeing large rallies. What caught your eye?
Yeah, hi. Afternoon, Prashant. Before I get into that, we have to acknowledge the fact that we are in a bull market. So any small catalyst can lead to a very high or disproportionate movement in the stock price. Having said that, in fact, this entire quarterly numbers, if you look through, what we believe that the pace of earnings growth, which has been phenomenal for last 4 years, which was upwards of 20% compounding for Nifty, is definitely slowing down. And we have to be cognizant of that fact. Having said that, what we are seeing is, while it's very difficult to pinpoint a unique theme which has emerged, because I think a lot of corporates are yet to announce their numbers. But some of the companies, especially say companies in the insurance side or in the IT side, what is happening is that there are incremental, some positive catalysts which we are witnessing in the on the results, as well as also in the management commentary, and hence we are seeing some bit of re-rating, or I would say some bit of mean reversion happening into those sectors. I think still early days. I think banking and financial as a whole, the commentary is okay. NIM compression is manageable, and so far no complaints as such.
Earnings from the banks have been mixed, right? Rupen, afternoon. You've had misses from Kotak, you've had a miss from HDFC. I mean, average performance from HDFC Bank. But on the other hand, ICICI Bank has been a solid set of numbers. And then some of the PSUs like PNB have backed it up. And now there is increasingly conversation on even the asset quality on the unsecured loans. Credit costs for some banks has gone up. So the picture is a bit mixed. What is the earnings visibility on banks going forward?
Yeah, afternoon, Rima. From a banking and financials perspective, and specifically in bank, and I would break it up into public sector as well as private sector banks. So you are right. Some of the private sector banks have probably, on the slippages count, they have been a slight disappointment. But at an aggregate level, as we speak, the entire private sector, and even if I were to include public sector bank, the credit costs are at its lowest. So here, I would say the RBI also, time and again, they have come out with various regulations which are kind of sounding off that they are not very happy with the kind of credit growth which we are witnessing, especially in the unsecured side. So net, I would say from a banking perspective, and I think that is also reflecting in the banking stock prices, as a whole, we believe that still private sector banks, the large private sector banks are better placed, while public sector banks numbers might be good, but we believe the best of credit cost is now behind us. Incrementally going ahead, not necessarily in this quarter, but the credit cost will, which has been unusually lower for them as compared to their historical average, will kind of inch up. And plus, more and more regulatory requirement will be there, moving towards ECL. Also, some higher provisioning on standard assets on project financing and all will impact public sector more than private sector banks. So net, we believe from here on, between the two, private sector banks are better off vis-a-vis public sector banks.
Okay, all right. Hi, Rupen. Good afternoon. It's a while, I think, since we chatted, but good to see you in. Well, there are two sectors that I'm looking at. One is cement, because that's my core beat, and there's a lot of consolidation going on there. But it appears you're on the side that believes in the near term that could be pain. Longer term, all this consolidation talk will help. And the other one I'm looking at is autos. You have Ola Electric that's coming out with the IPO. But you're cautious on both these two sectors. Give us a few points on why.
Sure. Yeah. Hi, afternoon, Nigel. So cement is a very interesting play. In fact, the largest cement player is operating at 90% plus capacity. And on an average, the cement sector is operating at 85-90% capacity utilization. Despite that, we have seen the prices being soft. For last 2 quarters, if I were to sum up, the prices are down around 5 to 6%. So what does that indicate? The heightened competitive intensity. And that is here to stay. And in fact, the erstwhile or the so-called disruptor hasn't even increased their capacity utilization. So the largest incumbent is clearly doing a lot of M&A, and also the second largest player. So net, to answer your question, because of the lower realization, in fact, earlier a quarter back, we were penciling that the margin trajectory of cement companies would be higher this quarter. But because of quarter one also prices have been soft, so the overall EBITDA per ton for cement companies will go down. In fact, this quarter, will be below 1,950 at an industry level. So quarter one and quarter two, the EBITDA per ton still will be lowered, and in second half onwards, we might again see it inching up higher. So to answer your question, tactically, for next 1-2 quarters, we are cautious on cement, but the M&A play would be there. So any companies which are less than $100 per ton, if they are a takeover target, you might see an action out there. So it's very difficult to pinpoint which would be there. But those companies will be in foray, and those companies will see some stock price momentum. But over next 2-3 years perspective, we are constructive on that sector. But in the near term, as I said, the earnings will be disappointing for quarter one and probably in quarter two as well. Moving to auto, for last 6 quarters in a row have seen, phenomenal results. And overall, they are, we have also seen a margin expansion story also happening through, volume growth also coming through. In fact, this quarter also, the earnings growth for an auto sector per se will be upwards of 15%. But the rate of growth will be the lowest which we have seen in last 4-5 quarters. And I think the only reason why we are cautious or on that sector is because there is hardly any scope of re-rating. All the sectors, all the stocks are valued to perfection. While the IPO, as you rightly said, one of the electric two-wheeler, largest electric two-wheeler IPO is there probably next week, and in few months we will see also one of the largest IPO Hyundai hitting the street, so which will keep some excitement. But I think on valuation from here on, we don't see a big upside. So probably in the near term, we would want the stock prices to see some kind of, if not price correction, at least time correction for 1 or 2 quarters before we get constructive with that.
Right. Rupen, just stay on with us. I know that power is a sector that you like, and we want to know more about that. So let's actually look at one of the companies that has reported numbers today, IEX, and the stock has been doing really well after those numbers came out. So let's get in the fine print with Vivek. Vivek, tell us more.
Well, that's right. So IEX came out with its results, last week, and the company over the weekend actually held the analyst call. And in the analyst call, there are some key takeaways that have made most of the analysts in the street increasingly positive as far as the prospects of IEX are concerned. First up, what the company said is that number one, they are confident of retaining and maintaining close to 17 to 18% year-on-year growth. They say that the volume growth is being seen from increasing supply availability, favorable regulations, and also a new product pipeline. Now, the most important part as far as IEX is concerned, something that we've been talking about quite a while, is the fact that, the imminent coming up of market coupling. However, in the analyst meet, what IEX has said, and remember, the final decision is with the regulator, not with IEX. The company has said that Grid India, that is NLDC, is yet to go ahead and complete the development of the software to run the testing pilot as yet. So, there appears to be a significant delay even in the testing process before there could be going ahead and implementation of market coupling. Now, along with that, the company says the risk of, the company reiterated that it does not see any merit in market coupling. And IIFL today has gone ahead and upgraded the stock to a buy rating from the earlier ad that they have. They have a target price of 205 rupees a share. They're saying that number one, the initiatives to start other exchanges like the gas exchange, the coal exchange, and carbon exchange will drive further volume. And they believe that the delay of all of the initiatives to go ahead and implement market coupling is something that bodes quite favorably as far as IEX is concerned.
Okay, got it. Thanks, Vivek, so much for that. Explains some of the excitement around the stock. That is IEX. IEX is up about 52% in the last 1 year. If you look at the power universe, some of the generators have actually done better. Tata Power, NTPC, these stocks are up about 70 to 80%. CESC has done even better, 120% thereabouts. So now, Rupen, let's come to your rationale behind why you still like power. What segment of it are you looking to play? And how do you find valuations now?
Yeah, hi, afternoon, Survi. Power as a sector, again, it's a long cyclical sector, and what we witnessed between, say, 2008 and 2015, in which a lot of new capacity got added, but the demand was not higher, so supply was much higher than the demand, which led to probably into 16, 17, the utilization of a lot of the thermal powers went down to as low as 50-55% on the PLF side. And majority of the capacity addition happened in the renewables post that. So what happened in last 2 years, we have seen that entire trend reversing, wherein the demand has gone up and the supply, especially on the thermal side, was hardly 3-4%, and demand growth was 6 to 7%. So there was a clear dearth of the power which we are witnessing in India, and hence we are again seeing a gush of new investments also in the thermal side along with the renewable side. So the entire value chain, if you recollect in the previous cycle, the entire value chain got benefited, and that is exactly what we are seeing right now. So starting with the utilities to also the companies which are into the T&D side, players who do BTG, EPC, or some of the companies which are into transformers, all are seeing order book being kind of full. So the entire value chain is and that's reflected in numbers as well. They all are declaring very strong numbers. Plus the financiers also are doing well. So net, yes, the big question now is valuation, because everything is getting reflected. But still, I would say on the utility side, companies have gone up. Their valuation now are at 15 to 18 times multiple on the price to earnings, and say around 2 times price to book. But we'll have around 12-13% easily growth visibility for next 4 to 5 years. So they are kind of valued fully, but still, I would say in a market where growth is not necessarily happening across the board, these kind of themes where the growth is still strong and visible with the regulated equity, especially on the utility side, they look pretty interesting. Yes, we have to be mindful that the return expectation has to be much lower than what we have witnessed in last 2 years.
Rupen, can you tell us what have you what have you guys bought into last? Incrementally, what have you added in?
So, hi Prashant, I'll refrain from getting into individual stocks. But as I had mentioned last time around, as a segment which we like, is the general insurance segment, where we have added exposure, as well as some of the capital market intermediaries is something which we have been liking. And which we have been adding for last few quarters or so. So these are some of the themes in which we have increased our exposure.
All right. Actually, ICICI Lombard, apart from the life insurers, is actually out of insurers, life and general, Lombard has seen the highest amount of earnings upgrades in this quarter across the board. So that stands out purely from an earnings standpoint. Stocks also, I think, done well from the time the earnings season started. So 1970 on ICICI Lombard. Okay, the market's down about, 32 odd points or so. Rupen, great to have you with us here. Thank you very much for your time. Appreciate it. We'll take a quick commercial break here. We come back with what's happening in dealing rooms on D Street Chatter with Nimesh. We'll get you some technical trading ideas as well. That's coming up.
In the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken.
Welcome back. Well, we thought we would be celebrating 25,000 odd, but that's not to be. The good news is still the breadth of the market is in favor of the bulls. Well, good time to get in Nimesh, who's going to give us an insight into what's going on in D Street Chatter. Well, Nimesh, it appears a bit of a breather. We almost got, effectively, we got to 25,000 odd, but we've pulled back a little bit. What's the flow picture looking like?
Well, it's a bit of a choppy day of trade. Of course, we've corrected from the day's high. I guess there is a bit of algo-based selling which has emerged at high level. So there are some technical factors because of which we've seen some bit of profit booking at that 25,000 level mark on the Nifty. But broadly the sense is don't lose the sight on the geopolitical risk as well. That has now been a big talking point in dealing rooms as well. Look at what's going to happen with Israel, and maybe that could have a bit of an impact in terms of adding volatility to the Indian market. So that's something to track as far as geopolitical risk is concerned. From a flow perspective, again, it's a mixed day of trade. We've been seeing a bit of buying emerging from both domestic and FIs of late. Again, in today's trade, the sense I'm getting is that there is a bit of buying in the PSU bank stock. So there's one space which is well bid, and rightly so because they've relatively outperformed in terms of earnings this quarter compared to the private bank names. For the August series, of course, earnings is going to be a big trigger to watch out for. But also mid of August, you're going to see the big MSCI rebalancing, which will have a big impact in terms of HDFC Bank
and overall on the India as well. So that's going to add to a bit of buying interest from larger FIs. But the other big trend which is going to emerge, we've already started seeing some signs of it, is the promoter P stake sell as and when the earnings get over. We've already seen few deals got done, and the feedback is there is a very strong pipeline which is going to come as and when we see the earnings getting over. So some big companies are going to see large block deals very soon.
Okay, all right. So you've teased us a little bit. Let's get to some of those stocks that you're tracking. Let's get stock specific.
Well, so in terms of individual names, the first stock is Adani Energy. It's again back into my chatter list. I spoke about the possibility of the fundraising few days back. Now it looks like it's round the corner. So a large QIP is in the offering. Company is likely to raise between 6,000 to 7,000 crores by QIP very soon. That is Adani Energy Solutions. That's the first name. The second stock is IRB Infra. Well, the stock has been consolidating ever since some of the promoter entities sold stake in the last few weeks. But now I understand that the street is anticipating a large order win as well for the company very soon. Also, there is a buzz that there could be another large block in IRB Infra very soon. The third name is a couple of cash stocks where there is a bit of buying interest from larger FIs. So Dodla Dairy and Jindal Saw both stand out largely on the back of buy flows at FIs. So expect high delivery volumes in both these names today. And the last is Kotak Mahindra Bank. Well, the street has been a bit positive about Kotak Mahindra Bank, and there's a bit of chatter with regards to the RBI approval as well. But again, from a flow perspective, there is selling pressure. And again, in today's market, there are sell flows at a leading FI desk in Kotak Mahindra Bank.
Okay, got it. Thanks very much, Nimesh, for that. So that's the chatter. Market's very quiet, very flat. Nifty, Bank Nifty, not moving at all. Let's figure out what the final trades could be like for today. We have Mitesh back with us. Mitesh, so what do you make of all of the volatility and the choppiness? Final calls now?
Yeah. I think, one doesn't look good in the short term in the sense that, failing around this major level where we also have call open interest means that there could be 2-3 days of consolidation. So maybe the upside momentum will see a halt with today's this thing. But I'm not very negative, so I still like the refinery sector per se. So BPCL is a BTST with a stop at 334 and a target of 343, and IOC is the other one. That's a BTST with a stop at 178.5 and a target of 184.
Okay, let's get to the big earnings that we're anticipating later in the evening. One of them is Colgate. Mangalam joins in with the expectations. Mangalam.
Well, there's been good momentum behind the Colgate stock, and that's largely ever since, the leadership of the company has changed. So the stock is up nearly 70% in the last 1 year, trading at around 58 times, and the street expects continued results momentum for the company as well. This time around, we're looking at high single-digit revenue growth, close to around 8%. The number you're expecting on the top line is close to around 1,430 crores, and the EBITDA grows by about 12.5%, implying a margin improvement of nearly 150 basis points. 31.6% turns into 33%, and as a result of which the net profit too grows at around 21%. So three numbers to watch: 8% on the top line, 12.5% on the EBITDA, and net profit growth of 21% is what the street is anticipating. 2 to 3% volume growth led by 6% price and premiumization growth as well. Rural contributes about 40% to Colgate's overall revenue. So recovery in rural is extremely crucial to track and will be one of the bigger beneficiaries once rural demand comes back. Ad spends are between 13.5 to 14% of the sales, and the company has been leveraging some of those ad spends for their new product launches as well. Most important this time around will not be the toothpaste business, but a small part, which is Palmolive. They've had a full range launch, so performance of that will be extremely crucial as well, because the managements are guided for Palmolive to grow at twice the pace of Colgate itself.
Okay, thank you very much for that. Now let's get you a big corporate, exclusive conversation. We're talking about Sanjeev Goenka, chairman of RP Sanjeev Goenka Group. He chatted with Shireen Pan earlier, and he said that they are going to set up 3 gigawatts of renewables in the next 2 years. He also went on to say in his conversation that he anticipates a break-even in the FMCG business in the next 2 years.
But let's now talk about CESC, both in terms of demand at this point in time. What's the outlook? And if we can get an update from you on what's happening as far as Noida is concerned, what's happening with the Dhariwal and the Haldia IPP as well.
So that's again another space that's going well. So we are investing not only in distribution, but we are investing in generation as well. So right now, over the next 2 years, we are going to set up 3 gigawatts of renewables, which is hybrid between solar and wind. The projects are under execution right now. And this will go into our distribution networks in Calcutta, in Noida, in Rajasthan, in Maharashtra. So we will take them across our distribution networks. And so you they're profitable, they're green, they're forward-looking, and they're margin enhancing. So it really works across all parameters. And it's something that we are very excited about. So this is the beginning in the green energy sector. 3 gigawatts to begin with, ultimately going up to 10.
Okay.
And we are looking actively at hydrogen electrolyzers.
In terms of capacity addition, as far as CESC is concerned, what should we expect between now and the 5-year target?
So 3 gigawatts over the next 2 years. I think another 2 in 2 years thereafter. And another 5 in 2 years thereafter. So in 6 years, about 10 gigawatts.
And the kind of investments that it would entail?
So it would be about 70,000 crores.
Let's talk about FMCG and the plan as far as FMCG is concerned. Where do you get confidence from on what is working for you on the FMCG side? And again, both in terms of investments, in terms of new forays, what is the plan at this point?
So the snacking part, the better for you snacking is actually beginning to work. And we are now at about a 600 crore beat rate annually, which is going up every month. And at this level, we are beginning to see the losses coming down sharply.
Okay.
We don't yet make profits. We're not expected to make profits at this level. But we can see now the path to 1,000 crores, which is where we start to break even. So that foray is actually working well.
By when do you anticipate a break even for the FMCG business?
I think another 2 years.
And what kind of investments are we still talking about? Are you continuing to make investments?
You will look, yeah, we will continue to make investments. The losses now would be about 200 crores a year as opposed to 350. So that's a significant reduction. And there will be investments in capacity and products. But overall, I think it's something that's trending very well.
Finally, let me ask you about the ambition on the sports side. And we've, of course, been seeing you on television in the dugout as well, Mr. Goenka. But, how has that bet panned out for you? And more importantly, are you willing to take bigger bets from here on?
Well, it's something that's been very successful. We got the franchise for 7,000 crores. We are reading that Gujarat Titans is getting sold for 12,500 crores. I don't know whether it's true or not, but that's what we read. And if that is indeed the case, then in 2.5 years, 7,000 becoming 12,500 is not bad at all.
So would you look at monetizing this in your franchise in any way?
No.
No plans at this point in time.
All right, the IPL team is excluded from that. By the way, the Nifty Bank is completely flattened out. Remember when we started the show at 2:30, the Nifty Bank was up 200 points, and now it's just up close to about 30 odd points. So from the day's high, the Nifty Bank has given up more than about 1,000 points. Get into a break. We'll come back and chat more about the markets.
Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well.
Welcome back. Well, the markets are as flat as can be, but plenty of action in the broader market. It's a good time to get in Sudeep Bandyopadhyay. Hi, Sudeep. Good afternoon and good to see you again. I wanted to ask you about one of these FMCG names. In the last 10 minutes or so, Godrej Consumer that was trading actually in the red, it's now up close to 2%. So the intraday chart will tell you the picture. But what's the longer-term view on this stock?
Well, Nigel, I've been positive on this stock for quite some time. I think, the change of management, bringing in the new CEO, should have worked as a catalyst. It has taken a bit of time, but I think it's high time it starts performing well. As we know, they have a lot of international businesses. So, the impact of headwinds from international markets sometimes does affect their overall consolidated earnings. But as things are now, I think with good monsoon and rural recovery, we are positive on Godrej Consumers. And I think if somebody is looking at a 1 year kind of time horizon, they can definitely look at buying into Godrej Consumer. It hasn't kind of moved up the way some other FMCG companies have moved up. So for a long-term investor, it's a good buy, but one has to remember that it has got a lot many legs other than only India also.
Okay, got that. That's Godrej Consumers. By the way, as we're getting into the final leg of trade, should just look at PSU stocks once again. And all of them are doing the usual jig. IRFC 7%, RVNL up 10%, Ircon 9.5%, Nerites is up 14%. So Railways has really come back with a bang in terms of just the trading action today. Even beyond Railways, look at something like NBCC 7.5%, Mazgaon Dock up 10%. Once again, a breathless kind of a move on most of these stocks on a day when the market's been a little volatile. Sudeep is with us. Sudeep, hi, you know the question. We've been asking you this question for many months now. What do you say when you just give these stocks a bit of a breather, a couple of days, they sit out, and then, daily moves can be so gravity defying. What's your advice, even from a trading point of view? Would you buy anything now?
Well, Survi, I've been looking like a fool on national television again and again. I've been saying that don't get into the defense stocks and the railway stocks. The valuation is too high, and they have been rising continuously. So I think people who didn't hear our advice did well. But having said that, I think I continue to maintain my view that valuation-wise, they are good companies. They are getting a lot of orders. The government has significant focus on defense make in India, as well as the railway. I think the amount of work happening in multiple areas of railways have never ever happened in India. So this is all good. And the order book is really, really full and bursting. But the problem is some of these orders, most of these orders take a lot of time in getting executed. There are challenges in execution also, and we have seen it time and again. So under the circumstances, the valuation definitely looks very rich. Unless you are in for very long, I think it's better to not buy at these levels. And now, if somebody is already an investor, is holding on to these shares, I think by all means continue to enjoy and continue to keep watching the counter. because there maybe, because margin of error is very, very limited here. So be very careful if you're holding on to these shares, but keep enjoying. One stock I will mention, which came out with results also, BEL. I think that is one stock where, in spite of the valuation, in spite of the stock moving up, from 100 to 300 over the last 2 years, I think I'm still bullish, and I would recommend buy for a long-term investor there even now, because of the fact that it has been fantastic execution from the company always, and even this quarter, the execution track record is fabulous. It's a defense electronics company, and the products of this company are used by Air, Army, Navy, all the three branches of defense. They are also getting into exports. So I think this is a company which has got many, many legs. And if somebody has to really take a bet on defense, I think defense electronics is the space to be in, and BEL is the space to be in.
Any other manufacturing related stock you would recommend buying at current levels if someone has a 2 or 3 year time horizon?
Well, I don't know whether you want to call it manufacturing, but in the power segment, NTPC has been my favorite, and it continues to remain my favorite. The traction and the dynamics in power industry has changed in a big way, and the demand is strong. The performance has been very good. Even the results announced, I think the PLF has moved up better than expected. The overall business momentum has been significant, and it has already a green energy company sitting inside the traditional NTPC. So while thermal is doing great business, the green energy is coming up very well, and at some point in time, value unlocking will definitely reward the shareholders handsomely.
We're talking about power, guys. Look at Voltamp. Voltamp is up 18%. That's a surge. Numbers came out, I think, in the middle of I think about an hour ago or so. And look at the reaction on that one. Top line, I think, is up some 30%. Profits are up 56%. Margins have gone up almost 300 basis points. And that is that's incredible. Stock's up 120% this year so far. And I think in the last 2.5 years, stock is up 10x. So from 1,400, stock's gone to 14,480. So that is the sort of compounding here, not compounding. Compounding kind of brings in usually you sort of imagine a slow, steady kind of a move every year. Not slow, steady, could be fast as well, but this is 10x in 2.5 years flat. So just something which you don't see very often, even in a market like this. So that's Voltamp for you. Do you track this one, Sudeep? Any thoughts?
Well, I think, Prashant, the entire power segment, you look at most of these companies, there has been amazing transformation. While moving up 10x in 2.5 years is really something which one has to take with a pinch of salt. But the reality is their order book is full. They are now in a situation where they are not able to supply and meet the demand. So that's the situation where they are in. And it's a fantastic position to be in for some of these companies who had suffered for a very, very long time. So yes, I do track, and I think it's a fantastic space to be in. I talked about NTPC. The entire power ecosystem is going through a major positive move, and I believe strongly that this is going to continue for the next 5-10 years. I think power has reached every nook and corner of the country. The use of power has increased. The demand of power is soaring, and the transition of green energy is giving an incremental opportunity for some of these component suppliers.
Okay, all right, Sudeep, indeed. Quite a bit of a move in some of these names, and Voltamp is taking the cake today with that move. Just stay on. We'll do the market trap and come back to you for a longer conversation on markets forward. But for the time being, we're looking at a green screen where the headline is that we couldn't do 25,000 today on the Nifty, but the mid-cap market is alive and kicking and actually completely thriving. To start off with the Nifty, the reason things flattened out is because the banking surge didn't last. The bank Nifty is also quite flat. Having said that, gainers of the day include Divi's Laboratories, about 3% higher, BPCL 3%, L&T had a good session. SBI managed to buck that trend. Most of the other banks flattened out, but IndusInd Bank and SBI, they're still closing out in positive. The others, HDFC Bank, for instance, down about 1%. ICICI Bank lost a lot of the momentum. It was up 3% in the morning, but the closing rates are close to just about 0.3% on the higher side. Reliance managed to close out in positive, about 0.6% up. You have stocks like Shriram Finance holding out with some gains. The profit booking side was basically IT and select consumer stocks. So Titan down 2%, ITC down 1.5%. And then beyond banks, of course, some of the IT names that didn't do quite well. Bell's gone, but Prashant, more about the, I guess, the mid-cap market once again today.
Oh, yeah, absolutely. And, you know, very, very strong moves across many of these names. So you mentioned the railway names, RVNL, IRFC, RITES, the banking ones, Bandhan, PNB, but there were also City Union Bank, Karnataka Bank, which did very well. You know, I mentioned Voltamp, but you know, you had Mazgaon Dock, which was a sharp mover, higher 10%. There was KNR Construction, which was a very big mover. Keynes, which reported numbers with the management with us. NBCC did very well today. You had some of these consumer names, Rupa, Liberty Shoes saw very big moves. You know, some of these wealth management companies coming through. So Novama, which reported numbers, Super Performance, 361 did very well. And then you had names like EID, Parry, CAMS. I could go on, but you get an idea about the broader market strength that we had today. Market breadth really strong once again, with about 1,600 stocks higher and about 1,100 stocks which were lower. So not completely one way, not very, very one-sided, but comfortably in the green as far as market breadth is concerned. We'll take your leave. It's a wrap of this edition of Closing Bell. Markets Forward comes up next in just a bit. Stay with us.
Kamala.
Hello. Hi.
Hey there.
Oh, hi. You're both together. Oh, it's good to hear you both.
I can't have this phone call without saying to my girl Kamala, I am proud of you. This is going to be historic.
We called to say Michelle and I couldn't be prouder to endorse you and to do everything we can to get you through this election and into the Oval Office.
Oh, my goodness. Michelle, Brock, this means so much to me. I am looking forward to doing this with the two of you, Doug and I both, and getting out there, being on the road. But most of all, I just want to tell you the words you have spoken and the friendship that you have given over all these years mean more than I can express. So thank you both. It means so much. And we're going to have some fun with this too, aren't we?
Hours following Biden's exit, the most for a single day in the 2024 campaign trail. Vice President Kamala Harris hit the ground running with the launch of her 2024 presidential campaign on Sunday.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening is our both expectation and policy.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that's significant support.
The market ends off days high, even as 25,000 milestone remains elusive for the Nifty. Banks see volatility while the mid and the small caps outperform in trade.
A big day of bank earnings. ICICI Bank manages to turn in a steady show despite the headwinds. Bandhan Bank climbs on a dip in slippages and a positive outlook, while PNB gains on maintaining its trend of improving credit quality. City Union and Jammu and Kashmir banks also react positively to earnings.
After buying 23% stake in India Cements, Ultratech now snaps up the shares of promoters and associates in India Cements to take its stake up to 55% for 4,000 crore rupees. The move ups the ante in the cement sector.